actually became the only team to have then gotten incubated by them. And so that's really how my journey began. But it really started from a very silly problem that I wanted to solve, which was I hated paying overage fees to AT&T. And I was like, hey, why is there no way for me to just buy and sell data from each other? I'm happy to pay for incremental data, but I wasn't willing to pay for the overage fees that they kept charging every now and then. So couldn't find a solution, decided to pitch it at the hackathon, won the hackathon, and that's really how the journey actually began.
So as a venture capital person and as an investor in Suruchi, like my mindset is really looking for dissatisfaction, right? Which is, to me, like I want to find a dissatisfaction that affects a large number of people, and I want the dissatisfaction to be very, very high, right? So the thing that's amazing is if you think about the size of the internet, right? The size of the internet is now something like 5 billion humans, right? And actually the size of the mobile internet is actually most of the size of the internet, right? So mobile data and mobile internet is like gigantic, right? And the thing that's amazing is how dissatisfying our experience is, and I think that the dissatisfaction she's describing was definitely something I felt personally, and I think has been felt by billions of people, right? So in a sense, this idea of making bandwidth into a currency, right, and into a tradable currency, and in a blockchain cryptocurrency, right, I think really struck me. But the thing that's so important in my role is not the idea, because actually in my business, ideas, venture capital, ideas are really cheap, right? The thing that's really, really, really scarce and rare is talent, right? So the thing that was really amazing is I made my investment decision really at the first time I met Suruchi. We met in a Starbucks, and as soon as I heard her talk, I basically was like, okay, I need to support this entrepreneur. So I was very excited about that, and I think that while the idea she has is very large, I think it's a very interesting person here, and I think that part of it is that she has a lot of excitement for solving this problem. So Suruchi, maybe you can tell us about kind of how you experience this problem of, and how did you come up with this idea? What was the core?
Yeah, so it started from when I was a student and I had just moved to the US, and I hated paying overage fees to AT&T. And what I always kept doing was just kept my data completely turned off towards the end of the billing cycle renewal, so that I wouldn't be charged the overage fees. And then I kept on doing that multiple times, where I would just rely on Wi-Fi all the time. And then when I would go to see my friends, the first thing I would ask them is, hey, what's your Wi-Fi password? Without bothering to ask them how are they doing, or how is everything going on. So that just earned me a very silly nickname, which is called Chindi in Hindi, which means stingy. And that just frustrated the hell out of me. And I was like, gosh, there has to be a better way. Why can't we just buy and sell data? And then I saw this over provisioning of network. So the point was that when we are anywhere we go, we see these dozens of Wi-Fi hotspots that are everywhere. And then on the other hand, I had a bunch of friends that had unlimited data plans. So I was like, there's this massive underutilized capacity, but there's just no simple way for us to buy and sell and trade this capacity. So why is there no solution for that? So that was actually earning the silly nickname was quite frustrating and motivating to, in fact, go find a solution to this problem. And at the same time, I saw that there was this massive over-provisioning of networks and capacity. And so there was an opportunity where, we could create a more open, efficient network. And that was what we, decided to follow and pursue.
One of the greatest patterns in venture capital is this idea of feel the pain, cure the pain, right? So if you feel the pain in your heart, right? Like if your friends are calling you stingy, you really feel, and in a way, one of the deepest motivations for entrepreneurship is actually almost like revenge, right? And Mark Andreessen's Twitter feed, someone asked him, what motivates you, right, to build A16Z, this huge venture capital firm? And his one-word answer was revenge. Like, that's what drives him, right? And so in a sense, this feeling of the pain and having the pain, I think, is very deep. So I'm really curious, like, how is it going, right? Like, how is your project, you know, what's happening, and like, where are we in your entrepreneur journey?
Right. So it started from that silly problem, and then as we dug deep into it, we realized, well, it's a massive systemic problem. Because if we think about how internet actually works today, there are only 3 or 4 providers in every geography that have that quasi-monopoly, and us as consumers have no bargaining power. And I was like, why is it like that? How can we actually change that, where we are able to create a more open and inclusive internet that is owned and governed by all of us? So on one hand, it became this massive systemic problem, but then on the other hand, when you think about how do you actually solve it, because it's a massive coordination problem where you need to really bring all these large telecoms and large behemoths along with you. So we realized that it was actually an incentive problem. So we set out to create a new incentive layer such that we could actually bring these large providers along with us and build it in a more like positive sum manner and not really a zero-sum manner, where on one hand these providers come along and at the same time it is community owned and governed. So with that, that's basically what we are creating with Giant Protocol, where on one hand we are creating liquid markets for bandwidth so that all of us can now buy, sell, trade, connectivity or capacity contracts anywhere in the world. And on the other hand, we're also making it an investable asset. So the two together, and what we've managed to do so far is today if you're traveling internationally, you can actually buy, sell, trade tokenized eSIMs anywhere in the world in over 200 plus countries. The way we do that is in collaboration with some of the large telecom operators globally that have this excess capacity or underutilized capacity available. Like there is actually more than $500 billion worth of capacity that is underutilized on an annual basis. But there is no liquid market for it. So Giant is actually creating that liquid market which doesn't exist for this unused capacity. And so we partner up with these providers, help them turn their unused capacity or even future capacity into tokenized contracts so that they act like NFTs on chain. And these eSIM NFTs can then be traded by investors, institutions, enterprises, so that they can earn a low risk, stable yield, which is really coming from a percentage of the provider sales. And I'm giving a very, very high level overview of how these mechanisms actually work. But the idea is we get this excess capacity from the providers. Those are turned into tokenized contracts that are then represented as NFTs on chain, which anyone can now buy, sell, trade anywhere. And by virtue of them buying and selling and trading, they also now get to invest in a new asset class.
Yeah.
And then
so
ultimately these contracts are then made available to the consumers.
Yeah, so what I wanted to do here, though, is I wanted to ground the conversation a bit, because part of what entrepreneurship is and venture is really what I call heaven and earth, right? And heaven is the grand vision and the dream and the scope, right? But obviously earth has to do with execution, right? And I think to me, like my original question was really on the earth, right? Which is, I just wanted to make it 100% clear that this is a shipping product that consumers can and are buying, right? And I just want to get maybe some numbers that will help people understand like how real this is, and rather it's not just a dream. Because I think there's actually many kind of bandwidth dreams that people are selling, but I think bandwidth reality is more interesting. So I'd love to hear what the reality is and what the numbers are.
This is the QR code. Actually, everyone can scan this QR code and download our app right now and actually use it anywhere in over 200 plus countries to experience how real it is. And when you actually use it, you'll not even realize that you're using a tokenized eSIM or it's a blockchain protocol. It just works as a normal application that would allow you to get connected to internet anywhere in the world.
Yeah, so that to me is part of what I get excited about, obviously, is that, really the tactical execution and really shipping products, right? So that's the kind of dream. So I'm really excited about that. So I guess my question is in terms of roadmap, right? So now that you have like really big partnerships, you have a shipping product, you have like, where do we go from here?
Yeah, so that is what, so we would actually like to turn these tokenized eSIMs into cross-chain assets. Because the way we envision bandwidth becoming an asset is, imagine these tokenized eSIMs now acting like new financial primitives, so that you could then think about using bandwidth as a form of payment, bandwidth as a form of collateral, us being able to trade a US Verizon or AT&T contract with a Vodafone UK contract. So things of that nature can we can start building those applications on top of this new like digital assets in the form of tokenized eSIMs that we are bringing on chain, which until now was never possible before. So that's where we would love to, invite traders or traders that can actually provide liquidity for these contracts, as well as developers that would like to help us turn these tokenized eSIMs into cross-chain assets on multiple different chains.
I'm very interested in your ideal customer profile from an end user perspective, because one of the exciting things that I'm watching is the development of mobile payments in the African continent, right? Like M-Pesa, and the use of mobile minutes as a currency, right? So as mobile minutes become a cryptocurrency, like how do you see markets and how do you see users? Like what is the future?
Sure. So in our case, since we chose to specifically start with eSIMs, so we are certainly tagging along with where the eSIM compatible devices adoption is. So even though, of course, the goal is for this to be a massive, global play, but we are initially focusing on more of developed markets where eSIM adoption is already pretty significant, and users want, flexibility in terms of being able to being able to not be locked with any single provider, but being able to use internet on demand, on the fly. So our target audience is actually, crypto community, which is very big on the ethos of ownership and having, bargaining power and flexibility. So that is what Giant is all about. So our target audience is certainly crypto community, as well as travelers that are traveling internationally and want to stay connected on the fly.
Yes, and in terms of international travelers, do they need to know anything at all about crypto?
They don't.
Yeah, that's great. So, obviously it's open to the world. How do you see the future of this, though? Like, maybe we can go back to the big dream and the big picture. Like, how do you see this growing?
Yeah, so when you think about it, like, when I think about internet, to me, it's like, I fundamentally believe it should be a basic human right and owned and governed by all of us. Yet it's an extremely hard problem to solve when it comes to coordinating across all these different telcos. So in Giant's case, what we set out to do is, on one hand, not only make it, a liquid market, but at the same time also make it an open market such that it is owned and governed by all of us. So our vision is to really onboard, billions of internet users that are already using internet, and just by using internet become owners in this new connectivity economy, like we like to call it, through Giant. Where imagine, just by using internet, you get, so the way it already works today is that, let's say you buy a $10 contract. At the expiry of that $10 contract, you are rewarded in Giant tokens. So you get 40% of that back in Giant tokens, which gets auto-deposited or auto-staked into a provider pool, which is specific to the provider from whom you have bought it. So let's say there is a separate pool for AT&T, there is a separate pool for T-Mobile. So that gets auto-deposited into that pool. And from that pool, because now you as a consumer become automatically a staker, you're actually helping secure the ledger as well as at the same time you are guaranteeing the delivery of the contract. That is why you earn additional 13% APY plus 5% of sales. So just by using internet, you automatically become a part of this ecosystem and this economy. So our vision is to really actually make internet owned and governed by billions of internet users as it should be.
Yeah, so this to me is foundational, and it connects with the ethos of Ethereum and the ethos of decentralization, which is that the idea, what she's describing, is when you really look at bandwidth at its core, we're really talking about electromagnetic spectra. We're talking about light that's kind of in the air, right? So effectively, the idea that this is a public good that effectively can be owned by the people in a decentralized way, and that the benefits of ownership include the yield, right? Which is that they become owners of this open spectrum, and that the owners actually get the yield from the benefits of ownership, right? Which is really, truly, I think, participating in kind of the creation of this sort of much more democratized future. So I'm very excited about that. I guess, do you have any closing notes? I think we have about a minute left in this session.
Well, I would say check out Giant. Please share any feedback you all have. You know, feel free to connect with me on LinkedIn, on Telegram. I don't have that there, but my Telegram is Suruchi GP. Feel free to connect on Telegram. Would love to hear from everyone.
Yeah, fantastic. And, you know, it's a small crowd, so like if any of you kind of want to have a chat, I'm sure Suruchi can make herself available over here immediately after this session. So, you know, really great to see you all out here. We do have really nice sessions here on the Coral stage upcoming. So, you know, I think the next session, you know, will come to you soon. Actually, one of the great things is that we have a little bit of bonus time. So, you know, with our bonus time, I wouldn't mind actually throwing out to an audience question. So we don't have audience mics, but I'd love to just if you can shout out. Yes. So the question was, is Giant planning to be publicly traded on an exchange? So I'll leave that one to Suruchi.
Yeah. So the idea with Giant token is that we think of it as representing a unit of value for bandwidth globally. So certainly, once there is enough liquidity for the contracts on chain, that's when we plan to consider listing. Yeah.
Yes, and without letting too many cats out of too many bags, there are some fairly exciting, as yet unannounced partnerships that I think will be extremely exciting to hear about. So I'm definitely pumped up for this. I do think that realizing this vision is actually of huge scope, and one of the amazing things that excites me is that there are so many countries with so many carriers, and that the number of people affected can be literally billions of people can be affected. So, you know, the scope of this is very, very grand. So I guess, you know, I'd love to, do you have any further comment, or should I have another question?
I think we can just ask any other questions.
Yeah, let's take another question. Does anyone have another question? Yes, sir. I'm sorry?
Say that again.
Bigger current providers and partners? Bigger current providers and partners?
I see.
Globally?
Yeah. So I think he's asking for us to list the providers and partners. I do think this is that it may be okay, like we don't want to pre-announce any major partnerships, but I think you can talk about the networks that people can connect to in the app.
Sure. So in the app, if you go, you can already use that in over 200 plus countries. And when you actually look at every contract that is available, there is the network name already listed. So the underlying provider that you would be connecting to, whether it's T-Mobile or whether it's AT&T, is actually listed. So the way we managed to do that was through some large collaborations with key partners. And now we are gearing up to actually announce some very, very big partnerships, as Miko mentioned. Can't announce them just yet, So you all will have to stay tuned. But certainly massive partnerships, which aren't easy to pull off. So.
Yeah, it's definitely an exciting time. I think one of the things that's really amazing has to do with business timing. So I'd actually love, Suruchi, for you to comment a bit about the timing of this and kind of like, what is your view about the timing of the readiness of telco partners and kind of how is the industry receiving these ideas?
Right. So I think even 2 years back, when we would have talked about this idea of turning bandwidth into a new asset class, nobody was getting it. But now, thanks to, of course, the real world assets space picking up, tokenization of real world assets already happening when it comes to BCG putting out this report that $16 trillion worth of assets are going to be tokenized by 2030. And of that, about 40% are going to be previously illiquid markets. So there is obviously industry support that is now starting to become available. And then at the same time, particularly for bandwidth, why I think it is right now this unique moment in time and history for it to actually exist is because of several, 4 or 5 reasons. Like, number one is that, as we started, like, bandwidth already has massive demand. It's like trillions of dollars are already spent by more than 5 billion of us on an annual basis. That's number one. It already has a huge demand. Second is that it is durable. Unlike a lot of other assets, it's actually backed by physical infrastructure. Third is that it actually has limited supply. So in the short term, it is limited in supply, so it also has scarcity value. The fourth is that in the long term, though, it is elastic, which is also a good thing because it can be expandable and you can increase it from medium to long term. And then lastly, thanks to eSIM, it is for the first time now becoming digitally possible to transfer and track bandwidth contracts. So there are these key reasons, and of course, thanks to blockchain, tokenization, NFTs, DeFi, all of that. But it's certainly these key reasons that actually make turning bandwidth as a new asset class the right timing at the moment. And we see it as a massive real opportunity to go after at the moment.
So one of the really interesting implications of turning bandwidth into a on-chain real-world asset, a digital asset, is really the extent to which telecommunications companies that are the providers effectively become almost government level and almost bank level in the sense that they're the producers of the asset, right? So they effectively mint bandwidth, right? As well as the ability for them to monetize and supply monetary financial services to their own customers, right? So I'm really curious your perspective on how telcos can view themselves as banks and what's going to happen to effectively banking a class of individuals who may have a phone, but they may not even have a bank account.
Right, so I think that was one of the key things that we had to actually crack, which was, hey, when we are talking about creating this new incentive layer, how do we actually bring these large telecom operators along? And so that is where we saw this opportunity of there being massive underutilized capacity in the form of, about like more than 25% of capacity on an annual basis is underutilized, which is about $500 billion worth of capacity that is underutilized. And at the same time, they are constantly building that capacity, for which also capital is required. So that's why the model that we created was, hey, you already have this excess capacity, and then there is also the future capacity that is available. How about you made that available to us? We can, then tokenize that capacity in the form of digital assets and then make it liquid and tradable. So that was one key piece of this, where now this passive asset that was on their books actually becomes a tradable asset, which means they can actually get paid for that capacity a lot sooner than what they would otherwise make.
So one of the questions that I have is that you described bandwidth as a durable asset, right? And obviously, tokenized bandwidth has the quality of durability in the sense that you can transfer the tokens, right? And then you can effectively like redeem them, right? So the idea becomes if you're banking a token, let's say you're banking 10 giant tokens, right? So maybe when you travel, you can spend them, right? So you spend them elsewhere. So the creation of a digital asset for bandwidth makes it durable, but it's really durable in a virtual sense, right? Because when you think about the underlying asset is effectively perishable, right? Because if if someone has an undersea optical fiber cable, right, then they're either using the cable or they're not, and if they don't use the cable, they can't redeem the money and get the usage back in a time machine, right? Like it's gone, right? So
exactly.
It's similar to like a hotel room, right? Where the hotel room, if it's vacant, right, then the hotel doesn't make money, right? So in a sense, I guess I'm wondering how you look at this distinction of kind of durability and impermanence.
So I think the durability aspect of it is what makes it interesting when it is compared with other assets, where it's like we talk about a lot of assets where is there real value there. So in this case, because it is backed by physical infrastructure, it just makes it a lot more valuable from that standpoint because it is backed by physical infrastructure. Now, in case of the impermanency, you're right that yes, this capacity is available. If it is actually not utilized, then it is just lying in there, right? It is ideal. And the interesting thing from a telco's point of view is that the marginal cost for them to actually like distribute or make another gigabyte available is lot less. So in fact, they would rather be happy with being able to sell as little or as much as possible of this ideal capacity. And today it is just made available through bespoke contracts, and there is no open market that is available. So in essence, us making that open market for this ideal capacity is just accretive.
Yeah, that's exciting. I think it makes a lot of sense, right? Which is if you have, like, one of the foundational things that I've learned about things like Bitcoin tech is that basically energy of any kind, including financial energy, doesn't want to just sit there, right? So this idea of having a store of value, like storing it is fine, but as soon as you store something, it kind of gets itchy, like it wants to move around, right? So in a sense, the idea becomes that if you've banked mobile data, right, now that you're just sitting there, it's kind of burning a hole in your pocket, right? Like you kind of want to spend it, right? So if you're on an airplane and all of a sudden it says, oh, do you want to connect the airplane Wi-Fi? It's just going to cost you some points, right? You may just choose to do so. So I think that the idea that this asset is accretive and it's just additional and it's there to be used, right? So I think that's an exciting propensity. It may change the behavior of users.
Definitely. And in fact, today also, in our case, when we are making these contracts available, when anyone is buying that contract, they actually have 180 days to activate. So meaning at any point in time in the 180 days, you could trade it, you could transfer it, you could also use that as collateral. So there are all these additional, use cases that become possible. So you may now consider, buying this capacity lot sooner than what you would otherwise do if you were only buying it for consumption purposes. So that's where, of course, from a telco's point of view, they are then able to make more money by actually making it available on the platform.
Yeah, that's exciting. And I guess one of the things I'm wondering about the roadmap, at the risk of being a when token guy, is what is the time frame for sort of a publicly available token?
So I think, in our case, we've been very, very focused on actually making sure that we focus on the right things, which is bringing liquidity for the contracts first and foremost. Once we reach tens of millions in liquidity for the contract, after that is when, we would consider answering the question of VEN token.
I like that.
So right now we are focused on bringing liquidity for the contracts itself.
Yeah, but I do think that it's a very exciting mindset, right? Because ultimately, the thing that I love the most about entrepreneurs who kind of have felt the pain themselves is that they're really focused on building solutions. And I really feel like, you know, in a sense, that's one of the most important things for our space, which is that the more we go into the world and we solve real problems for real people, the better our industry becomes, right? So really, I think, you know, we really need builders like Suruchi who kind of are not necessarily thinking about this as kind of a, you know, a token money grab, but really thinking about this as like, how do we solve real problems for people, right? And how do we prevent people from being called stingy because they want to connect to the internet? Any closing thoughts?
Well, I think I had a lot of fun
Great.
having this conversation with you, Miko. Thank you to all of y'all for actually joining, coming like this early to actually attend the conversation. So thanks a lot for that. Looking forward to seeing all of y'all using Giant and actually sending feedback and, you know, critique as well. Please do. Just open to hearing everyone's thoughts. And hopefully, you know, some of y'all also help turn this into cross-chain assets across different chains. Thank you so much for the time.
Yeah, big hand with Suruchi, Giant Protocol. Thank you so much. You guys have been awesome.
Yep.
All right, so I think we're actually moving on to our next session. So we do have more exciting speakers here on the Coral stage. So I just want to help, you know, introduce the next panel. But, you know, I do want to encourage you all, you know, enjoy the show, enjoy the next panel here. Obviously, we do have some other stages as well. So feel free to consult the app and you can kind of check out which sessions you want to attend. But I think without further ado, I think we're ready to bring on the next speaker. So thank you all very much.
Hey everyone, my name is Melissa. I'll be emceeing today or for the next few minutes. Just to keep in mind, we have over 20,000 attendees and we are streaming live, so make sure you do not flip off the cameras. We have 6 stages and we have a lot of art galleries. So and make sure you visit the Shillage Village, because that's our sponsors, that's who pays the bill. So without further ado, I would like to welcome Rahul Setharam. He's going to be talking about meme coins, so give it up for him.
Hey there. What's up, everyone? GM. Today's a good morning, as it has been all week. This is one of the first ETH Denvers I've been to where we haven't been like dumping like crazy, so excited for that. Give me 1 sec here to get these slides up. Oh, wrong thing. Cool. Okay, so today I'm going to be giving a talk about meme coins. I think, you know, since this is ETH Denver, a lot of us are like ETH maxis, kind of like fundamental maxis, and we kind of look at this meme coin world and we just laugh at it. We don't really want to put money in it because we think it's stupid. But, you know, recently I got an opportunity to dive in a little deeper on meme coins, and I wanted to provide some insights from a developer's point of view about meme coins and what this world is, kind of peel back some layers. So the title of this talk is WTF is going on-chain, because really if you look on-chain, you will see most of it is meme coins, and it's kind of crazy to see, but really that is where the world is and where we are. So first of all, who am I? My name is Rahul. I am co-founder and CTO of Connect, so I've spent a lot of time, many years, building in the space, building like actual infrastructure and products. But more recently, I decided to just launch a meme coin. So now I am a meme coin developer of my own meme coin, Zoomer. We'll talk more about that later. Just to set some context and some background, what exactly is a meme? I was quite surprised to see when I Googled what the definition of a meme was, that the definition is pretty much exactly what we all think it is. It's just an image with text that gets shared over and over and copied and spread rapidly over the internet. It has some Greek origins somewhere about like imitations and things like that, but really it's just a picture that gets shared on the internet. So really, if you look at crypto, meme coins have found product market fit since the beginning. Ever since crypto was created, there have always been meme coins. And these are no joke. If you look, this is on the right here is the CoinGecko chart for meme coins. And you'll see like there's billions and billions of dollars in these things. The market caps are just insane. And like really, this is more of a serious thing than people see. There's real money in here. Real institutions are going into this stuff. Like people are looking at this. Hedge funds are trading meme coins. It's not a joke. And if you look recently at like Dex Screener, I just pulled this morning from the Dex Screener like trending stuff. 80% of this is meme coins. So that's really all people are trading on chain. It's like you think we're building all this cool stuff. Everyone wants to buy our tokens because we're building real infrastructure. But no, they just want to gamble around on meme coins. And what exactly is a meme coin? Let's back up. So meme coins, they don't do anything. It's ridiculous. And this kind of like, as developers, this makes us want to rip our eyeballs out because we're like, why do people actually want to buy and spend money on coins that do absolutely nothing? And the other thing about it is they're fair launch. So what that means is the whole token supply is immediately dropped onto the public. So everybody in the public can buy the tokens instantly. There's no lockups, there's no VCs, there's no insiders. It's just completely on chain. And that's a cool thing that I'll talk about later. And of course, based on memes, it's all about the memes and meme coins. And with that in mind, also there's like a community behind it. So there's a cult of people that are following the meme coins, and they're the ones who are driving the project. So it's not a developer, it's not a team, it's a community. So really it's like, really embraces kind of the ethos of crypto, which I think is really cool. So now I'm going to go into and talk a little bit about different kinds of meme coins. I'm not shilling any of these meme coins, of course, but I just want to give some highlights. So everyone knows Dogecoin. This is the OG meme coin. Like this is the meme coin your mom knows about, your dad knows about, your parents and your friends, all your normie friends would be like Dogecoin. They'll kind of laugh at it. But this is the original meme coin that created the space. It was launched in 2013 as a Litecoin fork. It's it's its own L1. There's no other apps on it. It's not built on Ethereum or anything like that. Then one really silly thing that I can't understand why people are still buying Dogecoin, but people are buying Dogecoin. This chart is from like today also, and it's up huge. It's $18 billion value, but there's an infinite supply. So literally this is just gonna keep diluting, but people are still buying it. It's insane. And if you guys remember a few years ago, this was big in the like international news because people like Elon Musk were endorsing it, Wall Street bets. So it was like a big name, and it's a big deal, and that's why everyone knows about it, and everyone knows about meme coins because of Dogecoin. So next one, Shiba Inu. This is basically people who took Dogecoin and put it on chain. They put it on Ethereum. They created an ecosystem on top of it. They're kind of trying to be like Dogecoin plus utility. And this is like basically the second big meme coin that has come out, and still one of the biggest, $14 billion value. It's like no joke in terms of the money that's on it. And this one, Chainlink. Chainlink is an interesting one. So it's not really a meme coin. It's an unsexy infrastructure coin. But if you guys remember, a couple of years ago, Chainlink was all over like 4chan. Like this guy named Chainlink God, he basically made a Pepe version of himself as a Chainlink guy, and he was just like spreading Chainlink everywhere through memes, and really it kind of became like this 4chan meme coin, even though it's not really a meme coin. They have this thing called the Link Army that basically infiltrates 4chan, Twitter, etc., and just talks about Chainlink all the time, and they treat it like it's a meme. And then Pepe. So this is like the start of a new wave of meme coins. I think this one is going to be big this cycle. And it's one of the big ones, I think. It's the most widely used 4chan meme, and it finally came on chain. It's super huge on crypto Twitter. I think this has the opportunity to really like penetrate into the normie market. This is also sitting above $1 billion valuation. These are like no joke big coins. And then this one is just a funny one I threw in here. Harry Potter, Obama, Sonic, 10 Inu. It's just like ridiculous. The ticker is Bitcoin. They co-opted like 10 different memes. The community is crazy autistic. I don't know how much you guys know about this, but literally their dev, who's like the face of the project, went on live stream, smoked crack. And literally that's what took it from like 0 to like 10 million. So like, it's insane. And they have Twitter, 8-hour-long Twitter spaces where like people just like come on, like play music, sing songs. And this was created during the bear market. So it was like just something I think for people to come together during the bear market, like, have some fun with things and like create a community. And I think they did a really good job. Now they're like, huge coin too, almost $100 million valuation. So yeah, that's a little background context. Now I want to give a little bit of a deeper dive on this topic itself. So a big thing about meme coins is narratives. So there's always narratives are shifting. Meme coins are always trying to stay relevant because the market is so like flip-floppy, like something's hot one day, it's not one day. So meme coins are always fighting to kind of like stay relevant, capture attention, capture eyeballs. But with that said, there's always some things that are static, like dogs. There's always dog coins. For some reason, dogs are so hot. Every new chain that launches has its own dog coin. That's #1 meme coin. Pepes are also big. But for some reason, cats never work. There's never been a good cat coin, but there's been good cat NFTs. So it's like this weird thing. People have tried to launch cat coins, and they just go to 0. It's crazy. And then, the narratives keep changing. Like, these are just from, like, the past couple weeks, I guess, or, past month or so from what I could remember. Project founder dogs became a big thing. So like every project founder, I think the Solana founder had one called like Miro. Toshi is like Brian Armstrong's dog. So all these coins keep launching under founders' dogs. Then Elon is a huge meme. Anything he tweets instantly becomes a meme coin and kind of picks up. Solana had its run with a bunch of meme coins. Forks, so all these meme coins kept getting forked. Like there's one called Pepe Fork. That became a big thing. There's like dog with hat forks. Cross-chain was a brief thing. So like, there's cross-chain meme coins. ERC 404A, this is an interesting one because, it was kind of like pushing a new standard. 2 minutes, oh my God, okay. I'll go through this a little quicker. But really, what do they do? So for the most part, utility is not something you want in a meme coin. It's bearish to actually have your meme coin do something because it kind of like caps what they can do. There's a couple that have tried to do it with like Link, like I mentioned. There were some on-chain games, sniper bots, which is a cool other thing that we'll explore a little bit. But really, like it's all driven by the promise and not the delivery. This to me is probably the most interesting part of meme coins these days. So snipers are basically an infrastructure that has been built specifically around meme coins and fair launch tokens. So Banana Gun, I don't know if you guys heard Banana Gun, Unibot, these are like big projects. So they have hundreds of $1 million TVL. Their infrastructure is specifically developed. So as a developer, you'll want to rip your eyeballs hearing this, but it's a Telegram bot where you put in your private key into the bot. So it's fully centralized. They have access to your private keys. They can do whatever they want with it. But what it lets you do, it lets you actually read the chain and you basically put in a smart contract address so these guys basically what they're doing, these snipers, they are watching the chain, looking at deck screeners, seeing a new contract get deployed, doing some minimal amount of due diligence, putting the smart contract into BananaBot. BananaBot is waiting for liquidity to get added and instantly buying the token. So like within seconds, it will buy a token right when liquidity gets added. So it's pretty cool, and like that's kind of a big thing in the world is these sniper games. And I've gone through this process now, but I wanted to give a little background on how you actually launch a meme coin. So you have your smart contract, of course, and you have all the various parameters on it. Then there's this interesting thing about on-chain marketing. Because the blockchain is so transparent, everything that happens on the meme coin is seen by everyone. So what I've put here is there's a deployer wallet that has like a huge ETH balance because people will instantly look at who deployed this contract. Then there's some art on the smart contract because like, you know, you'll see the smart contract, you'll see some art, you'll be like, oh, people put some work into this. And then over here, you'll see that there's a bunch of transactions instantly when you deploy the contract. Those are all the snipers who are approving your contract. And this happens within seconds. So that's the on-chain side. And of course, off-chain side, oh shoot, okay, I'm running out of time here. But basically, that's it. I'm gonna skip over here to my experience. So my experience launching Zoomer. I launched it basically because I wanted to launch a meme coin for Gen Z and kind of like, just see what it's like to launch a meme coin. I feel like, you know, Gen Z is crypto native. They're going to be the ones that take over. So we want to launch a meme coin around Gen Z. We launched it. We got a lot of initial hype. I doxed myself, and that created a lot of legitimacy. And I got a lot of team forming around it. So the team of whales and community, I really saw an organic team come in who bought the coin and engaged with it. So there's this big thing in meme coins. Oh shoot, did I just get cut off? Can you guys still hear me? Talk to you guys later. Thank you all.
Okay, if you want to, he's going to shill his token afterwards. So I would like to introduce Brian Russ. This is his first time speaking at ETH Denver. He's been coming here since 2018. He's from BMO Finance Group, and he's going to be talking about blockchain evaluation, which we all need to know about that. So welcome.
HDMI, so I tried to just take this off. Yeah, sorry. Okay, GM, good to see everybody. I thought we would kick off actually with maybe a quick poll of the audience. If you wouldn't mind, I'm just curious, how many people out there feel like they have a really strong sense for what an investment bank actually does? Like maybe with a show of hands, like I really understand what investment banking is. Okay, just a few hands. Okay, that's a helpful starting point. So investment banks do a lot of things. And frankly, it's not as complicated as it seems. And so I wanted to kind of simplify some of that down for everybody today. And I think a good analogy for this is a real estate broker, actually, who you might hire to sell your house. Investment bankers, one of the main things they do actually is sell companies. And so while investment bankers might be brokering the sale of a company, an easy, kind of less abstract way to think about this is for anyone who's ever bought or sold your house, you might have hired a real estate broker to handle that sale. And if you did that, you know, one of the first questions you'd probably ask of that broker is, well, what the hell is my house actually worth, right? That's what you'd be curious about. So if you owned a company and you were going to take it to market for sale, and you hired a banker to do that, the first question you might ask them is, well, what is my company actually worth? And so your real estate agent, they might do something like look at, well, what did your neighbor's house sell for? Or what did, you know, the last 10 houses in your neighborhood, what did they sell for? Take the average on a price per square foot basis, and then they would apply that to the number of square feet in your home, and they would come up with a valuation. Your house is worth this. So to make banking less abstract, that's a big part of what iBankers do. And so I have built a model that's kind of rooted in traditional quantitative analysis around this. And the idea is to help everybody understand how would you value a company, how would you value a blockchain, how would you value a token. And instead of walking through the model, because that would be pretty abstract, instead I took that model and I valued the Ethereum blockchain. So what we're going to do is we're going to walk through a valuation of Ethereum today, and hopefully you can use it in some other pockets of your life. if there's one thing that you take away from what I have to share today, I would ask that it is just this, that when you're valuing something, if you're valuing your project, if you're valuing a company, that the valuation is rooted in quantitative analysis. You know, I meet with a lot of founders who are raising money for their projects, and it's kind of finger to the wind sort of valuation, or what they're trying to accomplish is to maximize the amount of dollars that they can raise and minimize the amount of tokens or the amount of equity that they have to give up to do that. That is not the right way to do that. That may seem like the right way in the very short term, but in the long term, what you really want to create is a win-win partnership between a founder and an investor so that it's successful for both parties for the long term, because the real benefits of that type of partnership will come in the end. Okay, before we dive into the model, who am I? My name is Brian Russ. I've got 20 years of experience in investment banking, corporate banking, hedge fund management, and I run a family office. Today, I run the state of Colorado for BMO Financial Group. We are 1.3 trillion in assets. We're the 8th largest bank in North America. Here in Colorado, I manage 2 billion of capital, and we have 800 employees. Mostly, we are involved with helping large companies and their capital needs. The other hat I wear is as CIO of my family office, 1971 Capital. We are investors in disruptive technology and have been investors in the blockchain space since 2013. Okay, let's jump into the model. The model is actually 4 different models. So we're going to use 4 different approaches to valuation here. And then at the end, we're going to take a weighted average. So I won't talk about the models here. I'll talk about them as we get into each of the 4. One quick note before we dive in. The valuation process, whether it's for a company or a blockchain, the reality of this is that it is as much art as it is science. And it matters immensely what types of assumptions we make. The assumptions will drive the valuation. So we want to first be accurate with our assumptions. Second, we want to be conservative with our assumptions. And then third, we want to make sure that we state what our assumptions are along the way, because ultimately they drive the valuation. So please keep that in mind. Okay, let's start with model number 1. There are 4. So model number 1 is discounted cash flow. If you've ever taken a finance class, this is like Finance 101. This model essentially says that your company or your blockchain is worth the summation of all the profits that it will generate forever, in perpetuity. So your blockchain is worth the amount of profits it will generate for you this year, plus the amount of profits it will generate for you next year, and the year after, and the year after that, forever. And so what we do is we have to build a model to project forward what those profits are, and then we use a discount rate to bring those profits back to 2023 or 2024 chain dollars so that we can say what is the project or what is the company worth today. So let's take a look at this model. So first we've got to come up with a proxy for what are cash flows and how quickly are they growing. So first I attempt to answer how quickly might cash flows or profits grow on the Ethereum blockchain. And so for that, we're going to look at wallet growth. If you go on Etherscan, you can see that wallets on the Ethereum blockchain have been growing at about 36% annually for the last 5 years. So we used a slightly more conservative metric of 33%. So we assume that Ethereum wallets, total wallets using Ethereum, grow at about 33% per year for 10 years. If we take that math forward, that means that we'll have 4.5 billion users by 2033. So that's about half the world's population. That's a good back check to make sure that our assumption around growth is reasonable. And while I would say half the world's population is a lofty assumption, I think everybody sitting here is here because they think that type of growth and adoption is possible for this industry. Okay, let's take that growth rate, that 33%, and let's apply it to Ethereum's cash flows. First, we have to say, well, what are Ethereum's cash flows? What type of profit does the Ethereum blockchain generate? In order to do that, I actually ended up using the same profit methodology that's used on ultrasound money. So if anyone's been there, great website, great resource, go check it out. And in order to do this, we essentially look at a proxy for Ethereum revenues which we use as burn as the proxy. So burn are the revenues, essentially, on the Ethereum blockchain. And then issuance, we would call the expense. So the issuance is kind of the inflation. It's what you have to pay the stakers. And so if we take the revenue, the burn, minus the issuance, the expense, revenue minus expenses equals profit. Okay? And so if we do that, we get a profit figure of $1.8 billion that the Ethereum blockchain generated in 2023. And so we're going to take that 1.8 billion, we're going to grow it 33% per year for 10 years. And that's what's represented by the black bars. After year 10, we're going to use a slightly more modest growth rate of 5%. And then we're going to take all the value of all those cash flows and we're going to discount them back to today. And to discount back, we use something called the risk-free rate or the Fed funds rate, which is 5%. So we'll bring all those cash flows back to $2023 or $2024. And here's what the model tells us. If we do this exercise, the Ethereum blockchain, represented by that pink bar, is valued at $458 billion. The actual valuation is about $400 billion today. So this model suggests there's a 15% premium, that, in other words, that Ethereum is undervalued at today's prices by about 15%. That's interesting. Let's jump to the next model. Okay, second model is precedent transactions. I've got a picture up here of a residential neighborhood. Let's go back to our you're selling your house example, and you ask your broker, what's my house worth? Well, they're going to look at what your neighbor's house sold for. We already talked about that, right? So that's essentially what we do here. We want to look at other technology companies, what they've sold for, and use that as a proxy to value Ethereum. So because Ethereum's early stage, we can't really look to other blockchains. So instead, we're going to look to other early stage tech companies that became the dominant player in a network that they created. I thought this was a good comp set. So here you can see we're looking at Amazon, dominant in e-commerce, Google, dominant for search, Meta, dominant for social networks, etc. We add Netflix, Tesla, Uber, and we're going to look at something called the PE ratio. Many people might be familiar with that. Price to earnings ratio. It's just the ratio of the price of a company's stock divided by the earnings that it generates in a 12-month period. And so in order to do this for those companies, we've got to rewind the clock and go back to when they were earlier stage so that it's more apples to apples with Ethereum. But we don't want to go all the way back to the point where before they were profitable, right? Because then we wouldn't have the E. We wouldn't have the earnings for that ratio, and we wouldn't be able to calculate it. So what I did was I went to the first profitable year for each one of those companies, and I looked at their PE ratio for the next 5 years, took the average, and that's what's charted in the black bars, the average PE ratio for the first 5 years of profitability for those projects. Or those companies, excuse me. And then if we take the average, that's that pink line, 178. And so what we want to do is take that average PE ratio of 178 and apply it to the Ethereum profits of, again, we talked about 1.8 billion. So 1.8 billion times 178 PE ratio gives us the value of the pink bar there, which is to suggest that the Ethereum blockchain is worth $321 billion. So this model actually suggests that Ethereum is overvalued today by about 20%. Interesting. Let's look at the next model. Okay, the next model is something called market comparables. Investment bankers call this comps or comp sets. Here we're going to, instead of looking at Google and Amazon and Netflix, we're going to actually look at other L1s that directly compete with Ethereum, and we're going to see how are they valued, and then compare that to Ethereum's valuation. So let's dive in. In order to do this, I wanted to come up with a standardization metric that lets us look kind of apples to apples across different L1s. So here I've pulled the top, including Ethereum, top 6, but excluding Ethereum, top 5 L1s by market cap. And the black bars are showing market cap divided by total value locked. This is a ratio MC to TVL that's becoming more and more widely used in our industry. Now, what's interesting here is that these get kind of all across the board. You know, something like Tron is at 1.4, whereas Cardano's at 55. So instead of taking the average, what I did was I took the total. So we took the sum of the market caps for the top, in this case, 6 projects, we'll include Ethereum, and we divided it by the total value locked on those 6 projects and came up with a total MC to TVL of 8. That's that little pink bar on the left-hand side. Now we have to take that and apply it to the Ethereum blockchain. To do that, we'll take 8 and multiply it by Ethereum's TVL, which is about 47 billion. And when we do that, we get the big pink bar on the right-hand side, which suggests that the Ethereum blockchain is valued at about $376 billion based on MC to TVL. So that's actually pretty close. That would suggest that the blockchain's about 6% overvalued, a rounding error. Okay, let's jump into the fourth and final model, Metcalfe's law. Many of you may be familiar with Metcalfe's law. John Metcalfe was an early internet pioneer. And he essentially came up with a theory that network valuation is actually, because of how it scales, the growth and the valuation is exponential. It should not be valued on a linear basis. It needs to be valued on an exponential basis. And so the simple example for this is the telephone. So if you think about a telephone network, if you add one more user to a telephone network, you don't get a value accretion of 1. You get a value accretion of greater than 1, because that now new phone can connect with every other phone on that network. So it's not scaling linearly in terms of valuation, it's scaling exponentially. And Metcalfe came up with a formula for this. That formula is V, which is value, equals N squared. So it's pretty simple. N equals the number of nodes on a network, and then you just simply square them to determine the valuation. So it's a very simple model. Here, I went on Etherscan again and made an assumption around monthly active Ethereum users. Here, that's about 15 million, and then we just simply take the square of that. If we square 15 million, we get that pink bar, $225 billion valuation for the Ethereum blockchain. So this one actually suggests that Ethereum is quite overvalued by about 44%. It's the most kind of out of line with the other models. Interesting. Okay, let's jump into the valuation. Let's put it all together. So here we've got our 4 different models with 4 different valuation metrics. And what we did is we applied a simple weighted average. So we take 25% of each of the 4 models, we sum that, and we come up with a model weighted average valuation for the Ethereum blockchain at $345 billion. This is about 14% below Ethereum's market cap today. You know, what's interesting is that my data probably lags about a week, and I think ETH is up about 15% over the last week. So let's just say the ultimate conclusion is that the Ethereum blockchain, based on this model, is fairly valued, plus or minus 14, 15%. Okay, so that's not the most exciting conclusion, but it's important, and this exercise is important, and that's where I want to kind of conclude. So first of all, key takeaways. We touched on a few, but I want to reiterate them. When you're making a valuation model, the model itself and your assumptions, they should be accurate first. They should be conservative second. This is important. Also, we want to make sure that the model is always rooted in this type of quantitative analysis. Again, that's going to create those win-win type of outcomes for founders and investors where your partnerships can be successful over the long haul. And then if you guys are just investors out there and you're thinking, how does this apply to me? If you built this type of model, it might actually help you identify some arbitrage opportunities. So let's say we had done the model and we all felt reasonably comfortable that the Ethereum blockchain was worth 800 billion instead of 400, well then we could invest with the expectation that we might double our money in short order. So it can be helpful for arbitrage as well. Okay, this I think is probably the most important conclusion if you're an investor. Again, it might seem like, well, we went through this whole exercise and at the end we just determined that the market value was what the model said. Isn't that kind of disappointing? In my mind, it's not, because what that tells us is that through this rigorous quantitative approach, we're able to determine that the valuation of the Ethereum blockchain is actually fair. We think it's fairly valued. And the reason that's important, especially as investors, is because it gives us the conviction that we're investing in something at fair value, and with that conviction, we can hold on to it for the long haul, for 3 years, 5 years, 10 years. Imagine if you had done this exercise and determined that Ethereum had this upside potential back in 2016 or 2017, and you were going to hold it for 10 years, you'd be sitting in very good shape right now. So I think that is why this exercise is important. You can develop a conviction rooted in quantitative analysis around why you're investing in an asset and how long you want to hold on to it. And then lastly, I mentioned a 17x return. What's that? Well, let's look at some simple compounding. So we talked about Ethereum wallets and therefore profits growing at 33% per year based on the historical trend. If that trend continues for 10 years, $1,000 invested today would be worth over $17,000 by 2033. So this is why the model is helpful in these types of projections. It's helpful for the conviction that's necessary to hold on to something for 10 years. And I think that's kind of the ultimate conclusion and what I wanted you guys to take away from today. So I am down to the end of my time, but I really appreciate everyone coming here today. If you want to get in touch with me, I'd love to get in touch. QR code takes you to my website. If you're a founder and you're raising capital, feel free to reach out. If you're a founder and you want some help valuing your blockchain, please feel free to reach out to me there as well. Or if you're an investor and you just want to network and connect and share ideas, I'd love to do that as well. My email address is up there and my Twitter DMs are open. So thank you all so much and hope you enjoy the rest of the conference.
Thank you, Brian. Okay, now we have Christopher Newhouse from DeFi Gaming from Cumberland Labs. So stay tuned for more, and yeah, and he'll be able to answer all your questions.
Are you speaking from the podium today?
I think so, yeah.
Awesome.
Up here,
Oh,
just a
okay.
solo one. Thank you.
Get it out of the way of your laptop, too.
Perfect.
Sorry, I know I just said we get it out of the way of your computer.
Oh, you're
Is
good.
that workable?
Nope, yep, that's good.
Cool. Maybe just a little closer to you also.
Yep,
About like so.
perfect.
Pull that closer to you, please.
And you're not going to be sending us any sound today, right? Just picture?
Yep, only picture.
Okay, awesome.
Documents.
Thank you. Have fun.
Perfect, thank you so much. Good to go? Perfect. Okay, okay. Got it, got it. That makes sense. Cool. Will it start like ticking down as soon as you guys are ready? Cool. Sounds good. Hey everyone, thanks for joining today. So I'm going to be doing a presentation on filtering the signal from the noise, finding the next trading narrative. My name is Christopher Newhouse. I'm a DeFi analyst at Cumberland Labs. Cumberland Labs is a Web3 incubator and venture studio. So if you're a founder with ideas and need resources, whether that is capital, developer resources, legal help, anything of that nature, feel free to reach out to me. And we'll get started. I was actually here as a speaker last year. More so focused on a beginner panel, how to onboard onto Web3, so it was teaching people about wallets, MetaMask, things like that. This is probably a little bit more of an intermediate panel. We're going to be covering a bunch of the just data sources that I use to form investment theses. So right now the market is, we're bull market. Bitcoin's above 60K. Ethereum is really performing. It's a very institutionally led narrative right now. But as we kind of start to see more of that shift towards Ethereum, maybe the ETH ETF in May, we might start to see a lot more trickle down into some of the layer ones and a variety of the altcoins and DeFi ecosystems. So I hope that this presentation gives you the opportunity to see some of the different DeFi native kind of data that I'm looking at before I form an investment thesis and buy it in my own PA. As a bit of a background, so I graduated Georgia Tech in 2022. I've been fully crypto native, so sorry if the slides are pretty rudimentary. I had no consulting, no investment banking, none of that experience. I've fully been crypto native. I started at Genesis, went to GSR. Now I'm currently here at Cumberland Labs. I was previously also a research partner at Deribit, so I was writing like options-focused market commentary. If you guys follow me at all on Twitter, crypto DeFi guy, I write a lot of market-focused commentary for institutions and retail traders as well. Sorry, let me mute Telegram. Forgot about that. Very crypto native, of course, and got to close the Discord as well. All right. Awesome, so getting back into it. So I entered crypto in 2017. First trade was Ripple during the ICO bubble. Made a decent bit of profit there. Kind of took a break from crypto until 2020. DeFi summer came, got super involved in ETH, super involved in the ecosystem. Realized I wanted to stay in crypto for the foreseeable future. Had a role at Genesis, and that was kind of my foray into the institutional side of digital assets. We're going to be looking at kind of like a data-driven approach to finding trades and forming a fundamental thesis. And then hopefully, like, the presentation is probably going to be pretty quick. And then hopefully, if people have questions from the audience, I'd love to answer them. So I've been in the space for 6 years now and 3 on the institutional side. So why am I presenting? We're kind of entering this new cycle here. New participants. It's a very institutionally driven market, I'd say. We all see the stuff on the inflows, coming up on Bloomberg, and everyone's talking about ETF inflows. It's very much so Bitcoin dominated. I think a lot of that's going to trickle into ETH. I think it's not really a narrative, but it seems like something that's kind of just going to happen is people are starting to position themselves for ETH ETF, maybe coming in May. So that's definitely something to look at. But what I just described is very institutionally focused. There's still a lot of specific narratives going on in the background that might have massive upside, and being able to leverage data effectively is how I've kind of had the opportunity to catch some of these waves back in 2020, 2021, and then recently in 2023 as well with Solana. So like I said, potentially ETH ETF in May. We're going to maybe see that trickle down into altcoins. There's new interest in growing volumes in DeFi. We're seeing a lot of different DEXs across a variety of ecosystems really start to pick up TVL, really start to pick up volume, and you're starting to see like decentralized exchanges really get volume and get interest again. We're going to approach it from kind of like 3 waves. So we're going to talk about like how I think of the Bitcoin and ETH narrative. That's primarily going to be like derivatives data, options focused data, very institutionally focused, just to see where the flows are, where people are trading, and what they're speculating on. We're going to approach it from the altcoin side as well. So it's a lot of the altcoin data I use, whether that is on chain, whether that is like DeFi Llama, TVL tracking, things like that. And then also DeFi specific as well. So we'll talk about some of like the data sources I use from an API standpoint to monitor liquidity pools and things of that nature. So those are the 3 verticals we're kind of tackling this at. Data-driven approach, of course, is obviously going to be, you could just get long on any type of meme coins or any type of shit coins without doing any research, but obviously using a data-driven approach is probably going to do a little bit better. So I'd like to talk about the important data feeds that I look at. So for Bitcoin and ETH, I'm primarily focused on the derivatives markets. So that's funding rates on the perpetuals, that's open interest, that's shorts getting closed, options markets as well. So that's going to be options open interest across a variety of strikes. That's going to be dealer gamma positioning. That is going to be how the institutions are focusing on the options market. We'll talk a little bit about DeFi, so TVL and ecosystem activity. Those are probably 2 of the biggest metrics you can track on DeFi Llama. It's a screenshot of DeFi Llama. And then I'll cover like just a couple interesting chats from Telegram and some research sites as well. So first, I'd like to start off, and pretty much the way the slides are, these are all the data sources that I use personally. So I'm a big fan of Amber Data, Levitas, and Greeks Live for the options data. It's pretty high fidelity. And the cool thing about Amber Data, Levitas, and Greeks Live is they all have some of their own proprietary charts that they make that are different from others. So that's kind of how I like to look at the option space. I primarily use these 3. Whenever you're looking at the option space, you're really trying to focus on institutional positioning. So how are the institutions positioned? It's really nice to understand volatility dynamics. So before I enter into a lot of positions, I like to see, hey, is implied volatility in the options market cheap? Is it rich? I like to take a look at term structure. So that's how I trade a lot of events. And then also just in general, like I was discussing with implied volatility, are options cheap or expensive? Other data I like to use these sources for to take a look at are primarily around like the expiries and the open interest. You usually see on CoinDesk, it's like, okay, we've got this expiry happening at the end of the month, $2.9 billion of Bitcoin options are expiring. Where do you think that's going to impact the market down the line? Is it going to impact the market? Usually I like to leverage both the derivatives data plus the perpetual futures funding data, and that's kind of how I think about the positions. Yep, so it's primarily going to be a directional focus, but like I said, these are all options data providers that give a lot of insight into the volatility surface of Bitcoin and ETH. Perpetuals, so these are Coinalyze and CoinGlass. Coinalyze is actually like my favorite. I'm not paid to shill them or anything, but you can literally put a lot of the perpetual data on a trading view looking chart. So one of the biggest things I use Coinalyze for is a variety of things. You can take a look at funding rate, you can take a look at predicted funding rate, you can take a look at open interest. So one of the things I like to use in terms of like a confluence of data here is whether or not, you know, shorts or longs are being liquidated. So if the price is heading up and we see a massive move higher and a lot of open interest just decreased, I feel like shorts got closed there and they got blown out and pushed the price higher. So using these kind of data sources on the perpetuals markets, first it helps me understand leverage, it helps me understand market positioning, and then it helps me understand, like, is this a derivatives-led rally right now, or is there a lot of spot organic demand? And given the ETF, it is really important to see like, hey, is this a perpetual rally based off the back of derivatives markets, or is it a spot driven? And as we've all seen from like this massive recent run up from 53K to 64K, and then you saw the 64K down to 61 within 5 minutes, a bunch of people got liquidated. That's the kind of thing that I like to use Coinalyze to look at. CoinGlass, I use that just to track liquidations. It's got very nice charts. All these are free actually as well. And then yeah, the way that I like to leverage this data is to think about liquidation cascades, delta neutral funding trades, and then how are the alts performing versus the majors. So if you use Coinalyze, it actually has like the funding rates for any listed perp on the altcoins markets. But recently, Bitcoin and ETH have been dominant, so I've been focused on Bitcoin and ETH. Now we'll kind of look at some of the DeFi and on-chain data. So everyone's probably heard of DeFi Llama if you're trading on DeFi. It's like a very, very easy way to track TVL of ecosystems, see what's hot, see what's not, and then also track specific verticals within these ecosystems. So using DeFi Llama, one of the biggest trades I had this year was on Solana, and it was really interesting to see a lot of the DeFi activity start to flow from Ethereum over to Solana, and then start to also see like how the individual protocols were accumulating volume after a lot of the different Solana airdrops. So I feel like, you know, Q4, Q3 of 2023, one of the bigger trades was Solana, and one of the things I was doing was just constantly being on DeFi Llama, looking at the TVL and the DeFi ecosystems, looking at how much volume is going through their dexes, looking at how many developers are starting to build on Solana or continuing to build, and I get a lot of that from DeFi Llama. So a lot of the stuff I was talking about here, what ecosystems are thriving, what's growing, what protocols. So on DeFi Llama, you can get like protocol specific, and that's what protocols might have user growth and volume. A lot of the stuff in DeFi is competing with each other. So being able to look and see who's actually winning whenever there's 5 dexes is very important, especially for like token airdrops in the future, or just investing in those verticals. I also use a lot of on-chain data from Glassnode and Dune Analytics. So that's like specifically on-chain and kind of just looking at active wallet addresses, seeing like how much of a coin someone holds. If are there, you know, 1,000 users with 1 coin each, or is it 1 user with 1,000 coins? So that's something I like to take note of because the activity can be very different across a variety of those different users. Another thing I like to use as well is Expand. It's API access. So I use this for a lot of DeFi liquidity pool forensics. And that's just very interesting to me from a historical analysis standpoint to say like, hey, this might be a dead narrative. I'm looking at, you know, liquidity pools a year or two ago, and you know, they're kind of flat, kind of trending downwards, and now they're starting to get active again. Whales are starting to get active in these ecosystems, providing liquidity to these pools again. Maybe there's something going on behind the scenes. So a lot of this stuff about crypto and about data is just really, like I said in the PowerPoint, is filtering signal from noise. There's a lot of data, and it just really focuses on what is important, and that's what I'm hoping to highlight here with this presentation. So yeah, this is my DeFi and on-chain data that I look at. DeFi Llama is a massive one. And then here's some telegrams. So I don't have the links to these, and these are just the images. But crypto fundraising, maybe you could type that into Telegram and it'll pop up. There's like 25,000 people there. But basically that's, easy access to a lot of the early stage deals going on in crypto. They post them pretty quickly. They've already happened, but it's good to see who's investing in a lot of these different narratives. Different VCs have different focuses in terms of verticals. It's really interesting to see like, hey, I'm on crypto fundraising. The past 10 deals over the past 2 months have been Web3 and gaming. Maybe that's a hot narrative. And then Paradigm Edge. So that's a specifically focused institutional options chat. And what that has, it's got like 1,600 users in there if you can find it. Maybe you need the link and I don't have it. But if you see on Paradigm Edge, like it shows like top flows for institutions. It shows what is going on in the options markets. It shows you the biggest prints of the day. So if the market is rallying massively and someone came in and yesterday they bought, a massive amount of calls, they're probably in profit, and that's something to stay cognizant about because eventually they're going to have to exit that position and exit that position. And then Infinity Hedge. This is just one that like I've been using recently, and it's very similar to Tier 10K on Twitter. They come out super quick with crypto native news. So yeah, these are 3 of the Telegrams that are like pinned to the top of my Telegram. I'm sure everyone in here has Telegram. It's a crypto conference, and then there's also the news and media company-specific channels. So, companies have their own specific channels for market commentary. CoinDesk, Blockworks, a variety of different research and media companies also have their own kind of research Telegram chats. And yeah. Cool. So I've got 7 minutes, which is a decent bit of time. If anyone has any questions about how I use any of this data, how I have used any of this data, how I've traded, I think you can raise your hand and someone will walk around with a microphone if anyone has questions. And then if not, feel free to reach me on the side. But I'd be happy to talk about any of this. And then also Cumberland Labs being an early stage incubator. If anyone's a founder here looking for resources and haven't raised yet, we'd be happy to talk to you as well about incubation. And if nobody, yep.
Hey, Chris. Just curious how you prioritize which data sets to pick and where you spend your time on any of them.
Sorry, what was the last part? Data sets to pick and
like how you prioritize spending your time on which ones.
Got it. Yeah, so for me, I also just have like a personal vested research interest. So I have like a predetermined set of narratives I'm looking at, and then I usually just pick data to analyze those specific narratives. So if I have a view that, hey, maybe DEXs are hot right now, maybe liquidity is coming there, maybe there's a lot of volume, I already have like these predetermined layer ones that I'm just personally interested in, and I kind of look at DeFi Llama and some of the data and historical analysis there to just analyze the growth or whatever vertical I'm looking at. If the hypothesis is, hey, DEXs are getting more volume, DEXs are getting more users, maybe I look at some of the on-chain data for the addresses of active users on that protocol. Maybe I like to see, okay, like I was talking about in terms of 1,000 addresses with 1 Solana versus 1 address with 1,000 Solana. It's a very different narrative. But in terms of choosing the data, I already have kind of like predetermined layer ones that I'm interested in, and then it's more so about looking at specific ecosystem verticals.
I came in a bit late, but if we want to follow you specifically, do you post any particular place consistently?
Yes, so I'm on Twitter. It's @CryptoDeFiGuy, very basic crypto name. And I usually post like options commentary. I've posted stuff on on the ETFs. I've been on the bylines for Bloomberg, CoinDesk, Yahoo Finance for market color and market commentary. So anytime there's a big move, I usually post something on Twitter about why I think that happened. And usually that leverages charts from some of these data sources. That way you can actually see, and I also explain why that happened. So whenever I was talking about Coinalyze for liquidations and open interest, I usually highlight and point that out just for new people who are kind of coming in and seeing a new data source. And then also shout out, so I've actually never used these other 2 data sources, but this is why it's good to connect with other research analysts and just talk about different data and have a presentation like this to see all the different data sources. Velo data is another good one that I've been seeing pop up. And then Artemis is another one that was recommended to me by a research analyst. So I've never used those, but I wrote them down because you can never get enough data in crypto. If no one else has any questions, you can talk to me on the side as well. Awesome. Thanks, guys. Really appreciate it.
Hey everyone, my name is Melissa. Welcome back. I just wanted to make a brief note about the Bidathon going on now. ETH Denver is not about competition, it's a launch pad for success. So we have over 1 million in sponsored bounties, prizes, and up to 10 million in grants and investments. ETH Denver offers substantial support to help visionary ideas come to reality. So definitely check out the Biddles online. And without further ado, we have Miko coming up. He is the managing partner for Gumi Cryptos, and he's going to be discussing contrarianism, how to invest time and money. So give it up for Miko.
Hey, terrific. All right, thank you very much. So I'm a venture capitalist with Gumi Cryptos Capital. I've been investing in this space professionally since 2018. I was actually doing angel investment before, but really, what is a professional investor? A professional, the word professional next to the word investor means other people's money. That's what professional means. And the reason why is a professional is someone who is paid, right? So how do you get paid? You get paid by taking fees, right? So basically, I've been investing other people's money since 2018 in the form of Gumi Cryptos Capital. So today, I wanted to talk to you about contrarianism. Contrarianism is super, super important when it comes to the future, and I'll explain why. It's very simple, which is effectively that if you look at jobs, the thing that is really important is what are the jobs that will be replaced by AI, right? What is AI going to do? So I'll tell you what is I have a way for AI to replace venture capital, and it's actually heuristic. And the way it works is the AI looks for Y Combinator, and then they look for hipster shoes, and then they throw checks. That's my algorithm, right? So why is that ridiculous? It's ridiculous because it's doing pattern matching, right? Venture capital people are famous for doing pattern matching. And the thing that's really interesting is that the best entrepreneurs are not pattern matched. The best entrepreneurs are pattern breaking. They're pattern breaking. So the idea that a VC is pattern matching, if you're a VC that does pattern matching, you are going to be replaced by an AI. You will be replaced by an AI. And the world doesn't need you. Right now, there are too many VCs in blockchain. There's too many, right? Like, why? Why do I think there's too many VCs? Because VCs don't make anything. VCs don't make products. They don't make things. All they do is they throw checks. They just they just throw checks around, right? So to me, they're not actually building anything. So the thing that I think is important for me to communicate in this talk about contrarianism is really ultimately the answer to the question that a lot of people want to know, which is they want to know, how do I become rich? How do I get rich? So it turns out that getting rich requires 3 strategies. There are 3 strategies. So the research on how people go from being poor, actually it's not even how they go from being poor. How do they become rich? So strategy number 1 of how do you become rich is you start rich. So in fact that's the best one. The best one is you start rich, right? What's the best way to make a $1 billion company is to ruin a $10 billion company, right? So that's the easiest way to get rich, is to be rich, is to start rich. Okay, I'm guessing that a lot of you are not already rich. So then there's only 2 left. So it turns out that the research suggests there are 2 other things you can do, right? The second one is you can get lucky, getting lucky, right? So that's kind of crazy to think. But the thing that's really interesting is that it turns out that venture is actually pretty hard. And what I mean by venture is pretty hard is if you look at my job, right, as an investor, I say that an investor is someone who puts their time and other people's money or some of their money and they put their care and their attention into projects, right? And with the sincere hope that everybody in the project becomes deliriously happy, right? And a venture investor is someone who does this repeatedly, even though 90% of the time it ends basically in disaster, right? And the thing that happens with venture investing is two super powerful principles. One of the super powerful principles is diversification. Diversification, which is we do place a lot of different bets in order to win, right? And the thing that is important to understand is that the difference between a good VC and a bad VC is obviously performance, right? But it's performance over time. So there are these incredibly large funds, like pension funds, university endowments, right? Very, very large family offices, insurance companies, all sovereign wealth funds, right? So the biggest capital in the world looks at a VC, and what you want is you want a fund one with hits. So for example, Gumi Cryptos has hits in our fund one, like we led one of the seed stage rounds into OpenSea. You know, we were in the seed stage of Yield Guild games. We were early into 1inch. So we definitely have hits in fund one, right? So what are you when you have hits in fund one? I'll tell you what you are, is you are a candidate emerging investor, but also candidate dart throwing monkey, right? Which is, if you have really good timing, you can throw darts like a monkey and you can have billion-dollar outcomes, right? So the important thing is having hits in fund two. So right now, we feel like we're having some indicative hits. We have some really exciting companies in our fund two. But the thing that happens is if you have hits in fund one and you have hits in fund two, that's when you become what's called an emerging manager, right? Which means that I could be like the world's luckiest dart throwing monkey, right? So, but I wanted to talk to you about contrarianism. And the reason why I think I'm so passionate about contrarianism is I feel like there are two styles of crypto investor. And I think that the second style isn't even an investor. And the reason why I say that is the two styles are basically fundamental, and the second style is narrative investor, right? Yesterday, I was looking at a party invite, and the party invite said, what did it say? It basically said, Bitcoin tech, restaking, and AI. That was the invite, right? So this is about chasing narratives, right? Narrative investing is speculation. And the reason why it's speculation is because you're interested in investing in something based on your ideas of what other people will invest in, not based on fundamentals, right? So to me, this type of investing is really gated by something that is this is zero sum. In other words, in this short time frame narrative speculative investing, there are winners and there are losers. And the winners are the ones who sell and dump on the losers. That's the game of narrative investing and speculative investing. And it is a zero-sum game, right? This is actually not even investing, this is trading. This is not investing, it is trading. What is investing? Investing is you basically have to change the time frame, and you have to basically put the money in, and you actually can't yank the money out until the team has actually delivered something amazing. And how do you judge how amazing it is? You judge its amazingness in terms of how much dissatisfaction does it cure in the market, right? Which is how valuable is what they built, right? So to me, I wanted to say now,
the thing that is amazing is that there's tons of narrative investing, which is speculation, and it is zero sum, and it is a casino game. And basically the way you get rich in narrative investing is you sell, you dump on others, and you basically try to create believers so that you can dump on them. That is how you win at narrative investing. And if you are not the insider who is planning the dump, the pump and the dump, you will be the one who is getting dumped on, right? So narrative investing is pretty dangerous. I think the thing that I think makes sense is thesis investing. Thesis investing. And the thing that I think makes sense is fundamental analysis, which is you actually, and one of the things that's so important is that people look at the story, right? So they read in social media, they're like, what do I invest in, right? And so narrative investing is investing in stories. That's a nice story, right? But fundamental investment is investing in reality. It's reality, right? So you have to know. So to me, the story is what they dream about making, right? Whereas the reality is what they actually made, right? So you have to figure out who you can trust, right? You have to figure out which builders actually know how to build, and you need to understand which builders are solving real problems, right? Real problems. Like if the builder isn't solving a real problem, then you should not invest, right? Because they're just spinning their wheels. The other thing that I think is so important is, where does yield come from? Where is yield, right? I can tell you very simply that yield comes from risk. That's where yield comes from, right? So the idea of, oh, I can get yield for free, right? No, you cannot get yield for free, right? You can only get yield by exposing yourself to risk, right? So what can you do about the risk? So there's two things. So here's what I have to say about risk, which is that the best thing you can do as an investor is you can reduce the risk using skill. Skill. That's the way you do it, right? And here's the thing is, I had on my Facebook, a friend sent me a picture of a free solo climber, a rock climber, and he is climbing El Capitan. He is climbing one of the most challenging rock faces in the world. And he's just, the picture of him, he's just hanging there, stuck on this rock, and it is just insane, right? But the thing that's crazy is, the reaction of someone seeing this image of the climber is, that is risky. That is very risky. But the thing is, maybe it's not risky because of skill. Maybe that climber has the skill, right? So I think the thing that becomes important is, if you want to earn yield, you need skill. You have to have skill, right? And if you have no skill, so the amount of risk that you can take, the amount of yield that you can take is related to the amount of skill that you have. So to me, if you go into a situation and someone is saying, oh, you can get 50% APY with no skill, I would be careful about that configuration, right? To me, that's too good to be true. And here's the thing is, if you don't know where the yield is coming from, you are the yield. You're the yield. You're the one. And how are you giving up yield? You are exchanging good money for bad money. That's how you are the yield. You're exchanging something like Ether for some shitcoin is what you're doing, right? And you're being told that the shitcoin is worth more than the Ether, and then you're believing it, right? So to me, you've got to convert. And here's the funny part is, when you expose yourself to risk, you can use skill to convert risk into non-risk, right? Much like a rock climber, people can say, oh, well, that's risky. It's like, no, that person's really good. But the problem is there are unconvertible risks, unconvertible risks. So it doesn't matter how skillful of a rock climber you are, if there is a gust of wind that hits at 100 miles an hour, you're coming off that rock. Your grip strength doesn't matter. Humans don't have grip strength that can hold them onto a rock at that level. So that risk is unconvertible. It's an unconvertible risk. Now, here's the thing. You could say the climber would be like, oh, I saw the weather report. I was going to go up today. I'm not going up today, right? Skill. It's skill. The person is converting and reducing the risk, but the point is that even on a blue sky in a clear day, Sam Bankman-Fried can rug pull the whole fucking industry. Sorry, pardon my French, but the point is that there are unconvertible risks and that your skill can be very high and you can still be rugged. So, based on this, the thing that you require is diversification. Do not put all your eggs in one basket, and if you look at what the professionals are doing, they're definitely doing that. Now, here's the thing, is the idea, so the third thing, so I said, to get rich, you need to either start rich, the other one is you get lucky, right? The third one is actually working hard, right? Working hard gives you an edge. But the thing that's interesting is the magic combination of working hard and getting lucky. But the thing that's really interesting is how do you create your own luck, right? Creating your own luck, to me, involves skill and the truth, right? And not narrative, right? Because the thing that's amazing is that there are bull markets when narratives dominate fundamentals. And then there's bear markets where fundamentals are dominated by narrative, right? So right now we're in a bull market, but I can tell you that at the end of all of this, right, you don't want to be the bag holder, right? The bag holder is the one who can't sell because they're underwater by like 90x, right? So they can't sell, right? And that's the person who got dumped on, right? So if you traded good money for bad and then they dumped on you because you were chasing a narrative, like, you know, big regret. So definitely watch out. I think be careful out there. Make sure you diversify, right? And I think the thing I wanted to say as a final note on contrarianism, right, is that it's the opposite of narrative investing, because narrative investing is, I'm going to invest in something that everybody already believes. Like, for example, oh, AI is going to be big, so I'm going to invest in AI. It's priced in. It's priced in. Everybody's already, you're buying high. You're not buying low and selling high, you're buying high. Don't buy high. Buy low, sell high. How do you do it? You understand the future, right? You predict the future. You understand the truth, and you're correct. Now, even if you have an idea of what you think the future holds, don't put all your eggs in that basket, because the future is unknowable. So you diversify, but you still have opinions, and you're still a contrarian, because that is how you win, right? Don't go chasing narratives, because the insiders they'll rug pull you, they will pump and dump you. Like, the insiders are going to control the game. So narrative investing is a fool's paradise. And if you can get in and ride it up and get out quickly, you might be okay. But doing that does not involve fundamental belief, and it doesn't involve thesis, and it doesn't involve conviction, and it doesn't create basically 0 to 1 benefits, right? It's a zero-sum trader game. So I would say I very much encourage you to develop your thesis, invest with conviction, and pay a lot of attention to founders, and really, because those are the ones who really create and build the future. So that's it for me. Thank you very much.
Hey everyone, welcome back to the Coral stage. And yeah, thanks for joining us for the DeFi track. We have Matt Yee. He is the representative of the Lorenzo protocol. So get ready for some Bitcoin layer 2 talk.
Should I use this one? All right.
Got it?
Is it correct? I think it's still not showing up. Yeah. Oh, I can use HDMI as well. Okay.
Yeah, of course.
Oh, this one has to be, yeah.
Yeah,
All
yeah.
right.
We'll wait for the thumbs up.
Okay, awesome. Thank you, sir.
Of course. Have fun.
Yeah. All right. Hello, everyone. I'm Matt. I'm the founder of Lorenzo Protocol. So we are actually liquid staking L2 as a service on top of Bitcoin, protocol on top of Bitcoin. So today I'm going to talk about building modular Bitcoin L2 with BTC share security. All right, so the first question is, what is BTC share security? So basically, Babylon is the first team actually invented the concept of BTC share security and a Bitcoin staking protocol. So basically, it is a two-sided marketplace between stakers and also the POS systems happy to take BTC staking and for security and happy to yield rewards for them. So what's so great about it is actually 2 points. One is that we can using the 21 million Bitcoins, about 2.33 trillion US dollars, to enhance the security and trust of the whole Web3 world. So the reason Ethereum is so stable, so being trusted, and so great as of today is because like the ETH token has the great market cap. It can be used to secure the network and building trust for all the builders and the users. And Bitcoin has like even bigger market cap. So if we can use Bitcoin to secure the whole network, it is going to be the greatest thing to happen. So this is one thing. And also, the other reason for doing that is everyone is so excited about Bitcoin, DeFi, about like new utilities of Bitcoin as of today. But the thing is, why should Bitcoin trust all these L2 and decentralized systems? And the reason for that is any system, as long as you are secured by Bitcoin share security, you can be trusted by Bitcoin and become a legit Bitcoin L2. So I think there's something wrong with the display. I'll see if I can fix it real quick. I think it's, yeah, I think it's getting better now. We'll see. Okay, so we want to take take Bitcoin staking one step further. Is that to create liquid staking on top of Bitcoins? So a few problems with Bitcoin staking is that if you like stake to these POS for Bitcoins, it's actually losing liquidities. Especially like Bitcoin price today is like highly volatile. It could pump from like 51,000 to 64,000 actually like this week, like within just 5 days, and it's up like 21%. So we definitely do not want to lose liquidity for like 1 week or two. And also too, so current thing is that with Babylon, there is no like small amount of staking. So like you only have to stake to amount that you can become validators of at least one POS. So this is not very friendly for retail stakers, and we want to take that into account. And also, there is a risk of being slashed. So there are like, this POS, there are all these kinds of things could happen to these POS. Like they could have design flaws, they could be like controlled by the malicious majorities, and also there could be operator system errors that are causing the assets to be slashed. So on top of that, we actually build this Lorenzo liquid staking. So the Lorenzo liquid staking allows stakers to keep liquidity of the Bitcoin stakings by getting liquid staking tokens at the same time. And also, one more thing is that a lot of the problem with BTC staking is that a lot of these POS would have concerns. If we got staked by your tokens, that sort of kind of reduce their tokens' utilities in terms of staking and also paying rewards for that. So what we're going to do in return is that if you can be staked by like Bitcoins in a POS and getting secured by Bitcoins, we can actually trust you in putting more liquid Bitcoin tokens into that ecosystem. Like it's more safe to do so. So if there is $1 billion of Bitcoins to be used to secure the POS network, which also means there's also 1 billion STBTC, the liquid staking BTCs, being created to the DeFi ecosystem in those POS systems. This is like the new wave, like a giant wave of liquidities injecting into any of these DeFi ecosystems. And also we will accept like retail stakers, is that we're gonna do like the staking aggregations into one delegate account and also stake that to the Babylon chain. And also we will provide a number of mechanisms to guarantee the safe staking and mitigate the chance and the loss when the slashable events happens. So the one complication between like Bitcoin staking and Ethereum staking is that Ethereum staking is like more simple because everybody stakes to Ethereum. This is like the biggest pool of staking, and it's like also like hopefully providing the highest yield for staking as well. So there is like no portfolio management, and there is like no difference in different people's staking positions. It's just basically everybody stakes to Ethereum. But for Bitcoin staking, it's kind of different because Bitcoin is not a POS system. It does not need to be staked by Bitcoins. But like all these different POS outside of Bitcoin needs to be staked by Bitcoin. So different people could have different opinions on which POS system they want to stake to. So different people having different opinions, so it's very difficult to get everyone to stake on the same portfolio. So to make things easier, we actually provide this thing called liquid staking plans. So for the liquid staking plans, it contains like a few things. One is the portfolio of POS systems that to be staked or to be restaked. And also the length of the staking cycles, which that you cannot be unstaked during this staking cycle. And also the last one is the unique delegate vault associated with the liquid staking plan, which is a custodial multi-signature Bitcoin account on top of the Bitcoin network. So this is like the liquid staking plan. And for that, so we're also going to do some like portfolio management kind of stuff, is that we're going to create a number of different liquid staking plans of different portfolios and also different staking plans. So stakers can choose the right plan and the right portfolio for them, and also the right staking cycles based on their like liquidity tolerance and also the yield expectation as well. So we're going to create this STBTC, which is the liquid staking tokens with every assets being every BTC tokens to be staked to secure the networks. And the value of this STBTC can be derived by this equation, which is the BTC intrinsic value plus the staking reward with the BTC share security. And once you got this STBTC, you can just reinvest it into the DeFi ecosystem and grant you extra rewards, and also minus the slash punishment. So in order to make it more promising and also keep this the values packed between STBTC and the BTC, we need to mitigate the chance of slashable conditions to happen. And also in order to manage BTC staking, BTC liquid staking, and also the distribution of rewards, so we need to create this Lorenzo app chain. So this is the EVM compatible chain in the Cosmos ecosystem. We'll create features for users to manage liquid staking through Babylon. So it provides basically the trust assumption is two things. So our app chain is secured by BTC share security, which is staked by Bitcoins. And also we have this block anchoring mechanisms. Is that for our app chain, every 3 seconds it generate a normal block, and every 10 minutes it generates an anchor block between Bitcoin network and our app chain. So we write the block, Bitcoin's block headers into our chain, and also we write our block headers into the Bitcoin chain as well to achieve a two-way anchoring. We also have this Lorenzo DAO. So it has like a few features with our native token holders. So they decided what the portfolios to be approved, and also they voting on the commission fees we were to charge for providing the service, and also voting on important governance issues, and also executing on security like rules. So the whole user journey would be like this. So staker would come to us to pick all of this POS to stake to and find the delegate vault on the Bitcoin network. And then they can just like lock up their assets to this delegate vault associated with that plan. And we could confirm that their staking is in place, and all these staking will be start to working. So, and also like the node stakers can just delegate to these operators they want to be assigned as validators in those POS networks through Babylon. And also, if they want to unstake, they can like request for unstake on our app chains, so we're gonna process that. So by the end of the current staking cycles, we will be like return the Bitcoins to them, and also like distributed all the rewards during their staking period to them as well. So like why, and we need to adopt like Bitcoin securities, and how can we use that to actually scale Bitcoin? Right. So there's like a proven successful way to like expand and to scale Ethereum has been modularity. So if you look at this graph with all these like different projects, like icons in it, actually like Ethereum essentially today is just a DA, though it's like a very powerful DA with all of the smart contract execution and the settlement, consensus, storage, has everything in it. But there are other alternative solutions come up to scale it, including like EigenDA and Silencia, like Avail and all these projects for DA, and also for rollup SDKs, and also share sequencers, and also L2 is a service on top of that. So why don't we do the same thing on top of Bitcoin as well? So Bitcoin essentially is just a DA which is too slow and too expensive and lacking the execution of like Turing complete programs. So of course, I think we can do that. So the idea is the similar. So we can use DA to expand the storage. We can use consensus and settlement to like expand like the settlement powers. And also we can create different VMs on top of that to making it more friendly with developers like editing, like coding with different languages. And we provide management tools on top of that. So the question comes, like, why should we trust any of these modules? It's like Ethereum. So why would Ethereum trust any of these decentralized systems like used to scale it? It's because like they are kind of secured by Ethereum either by restaking or some equivalent ways. So everyone is on the same trust base. So we can do the same thing for Bitcoin as well. So as long as these different modules used to scale Bitcoin are all staked by BTC and adopting BTC share security, then like we are all on the same trust basis. So we can use that to scale Bitcoin, and Bitcoin can still trust their results they are giving it to Bitcoin. And also one more thing is that one more reason to do it is that we can actually using this way to settle any programmable assets on top of Bitcoin. So if you think about the four components like in any programmable assets are like four things. One is the metadata used to define these assets. Two is the executable, the program associated with that programmable assets. And also we have the state, which like all kinds of state and also like supporting data like for these assets. And also four is we need to have some sort of validity to prove that the state of assets is actually correct. So build on these like primitives, we can actually do such kind of things. So for all of the metadata and executable and the state and also validity proof or whatever proof we use to prove the states, so we can all store them on a DA adopting BTC share security that Bitcoin can trust. And at the same time, so we can write the root hash and also the reference like hash could like user could find all these like supporting data on DA and settle these data on Bitcoin. So if we're going to use them in any of the execution EVM or like other like VMs, we can just load data from the two parts from Bitcoin and a DA layer and just load them into the VM we use. We execute them, update the states, and also we like settle them back on these two DA layers. And also, like one point I always like to say is that the only reason that there are so many blockchains today is because Bitcoin actually didn't do a great job, a perfect job as a blockchain. So Bitcoin is great, but it's not perfect. So it's time to bring all of the greatness back to Bitcoin, right? So with like all these like modular stack of L2, so we can actually just adopting any existing technologies to build it on top of Bitcoin. So if we use like EVM plus like POS, essentially it's just like Ethereum isomorphic Bitcoin L2. And if we, for example, we use like move VM at like Aptos BFT, like essentially it's just an Aptos isomorphic Bitcoin L2. So any architectures can be like technologies innovation can be bring back to the Bitcoin ecosystem. And also, like we talked about, we can actually settle any different assets types back onto Bitcoin as well. That is means to bring more users, more communities, more capitals back into the Bitcoin community. So we would like to talk about this, like why liquid staking and also this like modular L2 stack actually has such a good synergy, is that we can actually like using more Bitcoins to secure the overall network, to allocate more TVL to like secure the entire ecosystem. And at the same time, we could launch L2 as a service to help launching any like Bitcoin L2s or Bitcoin app chains to solving all these kind of problems to scale Bitcoins, to bring in more users, like more revenues and more capitals. So like with more TVL, we got more revenue and more income, and with more revenue and more income, so we can get more TVL to secure the overall network. So that's pretty much what I want to talk about. So we still have like 6 minutes. So feel free to follow our social network. And also we have like a booth at the 206. So feel free to come by and have a chat with us. And also we are hiring. So if you're interested in joining our team, so please email to career@lorenzo-protocol.xyz. Yep. So if you have any questions, feel free just to ask me. Yep. Thank you. All right. I think that's it. Thanks everyone for coming.
Hi. I gotcha. And then, are you sitting on the couch? Oh, yeah, you can pull it out automatically. That's just the plug.
Okay, everyone, welcome back. Really excited to be here. My name is Melissa. We are entering our DAOs and communities track era. So yeah, we're going to be talking about cracking the Asian market, a growth center for Web3 users, consumers, and developers. So please welcome to the stage Cecilia Lee, partner for Formless Capital, Sean Lem, founder of Artichoke Capital, Nicole Zhang, partner of Lingfeng Innovation Fund, and Jacob Koh, founder of Superscript and Safe. Thank you, guys.
Hi, everybody. We'll do some quick introductions, and then we're going to jump into cracking the Asian market, right? Why is it important, how to build for it, and what's exciting about it if you're out there as a builder, investor. So my name is Jacob. I'm a GP at Superscript. We're an early-stage crypto fund based out of Singapore. We were seeded by Temasek, and we've been investing for 2 years now across various projects in Asia as well as the US. So over to you, Sean.
Hi, everybody. Hi, everybody. Can you hear me?
Yep.
My name is Sean. I'm the general partner at Artichoke Capital. We're an early-stage fund, also based out of Singapore. We launched the fund in 2022, but it's sort of an institutionalization of what we've been doing since 2014. And so we're here always looking for interesting projects and teams that are building something interesting.
Hello everyone, Cecilia here. Actually, I manage two funds. So one is called Formless Capital. It's my own boutique fund investing across Web3 and Web2 projects. Also managing, I think if you guys know the Mask token. So actually I'm managing the Mask Eagle fund as well. So we invest into early projects, help the founder to build from 0 to 1. So we have various portfolios in Asia and in the US, nearly cover all the aspects of the blockchain area. So happy to talk to you and support you in the future.
Yeah, my name is Nicole. I come from Lingfeng Innovation Fund. I'm the partner there. We started in 2022 as well. We have about 28 portfolio companies. We focus on early stage, and then we re-up along the way until the project gets listed. We don't really have any preferred sector. We are interested in anything that makes sense. I guess our strong suit is more like doing a lot of portfolio support. We're very good in terms of marketing, tokenomics design. We have a lot of experience in terms of like Web3 products and get listed on centralized exchange. Hopefully can provide some insights for whoever wants to get some Asian perspective.
All right, so we've traveled a long way to be here. Asia is pretty much on the other side of the world, 14, 18, 20 hours away. Why? Like, why would you even think about building there? Why is it important? What is it about the Asian market, guys, that is great?
Like, starting with me?
Or anyone. We'll jump in.
Well, for obvious reason, Asia is gigantic. China is about 1.3 billion population. India is like huge as well. Now they surpass China's population already. And then I guess most important, what I like about like Asian culture is that people has very high risk tolerance, and also we are quite technical in a way. Like we were kind of forced to learn a lot of math, and so crypto is something quite attuned. Like for example, I used to work in the largest exchange for crypto. When you calculate the ARPU value, Asian market is really impressive. They are like literally 100x of Turkey, of that's in Nigeria. The reason being people trade a lot of contracts and they understand it. And they have their own peg and they study the projects and so on. So if you want to build quality projects that has a lot of liquidity, I think Asia is definitely the go-to place. Yeah, and other than that, I guess the other panelists can cover more. Maybe pass over to Cecilia.
Oh, yeah, so I think if you think about Asia, what do we have, right? We have people. So we have a lot of people across the various different country. And just back to Nicole's point, we like to bet, we like to invest, and we have, I think, the highest amount of a saving account in our pockets. So if you ask a lot of like U.S. people, so what's your, if anything urgent happen, do you have enough saving, to cover it? So I think I read the data. A lot of, the spending behavior is different. So here, spend in advance, and you spend for the future, and then you pay credit cards, right? But in our Asian culture, we accumulate, we save. So we have a lot of dry powder on the side to deploy. And also, I think a lot of you maybe is the infra or application builder, right? Or wallets builder. So what do you want? What do you want to make to your next, to get a VC for next funding? You need momentums. You need users, right? You need tractions. So where to get those tractions? You need to go to the place where they have users, and also user with spending behaviors and a user with a lower education cost. So that's why I think Asia is the best place, because we are so used to use Alipay, use WeChat, we play with TikTok, anything in our life is already digital. So I think the education cost is actually very low. And beyond that, we are one of the core dev center as well. But I think I will leave the other panelists to cover the points.
Yeah, I think Nicole and Cecilia covered most of it, but just like a quick stat, right? So in terms of just sheer number of people, obviously Asia is large, over half of the world's population. But in terms of like Web3 native people who own crypto already, I think the stat is somewhere around 250 million people, right, that own crypto, and that's like, I think 6% penetration, less penetrated than the US as an example. So, the pool is already there, but it's also growing very quickly. So I think that's very exciting if you're a builder.
Yeah, so my perspective is the following, right? When you think about Web3, it's the internet. It's global. You could launch a protocol, and if you do it right, you have a good product and a great community, you can go from 0 users to millions in weeks, in months, and so on, right? And someone had mentioned it before, Asia's got a lot of people. It will have the best chance of helping your protocol or product go viral if you are able to tap into that market, capture the zeitgeist and imagination of the people there. A couple of things I just want to flash up as well. This has mostly been touched on, but from a numbers perspective, someone had mentioned there's billions of people in Asia. It's like 4 billion, half the world's population. That's over half the world's GDP as well, right? And when you take that population number and you tap it into the savings comment that was made, that's quite a bit of a force multiplier. You have high population with savings that are willing to enter into liquidity pools, that are willing to play around with tokens and enter communities. And I think, Sean, you brought up this point about penetration. I'm not sure if you want to say any more about that, but...
Self-explanatory.
Yeah. Largest population, largest number of crypto users, but the penetration rate is still relatively low in Asia. So the ceiling is very high, essentially. There was someone that mentioned something around developers, because developers are at the core and the lifeblood of crypto. What have you guys seen in terms of the developer talent within Asia?
So I maybe go first to answer this question. So I think, ironically, so several top tier, CK were like infras. So the main dev team is either in China or either like built by Chinese developer. So they are really the team behind the scene. Same for gaming area as well. So a lot of like the very famous projects we know, either they are purely built and launched by the Asian team, such as Axie, such as some others. Pixel, who just got listed on Binance as well. But also I see a lot of like other like big AAA games. Actually, their dev shop is in Vietnam. So I think Asia is really a very high density of like talents, and comparatively the production cost is comparatively low as well. So I think if your project is looking for talents or looking for ideas, there's actually a very good base of dev base in Asia.
Yeah, I think if you look at the chart, right, so obviously compensation for engineers in Asia is lower. Doesn't mean the quality is worse. Actually, there's a lot of very talented developers in Asia. And I think this is something that's pretty exciting about crypto as an industry in general. I think this is the first industry that is actually truly global, where there's no one single hub of talent. I mean, if you just look around, like there's people flying in from everywhere. And so I think the best teams are able to sort of like compose their team with the right mix of talent around engineers and teams based in the US and Europe and Asia. And you're able to sort of get the best of all worlds and have a 24/7 team working on stuff all the time.
Yeah, I guess like just one more point to add. So right now, like crypto adoption is really at infancy. If we talk about developers, we're probably like less than 0.1% of the whole developer community. In China, it's like really huge. Like this kind of tech companies, like Alibaba, Tencent, TikTok even. So these companies, they actually hire pan Asia, and like for example, Alibaba has a huge army in Singapore covering the ASEAN area. So they have the tradition to train and groom high quality developers to build better products. And these guys, right, they can be easily converted, like a Rust engineer, like React JS, whatever these guys, right? If you ask them to code Solidity, it's a piece of cake. So I'm saying if we're talking about like growth for the global developer community for Web3 and crypto, we should definitely focus on the Asia developer pool.
Awesome. So I know that we've kind of generalized Asia right now, right? So you're hearing, okay, it's low cost of living, there's a lot of great developers, there's a lot of people, but Asia is a huge place, and there are a lot of different countries, a lot of different regions. So if you're a builder, if you're an investor, let's go through some of the different countries and their characteristics and like how we would break them down. And maybe we can start with Korea, if anyone wants to tackle that.
Yeah, Korea as an example is pretty interesting. If you think about gaming as an example, the gaming industry is huge in Korea. And actually, there's several very large traditional gaming companies that are now investing very heavily in the crypto ecosystem, just because they see the sort of the promise and potential that this new technology can bring to the industry. And so, it's a very sort of tech savvy and very, very digitally native market. So, it's there's a lot of interesting things in Korea. I encourage you, if you're interested, to go head out and check out Korea Blockchain Week towards the end of the year.
I will add a couple of things to that, because I know a lot of Korean people, my wife being one of them. Okay. So there is a culture of risk-taking in Korea a little bit. Society-wise, it takes a lot to succeed there. And so there's a bit more of that entrepreneurial edge when it comes to crypto. I think some of the largest protocols have been launched in Korea. Some of them have not done so well either. But it's that culture of getting involved. There's really high penetration rates in Korea as well, because they have some of the best and fastest broadband. So being digital is actually built into their culture. And so I think that's a really great geography in terms of finding people who are well versed in crypto, DeFi, and as Sean mentioned, sort of gaming as well as IP, right? Given all of the content that comes out of Korea. Should we move on to another one, or do you guys want to add?
I guess like gaming is a very good example. Like there's a project called Wemix. I think a while ago, like FTX invested a long time ago. Even though that doesn't do well, right? I'm just talking about like the size of like Korea gaming industry. So that project is probably not even like 0.001% of their revenue. So the company, like this crypto project behind it is actually a gigantic gaming company called WeMade. So what's interesting is that like they, unlike other traditional tech companies, they really cherish their feather. They worry about their reputation. I think Korea has higher tolerance, even though for big names and brands. So yeah, like as a fact, I actually know that WeMade has a huge arm of Web3 team. So yeah, just like one small example to add over here.
Yeah. So I will just add several points on Korea. Then I will talk about maybe Hong Kong and part of Singapore. I will leave Jacob to fully cover Singapore as well. So I think Korea, yeah, indeed. To back to Nicole's point, nearly all the big company that I know, we invest in the Clayton. We also know Lion. So the Korean Lion, the chat app, the Korean arm is also building, Elixon is a game chain as well. And also come to us, which is a big cross-border, both Korea and a US publishing firm. So they are building their game chain as well. So I think if your team is building any gaming infrastructure, looking either for funding or partnership, I think all of them are quite open. So you can easily approach them. So I will talk about Hong Kong and Singapore as well. So we will leave China alone. So, because it's kind of gray in China, but I think in China we cannot do crypto. It's still banned. But just a lot of team, if they do want to do Web3, they need to came out of China to either build or set up a separate foundation. But I think alternatively, Hong Kong really sees the this opportunity, right? Because in the recent years, Singapore took a lot of business from Hong Kong, so on the traditional business side and also entertainment side. So Hong Kong really want to sign Taylor Swift, but can't because Singapore just signed an exclusive deal for the concert. So
With a Taylor Swift concert, right?
Yeah. So I think the Singapore government is really fast because they are independent. They can make the decision very fast. So take away a lot of business from Hong Kong. So that's why Hong Kong is saying, we are the traditional, we are the old financial center. How we do about it? What do we do about it? So then they are very welcoming crypto people to be back. So they recently just give several licenses to some of our partners, right? Hashkey and some other, OSL on the crypto exchange license. And they are building a tech center to welcome all the talents and the teams to build in Hong Kong. Actually, if you want to find a venue, if you find development grants, Hong Kong government is very welcoming to support you to build your center there. But on this other side, I think Singapore changed the mind from very open to crypto, but a little bit conscious due to the FTX situation. But also if you think about the character, right? So Singapore just launched new rules about crypto. They don't allow you staking. They don't allow you to borrow to invest as well, because I think that's just the character of Singapore government. They are very efficiency, but also a risk control driven. So, but I will leave Jacob to cover the all character of the Singapore side.
So we've kind of gone from large countries like Korea to city-states, kind of like Hong Kong and Singapore. When you think about city-states, they're more likely and quick to legislate, put into rules and frameworks, because it's like an experiment, right? I think one of the great things about Hong Kong is that they are experimenting and they are opening up. They've realized, like many other regimes around the world, that stable coins are the real crypto that's got product market fit, right? Because that's how you then onboard into other crypto. And so they're building a framework around that. The same thing in Singapore as well. Government-wise, they are very efficient. They are very well-versed on blockchain technologies. The Monetary Authority of Singapore is also putting some of these guidelines in. I think what both of these places are is that they are a hub for talent. They have high cost of living, so you typically won't see a lot of developers there, but you might see some project leads there, or business development leads, or marketing, because everyone's kind of situated in these high-density cities and locations. That said, what I can see from slightly different approaches here is that Hong Kong has sort of opened up exchanges for consumer retail, whereas Singapore is a little bit more cautious on that, right? And that's, as Cecilia had mentioned, is more a risk controls perspective. But if you're a crypto project and you want to build and situate yourself in Singapore, you have a lot of sort of government support. It's very easy to set up companies. And there's very sort of clear rules and legislation for people to come in and set up there as well. It also doesn't stop you from using exchanges, but of course it's buyer beware. And I think they're not going to necessarily promote it, but they are supportive of the industry in general. One more region that we didn't touch on was so we showed a graph earlier where there was high cost of living and low cost of living. But we've literally just talked about the high cost of living countries like Korea, Japan, Singapore, and Hong Kong. So what about the other countries? Because we now know that DevCon is going to be in Thailand this coming year, which is very exciting. So what about those countries and their crypto ecosystems?
Yeah, I guess, when you talk about crypto, there's a few different sort of types of crypto, right? It depends on what you're building. If you're building something that's like sort of financial crypto, financial intermediaries, stable coins, exchanges, then the places you want to be are places like Singapore and Hong Kong. But Singapore and Hong Kong are both like small population places, right? They're very, very expensive places to live and so on. The rest of Asia, if you're looking for users, say you're building a consumer app or a social app or a game, I mean, there's lots of examples of previously very, very successful, Web3 games that have gone viral, and most of them sort of like seeded really in Southeast Asia, right? Places like Vietnam, the Philippines, Thailand, and so these are all places where Asia really has like a, to points made earlier by both Nicole and Cecilia, there's a population that's very interested to try new things. And willing to experiment, and they're already onboarded into the crypto ecosystem and sort of maybe have wallets or understand how you play some of these on-chain things. And sort of the other very large sort of market that I don't think we've spoken enough about so far is India, right? So it's going to be probably the biggest country with the biggest population in Asia soon, India and crypto exchanges have a sort of shaky relationship, but the funny thing is every time the crypto exchanges sort of get banned in India, the grassroots adoption of crypto goes up. And so again, it's a very young population, very digitally native, a lot of developer talent, and a lot of users. And so all super exciting sort of places, and again, depends on what type of product you're building and what you're looking for.
Then I will maybe mention Vietnam in this sense. I think Vietnam is a long-lasting already dev center for a lot of gaming company in China and Japan before. But now I think they develop and find out Web3. So actually there are a lot of like gaming studios in Vietnam, and they have built or launched quite several very successful Web3 game as well. And on the other side, as Da Nang is we call like Eastern Hawaii, cheaper Hawaii. So actually you have the best whale and the best Degen community there. Actually, we know a lot of like retired, we're a lot of solo trader, with solo Degen, we're liquidity provider, market maker there. So actually you can easily find either like a very young, tech-driven building communities, but also as well as a very sophisticated Degen trader, or like a Degen users for your projects as well. So I think, and I really like Da Nang. It's cheap and very comfortable. So really recommend to explore Vietnam. We are sad to say because of the policy issue of China, but basically they are saying Ho Chi Minh is the rising Shanghai. Sadly to say it, but it's the rising new Shanghai in Asia. Actually, a lot of Western people, if they get out of Shanghai, they move to Hanoi, they move to Ho Chi Minh. So I think Vietnam definitely a very dynamic country to look into.
Yeah, I think my friends cover most of it. This is really informative. I guess one more thing I want to cover is actually people are liquid. Even though the team is probably, there's an Indian native or there's a Vietnamese Chinese native, they could be based everywhere. I think these days I see a trend that a lot of Indian teams, very high quality developers, they actually move to Dubai. I think one of the good examples is actually Polygon team. They actually brought a lot of like kind of their influence and network over there. So it's a very good area that you can actually find your fellow kind of developers, soulmates, co-founder, however you call it, and also a good place to find capital. I think Dubai right now already have some sort of like Web3 kind of like hub, a go-to destination. Like if you guys interested, you should definitely check it out. And then to echo Cecilia, I think Vietnam has also very kind of systematic way of funding early stage products. They have many VCs over there. Like they can help you to reintroduce local resources, and they are all extremely helpful.
Okay, so we've basically spoken to this wonderful audience for about 20 minutes about how amazing Asia is. Now, what are some of the downsides, right, of the region? Like, what are some of the things that people should be wary about in this space?
Well, yeah, I'll start then. I think some of the elements actually make it quite interesting. I'm gonna pick Japan as an example. So I have a lot of portfolio companies actually have a big Japanese community. So if you guys want to explore a Japanese community, you can check out a few like a local organization. One is called Kudasai. One is like YGG Japan. They have like very good local media as well. It's called CoinPost. So all these guys will introduce you this kind of amazing Japanese users who are the best diamond hands in the world. The reason being Japan has very crazy capital gain tax on crypto. It's actually up to 55%. That's why a lot of like Japanese investors or like this kind of influencers also relocate to this Singapore or Dubai. But that being said, like Japanese users themselves, right? They are more like spot traders and they purchase a lot of IP because of the culture, right? We all know Japanese is famous for all kinds of animations and other entertainment stuff. Yeah, so this is definitely your go-to market if you want to have a very successful NFT launch or game launch. Yeah.
So I think I will echo that, but also add like a language barrier, right? For Japan, if you want to do business, you need someone local and also comparatively senior. So if you just go, if your team member go to see a Japan counterparty, basically they will talk to the person look the most senior on the team. So I think it's just the engine of their culture. You really need to respect that and to do business in their way to open the door of different venue. And also I think in both China and Korea, because we have a long history of Ponzi, Ponzi business, you know, very organized Ponzi group there. So you really need to be careful. So that's why we are here, you know. Yeah. If you are looking for helpful VCs, really we are very happy to take a reference. We're giving advices who you should talk to and giving due diligence on some counterparties, right? Some contacts you have, you know, knock your door to. Let's say I can get you listed on Korea or China or whatever. So a lot of like maybe scammer-ish people there. So very happy to help. I think my point is to respect the rules and find the best resources to do it in their own way.
Yeah, just on that point, I think what Cecilia is referring to is that it's not necessarily specific to Asia. I think it's specific to the world, right? Yeah. And when you think about tokens jumping in value very quickly, markets being manipulated, you know, some of these practices are very prevalent everywhere, but some of them have been perfected in Asia as well. So, you know, I think it is important if you are a builder and a team that's building for the long term, trying to build something of value that's not just about tokens being launched in the next 6 to 12 months. Like if you have a vision, then you just need to make sure that you are connected with the right teams, the right capital providers, the right partners, the right BD, the right support network in the region.
Yeah, I think, again, a very practical sort of perspective around like if you're a builder, founder, you're trying to grow an Asian presence either for go-to-market or to build out an Asian team. I think the big challenge is Asia is pretty fragmented. Right, so as a whole, it's a very large population, but Singapore, Hong Kong, Korea, Japan, Vietnam, you know, Thailand, all of these countries all have their own sort of like local courts and sort of networks. And, you know, trying to go to Asia as like a single region is not easy. And managing a developer team that is maybe not super fluent or super native in English can be a challenge. And so how do you sort of build that global workforce with some sort of level of like efficient communication when you're sort of like 12 hours apart, right? So, you know, I think there's a lot of interesting lessons to be learned around how you build out your on-the-ground sort of presence, local offices, and who you try to hire to manage the teams on the ground. So again, I guess that's where talk to anyone on the stage and happy to help.
And one more challenge I need to throw in there is the time zone difference with the US is killer. So, it's always like late night calls, but that is what it is. So just to finish up, we've already touched on quite a few of these points, right? Just being connected to the right people. But let's talk a little bit quickly about what are the tips to build in Asia. If people in the audience want to build, if they want to set up a presence there, like where do they start?
You talk to anyone on this stage, right? Like I think anyone on this stage will be able to help you, whichever market you pick in Asia, to get you in touch with the right, BD candidates, lawyers, incorporation, legal advice, regulatory advice, whatever, right? Like the hard thing sometimes about building a crypto is that every time you set up somewhere new, you got to sort of think about like regulatory stuff, even if you're not really doing like a financial product. And so, talking to someone who's sort of on the ground and present and understands the local issues and challenges is probably going to save you a lot of time and heartache.
Yeah, I would add one thing is that Web3 is global, right? There are a lot of builder communities everywhere. You'll meet a lot of great teammates or people, some from Asia, some from different parts of Asia. Just connect it to them, and they will literally connect you to their local communities. So for us at Substrate, we run like an open office Friday, every Friday, where we invite our friends on stage, as well as a whole bunch of builders to come in and work from our WeWork office. And there's tons of those communities in Singapore, same for the rest of Hong Kong, Vietnam, Thailand, China. So that's another way to break in. Just start speaking to people that are already here. They've literally come to you in Denver, and you'll be very easily and quickly plugged in.
Yeah, like also, if you guys are interested in relocating your family to Asia as well, I think the governments, like especially Hong Kong and Singapore, they have like great programs. In Singapore, for example, they have this kind of like special venture capital or like a fund list that can help you sponsor EP easily, which is employment paths. And then you can actually get your whole family settled in Singapore, which is really friendly for family life. And then for Hong Kong, there's a program called Celo. They actually provide free office spaces. They give you grant. I have a few portfolio who are in that program as well. What's really amazing is that the Hong Kong government really take you for a different area for roadshow. They send you to Dubai, Middle East area. They take you to Africa. And most recently, one of my portfolio company even got connected with .com, which is like the largest. It's like the AT&T of Japan. This is all like established by government relationships, and this is extremely helpful. Yeah.
And I think they cover more. And I also want to add, Singapore and Hong Kong have no capital gain tax.
Oh yeah, that's the best thing.
I think that's the best. I was based in San Francisco before. That's, I think, one of the big reasons I moved to there, right? And also, I think we're run out of time. But I think Asian VCs were like very, normally comparatively very hands-on and very involved in a lot of project development. And also, I think a lot of major players, right, or major venues are actually built by Asian founder. So I think to bridge the information gap, Asian VC can be very helpful on your future, either projects development or either your token launching, token listing as well. So do, talk to Asian VCs. We will be more helpful to take your hand to go further.
Awesome, guys. Thank you. Thank you, wonderful audience, for listening to us. And yeah, if you want to find out more about Asia, come chat to us.
pull up your presentation. So that screen might look like that for a minute because that's what's up on the live stream.
Okay.
Okay, they're popping it up there for you. So it's just screen mirroring, right? And that's what you want?
Sorry?
You just want that to mirror your screen?
Yep.
Okay.
I think this is perfect.
Amazing. What, you want to throw it into like presenter view or something?
And I'm using this one?
Yes.
Can I move it or it has to be here?
However you're ready to go, we'll get you introduced.
Sure. Okay.
Okay. All right, Melissa. All right.
All right. We're back. Gracie Chen is joining us. She's the managing director from BitX. So give her a round of applause and welcome.
Thank you for waiting. So today I'm going to quickly talk about Beget and what we do. By the way, the reason that I was late was pretty much because I went to the wrong place. The name is so similar to each other. And I guess the lesson number one here is get your name correct. Otherwise, you're in big trouble when you are buying tokens. So today, I'm going to quickly talk about us, Beget, and centralized exchange business, as well as how our tokens are listed at Beget, for example. And similarly to many other centralized exchanges, what are the qualities that we're looking for while listing a token? We have about 15 minutes. And since this is a small group that we have here, I figured I will want it to be very interactive. So if you have any questions, just feel free to stand up and ask. And later on, hopefully I can leave another 5 minutes for us to answer some questions. Lovely. So centralized exchange, SEX, DEX. Can I have a show of hands how many of you use centralized exchanges? Like Binance, Ask, OKX. Okay, so there's still a few of you that don't trust centralized exchange at all. Do you use DEX, by the way? Do you use DEX? Because you didn't raise up your hand, right? You use both, okay. So either centralized exchange or I guess many of us use both as well. Even for myself, I'm running one of the largest centralized exchange around the world. I still use DEX as well. But in terms of the comparison between SEX and DEX, SEX centralized exchanges, we do have much bigger liquidity. And actually, according to this map, it's the source are from in the block and CoinGecko. So about centralized exchanges still take about 90% of the total market trading volume around the world. So DEX versus SEX, I mean, there are different use cases, there are different reasons of choosing them, but it seems that centralized exchanges still take the majority of the volume. We do have higher liquidity and volume, and we also have more security plans around how we run centralized exchanges. So here is a graph, which is the cryptocurrency stolen in hacks by the victim platform. I think the source is from chain analysis. Especially if you look at the recent 3 years, majority of the hacks still happen on decentralized exchanges. And the dark blue color represents the centralized exchange service. Yeah, in terms of the hacking, at least, it's a much smaller amount than earlier days, than like 2015, 16, and like 14, 13. We all had heard of Mangox. Like those are massive centralized exchange hacks. But recent years, comparing to DEX, centralized exchanges is still safer. So a little bit more about ourselves. We're the largest copy trading platform in the world. So if you open CoinGecko or CoinMarketCap, and there is usually like a centralized exchanges ranking, we're usually about 5 to 10 in terms of volume. Our daily trading volume right now is about 10 billion, but today I checked, it's about 22 billion. So well, we all know that recently Bitcoin price goes up a lot. I guess that's partially the reason that many activities are happening on centralized exchanges. We have about nearly 700 tokens listed at Bitget, and I'll talk about more about our listing process. So centralized exchange is our main business, but Bitget is not just about centralized exchange. We also have DEX, especially decentralized wallet, which it was called BitKeep. Right now we rebranded it to Bitget Wallet. And we also have Foresight Venture. That's the VC part that we are their largest LP, but they are different entities. While at Bitget, we have copy trading, we have spot trading, we have derivatives, and we also provide lots of content for the market and for everyone to learn. But basically, we are growing a lot in our whole ecosystem. Right now, we have centralized exchange business, we have decentralized wallet, we have an investment arm, we also have a layer 2 that we invested in, and we also have Bitget Card, which is like a fiat Visa card that you can use. But right now, this is only for our VIP users. In terms of security and risk management, I mean, after FTX collapse, everyone cares so much about risk management. So here are our industry-leading security measures. For example, we have very strong wallet security measurement. We have risk control about our users' fund. We also implement KYC for all our users, and we pay close attention to any breach of anti-money laundering AML. We have lots of cooperations between the security vendors in the industry, but we basically, bottom line is we place strong focus around managing the risk and security. We also have one of the largest industrial called protection fund. It's a 300 million AUM fund that we place here just in case, touch wood, anything bad happened to our users. We can use this fund to accommodate their loss. So, how to list on Bitget? Can I have quickly a show of hands? How many of you are building something in the space? Like you are issuing a token, you have a project. Okay, about half in the audience. So you are my target audience right now. How do we list a token at Bitget, and what's our listing process? So I quickly wanna first of all explain what are we looking for while listing a project? What do we want from a project? So there are mainly three things. Number one, we want the team to have a strong foundation in terms of the team and the value proposition, the business model, and the problem that you're solving. Secondly, we want to see that you have a very active community. How do we measure that? So we have a research team that will look into lots of data and statistics around your social media, around your website, etc. We also want to make sure that you have a healthy tokenomics and very good on-chain data. So we will look at, for example, Dawn Analytics and lots of on-chain analysis platform to look for your DEX volume, to look for your transactions online, how many wallets that is holding your token as of yet, and whether you are listed on some other centralized exchanges or not. And especially, we kind of know the business of centralized exchange very well. So if it's like some smaller exchanges, especially there are central exchanges that have their volume very much like a fake data. So we will eliminate that. And we want to make sure that we're looking at the real transactions happening there. And here, if you are building projects in one of these themes, these are the most called attention themes recently. So actually, just yesterday, we launched this meme zone hot coins celebration. We kind of put all the meme coins on our platform together on this hot zone. And if our users are trading one of those meme coins at certain volume, they get a reward. They can split about 50,000 BGB. BGB, that's our platform token. Right now, it worth about $1. When I joined the firm about 2 years ago, the BGB price was only like 1/10 of the current price. And I do think holding BGB is a wise decision. Well, these are the themes that we are especially passionate about. So if you are building in one of those sectors, I'm very happy to talk to you after the session to understand your business and see how we may be able to help you in terms of listing. And in that process, let me just quickly explain, we actually have 4 teams serving a project. Listing team, oh, by the way, I joined the firm 2 years ago, and I managed our marketing team mainly. I signed Leo Messi, the footballer, before the World Cup. That was a great investment that we did. And last year, I also started to manage our listing team. So right now, under my team, under my management, it's mainly marketing team and listing team. So our listing team, we have about more than 10 listing managers. They speak different languages. They are located around the world, but they will be your main point of contact if you want to be listed at Biget. At the backstage, we also have research team. And the research team, they don't face the client, the project. They help us evaluate the project, and we have an internal grading system. Pretty much the major categories are what we talked about earlier, like whether you have a strong team, whether you have very active community, and whether you have a successful or some tractions around on-chain data and on your users. But basically, our research team will evaluate any project. And then our operation team and marketing team will also be involved in terms of providing some operational activities at Biget so that your token or your project can be known by more of our users. This is my TG, and I do use that TG myself. I don't have anyone managing that for me. I don't have a bot. So don't spam me, but if you have a good project that wants to be listed, or is there anything about Biget that you want to talk to me, tell me. Well, our listing process has always been evolving. So here is a few things that we will kind of evolve around market trends, about regulations, around different criteria. So even if I shared with you a few criteria earlier, those are not static. Those will change. But the bottom line is, all the centralized exchanges, we want to make sure that we capture the hottest topic in the industry. And we are also serving the best builders, projects like you guys in the space. And we want to make sure that we protect our users at the same time. So those standards and trends will evolve. And that's all for my presentation. We have about another 4 minutes. I promised 5, but if you have any questions or if you have anything that you want to talk about, I'm happy to open the floor. Thank you. We do have some time. Anyone have anything that you want to share, or anyone has any project that you are building on that you want to tell us about? And you can come up. Anyone? Okay, if not, then I'll leave the stage back to the speaker, the stage managers. Thank you for your time. I'll stay here a bit. So if you want to tell me more about what you are doing and see what we can do for you, let me know. Thank you.
All right, welcome back to the DeFi, NFT, and gaming track. Our next speaker is Dave Rodman, Managing Partner for the Rodman Law Group. So this would be a goodie. We definitely need to hear what you have to say.
Thank you, Melissa. Everybody, so I guess kind of more of a broad-based presentation, DeFi, gaming, ZK. I mean, literally anything crypto, this is going to apply. So I'm Dave Rodman, Managing Partner of the Rodman Law Group. We focus on digital assets in Web3, cannabis, and psychedelics. We're located here in Denver. I chair the digital assets and Web3 venture capital practice. I've been practicing in Web3 since 2016, so it's a huge part of my life professionally and personally. And as you've probably heard people say in the past, while I am a lawyer, unless you are currently a client of mine, which I don't see in the audience, I am not your lawyer. So this is educational in nature. So if you were reading the syllabus, the original talk was titled, "You Are Probably Breaking the Law." And if you saw what was just up, it's not that. The reason for that is that when I created this presentation, a law had gone into effect that few people other than lawyers and CPAs in the space were really aware of, and there was no way to comply with it. And I'll talk about that in a second. But luckily for the industry, unluckily for my talk, that law was put on hold temporarily about a day after it was about to fuck some people over. So this is the actual title. It's just legal considerations for Web3 founders. So we're going to cover the Infrastructure Investment and Jobs Act. That's the Corporate Transparency Act. We're going to touch on dealing with tokens, which is important to everyone in here. And at the end, we're going to discuss legal costs, because we have seen a lot of clients come to our firm, shared quotes from very well-known law firms, and blew my mind at what people thought was normal to accept for legal fees. So to kick off, despite looking down the barrel of a new bull market and getting very close to all-time highs, 2024 isn't exactly looking great for crypto projects. So the law I mentioned earlier, which is I'm going to refer to as the IIJA for ease, was passed in 2021, but it only went into effect this year. It had two major effects for people in the crypto industry. It required that all brokers or any person responsible for regularly providing any service effectuating transfers of digital assets on behalf of another person file Form 1099-B to report such transactions. This set off a firestorm in the industry as it wildly increased the scope of the word broker. And its wording cast a huge net that could, in theory, require everything from exchanges, both centralized and decentralized, sequencers, miners, validators, and many others to report transactions to the IRS. This puts certain projects in the impossible situation of having to report on things that cannot be reported on. Thankfully, there was pushback from the industry, and that has not gone into effect. But I suggest that everyone who's in crypto pay attention to that and keep it in mind, because it's going to get implemented soon. But we're not going to spend a whole lot. I'm not going to spend any more time talking about that part, because we could talk about that for 3 or 4 hours. But the second thing that the IIJA did was that it required companies to treat crypto payments as though they were cash. This is a mind-blowing requirement for anybody who understands how crypto works, and it's the actual law that influenced the original title of this presentation. The other 2024 goodie that went into effect is called the Corporate Transparency Act, and it significantly increases the disclosure and compliance burden for nearly all small businesses in this country. So let's touch on the IIJA. basically businesses that receive more than $10,000 in crypto, worth of crypto, in one transaction or in 2 and more related transactions must file Form 8300 within 15 days. This is exactly how the IRS and FinCEN treat cash payments. So what is one transaction? It's all transactions between 2 parties that occur within a 24-hour period, and it's all related transactions between parties that occur within a 12-month period. So what are the penalties for failing to report within 15 days? The negligent failure to report is $280 per occurrence. Don't worry, not to exceed about $3 million per year. Now that's just negligence. Intentional or willful failure to report, the civil penalties are the cash value of the transaction. The criminal penalties are up to 5 years in prison, $25,000 in penalties for an individual, and $100,000 in penalties for a corporation. If you intentionally file one of these reports incorrectly, then the criminal penalty is 5 years in prison, and then civil, again, breaks between individuals and corporations, but it's $100,000 and $500,000. So this is infuriating for a few reasons. It illustrates the clear misunderstanding of how crypto works and the perception amongst our elected officials that crypto is still only used for illegal activity. It also further highlights that the single best way to launder money is still through the good old US dollar. But the most immediate cause for concern is that this law went into effect on January 1st of this year, and it seems like it was designed to trip up crypto companies intentionally. The form that you would use to file this sort of thing is called a Form 8300, and it's put out by the IRS, and FinCEN uses it. And you have to sit back and think for a second, because the IIJA was passed in November of 2021. The most recent form update to Form 8300 was published in December of 2023. This is the section of that form that you would have to use to be in compliance with this law. Take a look at it and see if you can spot the problem. There is not a category for cryptocurrency. So in essence, you have despite having 2 years to prepare for this, the government put something that went into effect on January 1st, and the thing that you would use to report it literally couldn't be used to report it. So this hits home personally for me and my firm. We accepted a retainer payment on the 2nd of January. I looked into reporting it and found that I couldn't, because it would have been due for me on the 16th of January. So we just kind of resigned ourselves to the fact that we weren't going to be able to report. Luckily, the enforcement was delayed on the 16th, the day that we would have been in violation personally. But it's unclear when it's going to go live. It could go live any day now. And it would affect basically everyone in this room. There's very few exceptions to it. So this is one of those things where all that we can really do is talk to our elected officials and try to get them to undo this law, because it is an unnecessary burden on crypto companies. The second treat from 2024 is the Corporate Transparency Act. Now this affects all small businesses, or almost all businesses in this country. Almost all large businesses are exempt from this. It's billed as everything that seems to target our industry as a way to combat money laundering. But really all it does is increases the compliance costs and reporting costs for small businesses and startups. It also requires that founders and service providers like myself, who help founders form entities file a lot of personally identifiable information with FinCEN, which is the Financial Crimes Enforcement Network, proactively. Now, I've done this kind of as a test. It is not the hardest thing in the world, but I had to give all my personal details to the government in one nice little database that seems like it would be an optimal honey trap for any bad actor. But who is covered by this? Owners of a company with at least 25% equity ownership, individuals like me who help form companies, but also the founder who directs me to form a company, CPAs, paralegals, other providers like that. Beneficial owners. So 25% ownership, that makes sense. You're a beneficial owner. But let's say you're a director that has no equity, or you're an officer that has no equity. You are also a beneficial owner, and you also need to comply. What do you need to give to the government? Your full legal name, your date of birth, your complete current address, and a valid government ID. If your government ID expires, like mine just did, it is my duty to go and fill out a new FinCEN form and upload my new driver's license. And if I don't, my law firm, and then by extension me, can get in trouble for not staying in compliance. When is this supposed to happen? For any entity, anybody in here with a company that was formed prior to the 1st of this year, you have until the end of this year to make this filing. If you form an entity in this year, you have 90 days from the date of formation. So form it today, 90 days. If you don't do it, you're in violation. Starting on January 1st, 2025, you will have 30 days. What are the penalties? Failure to report accurate beneficial ownership information, fines of up to $10,000, and imprisonment of up to 2 years. People talk about this part all the time. They don't seem to talk about the potential corollary to this, which is that the CTA requires the company and the people working for the company to hire, to handle personally identifiable information, and there's a lot of just general civil risk around that. But in addition to that, the CTA also says that if you misuse this information, which they haven't really defined what misuse means, fines of up to $250,000 and imprisonment for 5 years. So these are the gems that we were given this year, and I can guarantee you that crypto companies are going to be the ones that see this kind of scrutiny before any other companies, because it gives the government another sort of wedge with which to mess with our industry. So basically, you need to take the CTA seriously, is what I'm saying. Talk to your lawyers, talk to your CPAs, make sure that you are filing what you need to file in a timely manner. I'm going to switch gears now. I didn't realize I had this short amount of time, but I'm going to switch gears and talk about some of the other things that are very important to founders in this space, and that is capital considerations. So the de facto industry standard that has kind of become prevalent, which drives a lot of lawyers bonkers, is this safe and token warrant combination. When you think about it, what this effectively does, because we all know that the tokens are going to be created offshore, this requires a US company to sell the securities of another entity. We all would argue that tokens are not securities, but a warrant, a token warrant, is without a doubt a security. This brings broker-dealer rules into play and makes the whole process of raising capital much, much more risky. So instruments that pertain to both tokens and equity sold by a US company are not the way you want to do this. And we have case law on this. The Telegram case clearly lays this out. So do not do a safe and a token warrant. I tell this to all of my founders, and they will say to me constantly, well, that's what Acrylic wants me to do. That's what Dragonfly wants me to do. That's what Polychain wants me to do. They're not your lawyers. They don't care about you. They don't care if you go to jail. They don't care if you have fines. They just want their returns. They are not your friends. your lawyer has a ethical duty to make sure you do things correctly. So, what do? You have if you're going to issue a non-priced round, you use a safe out of your U.S. co, and you do a SAFT out of an offshore entity. This is by a way the easiest and safest way to form to raise money with tokens and with equity. Also, before you start any of this, you need to decide whether value accrues to the token or to the equity or to both. It might change the analysis slightly, but if you're going to talk about both, you need to split those instruments up. So the offshore entities are expensive, and I recognize that. So a lot of clients are forced to do at least a little bit of raising with a dual instrument. So rather than a safe and a token warrant, again, a warrant is a security. I can't emphasize that enough. A safe with a vague side letter that mentions tokens in a sort of abstract manner is far safer. So this is the structure. This is how you do it. Use a company in Wyoming. Wyoming is the safest place in America to issue, to have any kind of token project. From there, you create a token issuance structure. Foundation company in the Cayman Islands. It has no owners, and that is the intention of the structure. It owns a company in the Caymans that's the equivalent of a C Corp in America. And then that owns a token issuance entity in the BVI. The BVI is the only place in the world that it makes sense to issue tokens from at this point. Hands down, no exceptions. That's where you fucking do it. Now, we used to also throw the OpCo in the BVI, but about 2 years ago, they changed the way, they changed the laws, and they made it difficult for OpCos to function under the law there. So we've added to our structure. Panama is where you put your OpCo. Panama does not regulate crypto, and at least what you're doing there is not illegal in that country, and that's about as good as you can get. You'll notice that there's a thing called a secretary and a supervisor. Those are third parties that you pay for them. And you can also pay for a professional director. The secretary is mandatory and is usually included in the formation fee. The supervisor and the director, I have some clients that just are the supervisor and director of their own project. Otherwise, you hire somebody. Honestly, hiring somebody is the better way to go. So, token issuer, it sells SAFs, it does IDOs, it does IEOs. DevCo, Project Co, Business Co, whatever you want to call it in the US, sells safes, issues equities in a priced round. Whether or not you do both, once you get past the bare minimum to like move stuff offshore, if it entirely depends on your project. But if you're going to have value accrue to both places, that's how you do it. On top of that, you need to do all of your equity sales under Reg D, which is an exemption to the U.S. securities laws. 506C in particular, and I know I'm saying a lot of jargon that you might not know. Either come up and talk to me afterwards or talk to your lawyer. They'll know what I'm talking about. But that's how you handle equity in America. For your sales of tokens or your sales of SAFs, token purchase agreements, SAFs, token warrants, whatever, you want to be able to rely under Reg S. Regulation S was designed to allow me, an American, to go to France or Canada, Germany, buy equity in a French-German Canadian company and not be regulated by the US. It was not designed for the Zoom age. So to make this work, all of your purchasers should be offshore because you're probably sitting at your home in America or talking to a fund that is domiciled in America. So you want to be able to say that the solicitation didn't happen in America. There's no real case law on that yet. So what you need to do is make sure that the buyer and the seller, so the seller in that case is BVI, the buyer needs to be non-American as well. This is the most defensible way to sell tokens by far. Quick note on SAFE, and I only have a minute left. Post-money SAFE, investor-friendly. Pre-money SAFE, founder-friendly. Investors will try and push you to sign post-money safes. They will make it what sounds like compelling arguments for you to do this, especially first-time founders. Do not believe their lies. Post-money safes give investors full ratchet anti-dilution protection at the expense of founders and their employees. You'll have to fight, you'll have to stand your ground, but ultimately, that couple of percentage points that you save, you and your team, can be life-changing. Some fund, some angel investor making $100,000 checks, those percentages aren't life-changing, but they still want them. So advocate for yourself, have a spine, and stand up for your equity. Don't let them bully you. Trust me, I've seen it done, and I've seen the founders who do stand up for themselves. Eventually, they have better relationships with their investors because they know that they can't be pushed around. Always push for pre-money safes. And finally, all right, I didn't get to talk about the legal costs, but do not spend $300,000 on your lawyer. Do not spend $500,000 on your lawyer. These are all quotes that we've gotten this year. They are insane. It's malpractice. You should spend no more than 50 grand and likely about 30. So if you're getting quotes like that, you're being taken advantage of. That's it. Thanks, guys.
Hello, how we doing, ETH Denver? Awesome, thank you. So we are very excited for our next speaker. Up next, we have Renee Rainsberg from the Celo Foundation. Give it up for Renee.
Okay. Hello, everyone. Good to be here. I am going to do this in a bit of a two-part talk. First part, focusing on Celo's transition to becoming a layer 2. And the second part, talking about the thing we've always been doing, which is onboarding real-world use cases and billions of people across the world that need access to this infrastructure. So probably most people have seen this by now or heard this, but yeah, back in July at ECC, C-Labs, the core team working on the Celo protocol, made a proposal to the community about Celo migrating to become an L2, and it was met with overwhelming support and excitement. And you know, from a high-level perspective, like, what are some of the considerations, and why does this make sense? Why does it make sense now? So in a nutshell, and maybe even some history on Celo here, we actually started building some of the very first stuff on Ethereum, but a lot of the things we were trying to accomplish in terms of the use cases we're looking to power, like micropayments, those weren't feasible on Ethereum at the time, and that led to the decision to fork Ethereum and, you know, start what in the end was the first EVM proof of stake chain. And with some of the recent developments in the space around Ethereum scaling, you know, around EigenLayer kind of proposing EigenDA, there suddenly seemed a path for Celo to maintain all of its really cool features, which I'll dive on in a minute, for these real-world use cases, but also be a part of the bigger Ethereum ecosystem and not only help onboard people to Celo, but really onboard people to the entire Ethereum ecosystem and digital economy. And so I mentioned EigenDA. The other cool differentiator here from an L2 perspective is that we have a really strong validator set and community, and you know, this is really something that I would consider an asset for Celo and the Celo ecosystem. And so the idea was kind of, you know, brainstorm to actually have those validators become sequencers and have a decentralized sequencer. And so also from an architectural perspective, a really neat design. Now, what happened, and you know, the best place to go for this is actually the Celo forum, forum.celo.org. You know, there's a lot of people working on Ethereum scaling and many smart minds in the broader space, and so it's actually turned into a very lively discussion around the trade-offs between different stacks and what architecture you know, Celo should ultimately migrate to. And so the C-Labs team has been working very hard. If you want to follow along, the forum is a really great place to see some of those updates, and obviously work is happening in parallel to move us to become an L2. The first hard fork has already been completed. And so if you're not like the forum type and you rather listen to a podcast, you know, kind of content on your phone in the gym, I highly recommend L2 Unplugged, which had already had a set, you can see it here, of really some of the thought leaders around Ethereum scaling and some of the different you know, infrastructure protocols and providers. So highly recommend that. You know, we're really at a point now where we're looking to make that decision, and obviously in a very thoughtful way, but the priority is to have Celo become an L2 as soon as possible, but do it in a way where, from a user, from a developer perspective, that's happening in the best possible way. So maybe one call out there, because I've had a few conversations on the floor. There's no new chain, right? So for the existing developers and users, there's no need to migrate to a different chain, but it's an upgrade to the existing chain. So let's shift gears a little bit and talk about, well, why we are here. You know, all this infrastructure is cool, but what are we really trying to achieve at the end of the day? And that, since the very early days of Celo, has been about onboarding billions of users, ideally. Let's start with 1 billion. And how do we get there, right? I think the key insight early on, as we were, even with that Ethereum wallet we had built, taking that into different markets, into different communities, it became clear that there's a massive opportunity to actually build for mobile users, Web3 mobile, and bring a lot of the experiences that people are building collectively here onto that small screen and make it really accessible. I won't go into too much detail here, but I'll share this. There's a lot you can find also on the Celo blog around some of that user research, and we're trying to do all of this in the open and sharing it out with the community that's ultimately building a lot of the applications, right? Understanding what are the mental models, when it, for example, comes to, in this example, payments, right? How do you translate those mental models to this new Web3 world? And so to tie this maybe to a particular example here, this is with someone on a user research trip in Nigeria who basically said, look, if I want to send someone money, I just need to know their phone number, right? And so one of the early Celo insights was to actually have a primitive, a protocol called Social Connect on Celo that does a trustless mapping of phone numbers to wallet addresses and facilitates that from happening, right? Not in a centralized way, but in a decentralized way. Yeah, maybe I'll skip over this. I'm running a little bit low on time here, but basically, if we take all these insights we've collected along the way, and we've been now coming up on 7 years of building on Celo, there's a bunch of features that I really think today still differentiate Celo, and I think attract a lot of builders to the Celo ecosystem. And we've seen this even recently with people probably have followed inscriptions, right, and kind of scalability. We had a day where Celo crossed 20 million transactions in a day, but fees stayed low, and they're typically a tenth of a cent. And sort of being below that half-cent mark is really a critical barrier, right, for enabling a lot of use cases around micropayments, around community currencies. And so if you're someone who's building those kind of applications, it makes a big difference whether fees are a tenth of a cent or 2-3 cents, right? So something that we've always been very focused on and made an effort to maintain those low fees, and also know that as throughput increases, as transactions on the chain increase, that low fee can be maintained. Immediate finality, very critical if you're thinking of any commerce use cases, right? Peer-to-peer payments, obviously. You want to make sure there's that fast finality, and especially if you're kind of transacting mobile to mobile, right? You're not like hanging out and waiting, for a couple minutes till the transaction settles. That's not going to work, right? And so we are now seeing examples of that. I have some actually. I'll show some projects and give some real-world examples. But for example, Opera launched a wallet directly into a browser in Africa called MiniPay. And there's like stores in Lagos where people can go and pay with that wallet. And of course, you wouldn't want to have someone have a worse experience than they would today paying with a card or with their mobile phone. We touched on Social Connect, the primitive, a little bit. So this kind of idea of really making or kind of creating sort of a more human-centered approach, thinking about, okay, what does it take to really abstract away the complexity of Web3 while keeping the advantages of permissionless and decentralized, but enabling these use cases in a way that humans don't have to kind of carry the mental loads. Another example of that would be paying for transactions, in the currency that you're sending, right? So USDC just came natively to Celo, and so if I want to send 5 USDC to Liz up here, then I wouldn't want to now have to think about, oh, well, do I have Celo or in the case of Ethereum, do I have ETH to pay for that transaction? But just know that will come out of the amount I'm sending. Easy on and off ramping. This one is near and dear to my heart. It's like I look back 6-7 years and I think back to sort of the whiteboards we've had with the early team about okay, what are going to be the really hard things to unlock, sort of the use cases we want to see. And this was not on my bingo card back then. It's like all the ZK stuff that you're kind of worrying about, how to get the stuff work on mobile. And then, when it comes down to some of those really hard technical problems have been solved, but we're still struggling with on and off ramps. So this has been a big effort in the Celo ecosystem, and it's really been an approach where it's not one company, it's not the Celo Foundation who can solve this, but it's organizations on the ground in markets that have the local licenses, that have the local expertise to facilitate those kind of cash in, cash outs. And I was just showing this to someone earlier. If you're in Kenya today and you want to onboard or offboard to Kenyan shilling from M-Pesa, you can do that in under 30 seconds with no fee. And that's pretty incredible. But we need this everywhere in the world, right? Every currency, every market, every community. There's still, for builders here that are just getting into the space, those are some of the meaty problems that will kind of actually unlock a lot of the adoption we're still looking for. I'll go through this quickly. This is some high-level stats for folks new to Celo. So since mainnet launch, over 350 million transactions, over 100 million wallet addresses. We just recently hit 1 million monthly users, so that's a great milestone. Still a bit shy of that 1 billion, but working towards that. And one thing I'm particularly excited about is just the global reach of the Celo community, both builders and users, and that's something we're continuing to focus on. That's also reflected, that real-world use case focus is reflected in on-chain metrics. So if you look at daily active users, and this is year-to-year growth. This is in last year's bear market still, right? So this is not more people just coming in to speculate on numbers going up or down, but this is really kind of people coming in to use this technology for getting access to microcredit and or payments. And actually, like I've been talking a lot about these use cases. Let's actually look at some of the examples here. What are some of the projects that are building on Celo today and that are contributing towards these metrics? One little alpha here. So Celo is an Esperanto word and it means purpose. So for us, this is really building with purpose, not just from a Celo Foundation and core team perspective and some of the early ecosystem projects, but really for people that are joining this or joining us on this mission. It's something that's really important to us, and I think it's really needed to unlock this next stage of growth. So I'll start with stablecoins. I think this is where the big opportunity is. I think a lot of us know dollar stablecoins and have thought about this, or maybe have used them. But if you think about, especially markets that have high inflation, access to credit, microcredit, right? You probably don't want to take a loan out in dollars well, actually most places you maybe not even have access to a loan, but let's say you have access, right? You would want that loan to be in local currency, so that you're not just that you're not having to worry about also paying for the inflation on top of the interest rate. This is something where Mento, Celo native protocol, has been doing some really amazing work in creating a platform, almost like a stablecoin factory for allowing projects all around the world to launch local currencies. So really interesting, and something that if I kind of look out over the next few years, I think we'll see really active on-chain FX markets, both spot markets, hopefully soon future markets, and that also brings new opportunities for not just end users but longer-term enterprises to, for example, hedge their foreign currency exposure as they do cross-border commerce. So something that today, if you're I used to work in this world a long time ago at Morgan Stanley, was in sort of fixed income capital markets, and we would work with some of the biggest companies around the world to help them manage that. But if you're a small company, let's go back to the example of Kenya, Nairobi, and you want to hedge, maybe you're doing some sales into Europe, right? And you want to manage that kind of currency exposure. Like, good luck finding a bank that's going to do a cross-currency swap with you. So this is, I think, an area that today is very underexplored in Web3, but has massive potential. For folks that are new to the Celo ecosystem, also want to show some of the products to experience this firsthand. Valora is a really great mobile wallet, iOS, Android, over 1 million users, and lets you sort of firsthand see the beauty of many of these primitives, but then also experience some of the dApps that people have been building on top of Celo. I had mentioned MiniPay, so this is today only available in Africa through the Mini browser. Let's see if I can show you kind of a little clip here. Maybe I'll do a little voiceover. So Mini is installed on over 100 million, or has over 100 million users across Africa. And now within that browser, you can basically activate the wallet, which the wallet itself, it's a 2 megabyte build. So it's really also, you know, a very unique product in that sense, because many users are very conscious, right, of bandwidth, and often, you know, go on like 10, 100 megabytes plans. And so to have the ability to actually have a wallet that they can easily turn on and then use for day-to-day payments, but also to kind of, you know, as a gateway to this new digital economy, it's something that's really powerful and has seen just tremendous growth. Recently announced crossing 1 million users, and you know the applications that are sort of accessible through MiniPay, you know, in the Celo ecosystem, are seeing that also in terms of the usage. So really exciting and really expanding also the people that are in Web3 to you know, a whole new level, and I think a big, potentially a very big contributor on that road to 1 billion users. No. Okay, another one, Good Dollar. It's one of the OG protocols in Web3, and you know, really a really interesting primitive. It's kind of basic concept. So once a day you go in, you can claim a daily dividend, daily UBI if you want, and then use the tokens you claim on, for example, marketplaces to buy things from the community. And as a primitive, it's interesting because, you know, everything is open permissionless, and so people can build with Good Dollar, right? So if you're looking to actually launch something, you know, this is a great way to actually leverage an existing community, very engaged community, to then have them use kind of your product. Each person, you know, is verified to be a unique human, and so you have sort of that guarantee, right, to avoid sort of, you know, just people kind of from spamming your product, right, or kind of and making sure that people that use your product are actually real humans. I'll go through these pretty quickly. I have a few I wanted to show you here. Impact Markets, who also started in sort of the cash transfer UBI space, has expanded into a bunch of areas, including learn and earn, and allows people to actually earn tokens for learning about, you know, things that are relevant to them, right? So this could be obviously within Web3, but also expand outside Web3, and something that I think really has to go hand in hand. You know, as we want to onboard 1 billion users, we also have to make sure we bring them along, educate them about the possibilities of this new world. Talent Protocol, this is you know, a really cool one if you're interested in Web3 social and taking sort of like a unique spin here. The sort of current iteration of the product lets builders commit to goals and then share their progress, and sort of create sort of that, you know, kind of in a way like positive peer pressure, all right, to help people be more productive and be part of a community. They're here also at ETH Denver with their team and a bunch of the fellows they're bringing together. So definitely make sure to meet them. But really interested to see Web3 social to go beyond some of, you know, the kind of early social networks into these more specialized use cases that are quite excited and leveraging the power of Web3. Sylvie, also here at ETH Denver, just meeting with Streamer earlier, has this big vision to basically help plant a lot of trees and contribute bigly towards the you know, our society's milestones there. But they're doing it in a way where people can plant a tree and you know, kind of basically provide proof to the dApp and then get paid sort of milestone payments in stablecoin. For example, through a wallet like MiniPay, then claim those micropayments. And this is interesting because if you think about like sending someone like a few cents, right, for like these different milestones along the journey of like a tree growing, right, it's not really feasible today with traditional financial infrastructure. Like, good luck sending someone 5 cents, right, or like streaming payments kind of over time. It's just the cost of that, the complexity to do that would be just enormous operationally. And so really interesting kind of way of tying these kind of positive climate actions to leveraging the benefits of Web3, in this case, Celo's infrastructure. Obviously, more on the institutional side, then, you know, people that are looking at tokenized carbon credits and companies looking to kind of fulfill their ESG goals. You have projects like Flow Carbon, like Toucan, that are playing in that space. One other area I want to bring is microcredit. Huma recently deployed on Celo, and it's really exciting because, again, and ties also somewhat to the local currencies. I think this is kind of a really big untapped opportunity where Web3 can really democratize access to credit. I also wanted to give one specific example, and I'm okay. 2 seconds. Ethic Hub, which is doing this, has been doing this for coffee farmers by basically letting coffee farmers tap into global capital markets through a really neat kind of infrastructure. So everyone here could, for example, support a coffee farmer in the global south. And that's the end of it. Building with purpose, building for all. Thank you very much. Have a great day.
Another round of applause for Renee. Awesome. So we are about to start a break. We'll be back at 2:45. So go around, check out some booths, new companies, and we'll see you then. Welcome back to the choral stage. Next up, we have a fireside chat. We're going to talk about L2s in 2024. So welcome to the stage, Nikolai Yushin of Consensus and Sam Kessler of CoinDesk. Put your hands together.
Wow, what an audience. Thank you all for coming. I'm super excited to be here. Rachel, thank you so much for the introduction. We don't have that much time. It looks like we've got only like 20-ish minutes. So how about we start by talking a little bit about what Linea is for those of you in the audience who aren't fully aware of what Linea is and how it connects to this L2 ecosystem. And by the way, my name is Sam Kessler. I'm an editor at CoinDesk. And yeah, I'll be moderating today. Excited to be here.
So, hello everybody. I'm Nicolas Liochon, and Linea is a ZK EVM. So, what is a ZK EVM? It's a layer 2 that works at the bytecode level, exactly like Ethereum mainnet, and that does prove the correctness of the execution. And the problem that it solves is it makes transactions much cheaper, basically 40 times cheaper than mainnet today, and it's going to decrease again. And it makes this price as well more stable with much less fluctuations due to activity because it scales.
So there's a difference, of course, between ZK EVMs and optimistic rollups. Can you talk a little bit about, the landscape, like where you fit in, with, I think there's something like 20 or 30 different L2s that have come up over the past year or so. Let's talk a little bit about that.
Yeah, so at the very beginning, what we had was ZK rollups. It's basically back to 2018. The idea was, in order to scale Ethereum, we need to do the calculation off-chain and to prove on-chain that it's correct. But back then, it was a very advanced cryptography. We didn't really know what was possible and what would be the impact on performances, the complexity of the proof, and so on. So what was done at the beginning was what was called specialized rollups, just for payments. And the idea that we could execute the bytecode instructions of the Ethereum virtual machine that was defined much before without any knowledge of what was the proof system at that stage was nearly seen as impossible. So for this reason, many people tried different branches. So you had some ZK rollups that were specialized. Then some people said, yeah, actually the zero-knowledge technology is too complicated. We're going to play a different game. We're going to have fraud proof. That was the optimistic rollups. So you've got one branch ZK rollup specialized, another branch optimistic rollups. Then people said, okay, we're going to try to have generic execution, but not with the EVM, it's too complicated, so we will have specialized virtual machine, and that will be yet another branch. And then people said, yeah, but actually there are different ways of doing virtual machines, so let's try other branches and other branches. And 2 years ago, it became clear that actually doing the EVM with proof was actually possible. That's created, in a way, the last branch, which was ZK, the proof, plus the EVM, Ethereum virtual machine. And that's a technical decomposition, but there's actually another one which is, I would say, business and functional. People said, okay, some people are building technical layers, optimistic, ZK, specialized, and so on, all those layers. But actually, we need to build an ecosystem. So people said, okay, I'm going to reuse one of the technical layers, optimistic, to build one ecosystem, specialized sometimes for gaming, for DeFi, and so on. And so you have multiple technical layers, multiple ecosystems, and you do a big matrix of all this, and you have what we have today.
So there's a few different things that I want to cover today. Obviously I want to talk a little bit about Linea. I also want to talk about L2s generally, the state of Ethereum. So first off, zooming out a little bit, Ethereum is about to undergo a really big update called proto-dank sharding, which is this thing that is supposed to help make transactions even cheaper for rollups like your own. And maybe you can talk to me a little bit about what that upgrade is and what impact you expect it to have on services like your own.
Yeah. So the idea of a rollup and a ZK rollup is it as secure as Ethereum. And what we mean by this is if a rollup disappears completely, you can still recreate it just from what you have on Ethereum. It means that everything that is happening on the layer 2, on the rollup, is first proven, but as well the data is written on Ethereum, so anyone can recreate the full state. So when you do this, and you do this with a lot of transactions, the issue that you have is you need to write an incredible amount of data. So we add some optimizations around compressing the data, around removing the useless data. There's many things that you can do, but at the end of the day, you're writing a lot of data on Ethereum layer 1. So in the past, we were kind of using the generic layer 1 system, like the EVM allows you to write data, so you write data. That's fine. But the idea of the Ethereum Foundation was let's have something specialized just for data that will be used basically mostly for rollups. And the nice thing about this is because it's specialized, it's obviously much less expensive. But the second point that is quite important on the long term is something that can scale easily. So when they're going to start in a few weeks, they will start with a reasonable amount of capacity, but it's something that can change, basically multiply by 10, 20, 50 without any major difficulty. It's basically changing a setting. So thanks to this, we've got the capacity to multiply immediately the capacity of a rollup by something like 5, and then by 250 without having to spend too much brand power. So that's what this EIP is providing.
So I was at a dinner the other night, and a lot of folks were talking about L2s, the proliferation of so many of them, and what it actually says about Ethereum as a protocol, and both the successes it's had in cultivating this ecosystem on top of itself, but also maybe the failures that it's had as an ecosystem, the fact that it needs so many chains built on top of it in order to fulfill its ultimate goal. And I wonder, what your response is to this idea that Ethereum, in order to achieve its ultimate ends, has kind of relied on a lot of ecosystems like your own that, and we'll talk about this, have varying, we're going to talk about security a little bit, but we're still in the process of building these things. So a lot of the traffic that, is now going on to Ethereum is going through a lot of these services that don't have the core kind of, use case, I guess, value add that Ethereum seems to promote itself as having.
Yeah, so it's interesting because I think that the view is changing with time and we don't know yet what we will have at the end. So when we started, the need was we need to scale and we don't know how to scale the EVM. So let's try different things. And now we're at a point, and the idea that is behind this is, okay, as anyway we can't do the EVM, we can go into crazy experimentations. Let's try a totally different virtual machine. Let's try specialized opcodes. Let's try everything. What appears now is that actually the EVM, we know how to scale the EVM, and a side effect of this is it puts back Ethereum in the loop, because what Linea is doing, it's executing EVM instructions exactly like the mainnet. So it means that Linea implements the EVM specification defined by the Ethereum Foundation. So Ethereum is back in the center of the world. Ethereum Foundation basically decides a part of the future of Linea because we're implementing this specification. And there are other people implementing this specification as well, which means as well basically more power for the Ethereum Foundation, because it's not a single team that decides everything and that can say, no, I don't want to do it. There are multiple teams doing it. They're all kind of competing in a very positive way to have the best possible implementation, the more aligned and the fastest, which leads us back to the situation when we have for the Ethereum layer 1 client, when you have one specification by the Ethereum Foundation and 4 clients, 5 clients. Yeah. It's back to the story. And it's the next step, very likely, that we expect at Linea is actually rollups will be secured by multiple different provers, because as there are different implementations, you can use multiple of them to increase the security of the system. And once it will be kind of validated enough, reliable enough, seen as reliable enough, it's very likely that it will move back to the layer 1, and the layer 1 will be using this technology. It's a future in maybe 5 to 10 years, I don't know, depending on how fast we are working, but it's a very likely future.
So what trust assumptions are there built into Linea right now? We're going to talk a little bit about security and the stuff that you're, in the process of building, but there's 355 or something, if I checked right before this, $1 million, in this system. Who are those depositors trusting with their funds? What pieces of your system?
Yeah, so fundamentally, you trust that Ethereum layer 1 works. Like if Ethereum layer 1 disappears, everything is lost. It's as simple as this.
But in terms of consensus,
so
like as a company.
That's the first layer. The second layer is you trust a little bit that the proof system works. And the proof system is quite complicated because when you say that you trust the proof system, you need to trust the mathematical definition of it. That's one thing. You need to trust part of the implementation that is going to verify the proof, not everything but the part that verifies the proof. But you need as well to trust that we did a good job in what is called the arithmetization of the execution, which is 600 pages of specification, so something quite big. So, and I say you need to trust this a little because given the complexity, we know that it's not going to be perfect day one.
Yeah.
So we have another layer of security, which is the number of people that can send a proof is limited. So we call this having multiple layers of security, making the system a single failure won't make you lose funds. That's how it works. So that's called training wheels. That's how we globally call that. And that's a generic mechanism. And there's a last trust assumption is as the system is evolving, we can upgrade the system. So here you have a security council validating that the upgrade is actually valid. So you have this trust in the security council, which is at the end of the day basically consensus. That consensus is not going to be a very bad upgrade without any warning. So there are some delays and so on, some precautions, but that's the basic assumption.
So there's a tool out there that some of you in the audience might have used, L2 which is where you can get a lot of this information on your own ecosystem and others. And I'm curious, so you're currently like a stage 0, as are most of your competitors. Yeah. Basically all of your direct competitors are quote unquote stage 0 rollups, which refers to the kinds of training wheels that we're talking about that you still have. I wonder if you can, like, even sitting here in 2024, think about or help us understand when will you be a stage 1 or stage 2? These aren't perfect or scientific measures exactly, but when will you kind of start taking these training wheels off to make it to those latter stages?
Yeah, so actually what we're working on right now is adding training wheels to add more security to the system. So a lot of the things that we're doing is let's have other type of verification, other type of checks in order to make the system more secure. The training wheel, the biggest training wheel, and that's the biggest pain point for everybody is really the fact that we can upgrade the smart contract. Given the changes in the technology, it will take a while before we remove this. Let's be very clear. So we're really on an idea that we're going to add layers of security for at least 3 years. And every new layer of security that I can add, I will add it. And then we will start to say, okay, it's stabilized. We can remove those layers. But to me, the ultimate end game is really what I was explaining about having multiple provers, because we know that the technology is complicated. We know that it changes. So if we can have a system when a single rollup is secured not by a single proof, but by multiple proofs, we have here a perfect solution. And that's the end game. And the end game requires to have multiple zkVM implementing the specification perfectly, which is going to take 2 years. And then we need to have this type of gentleman agreement that we're sharing the implementation. It will take much less than a year, and we will be ready to play.
So we've talked about this before in a previous panel. I think it was last year, but in terms of how you communicate these constraints and these security limitations, these training wheels to users, how do you, as someone who's building this technology, think about how users should be considering the safety of their investments relative to locking them up on Ethereum directly? What would you tell a family member or a friend about your system or others in this orbit? Should I put all of my ETH into Linea? Like, is it a safe way to secure my funds?
Yeah, so the security is very global. So it's not only like, should you put all your money on Ethereum itself? And how are you going to manage this? And I think it's really a key topic globally for the ecosystem, because what we're saying with rollups, it's basically in the past we are saying, okay, Ethereum cannot be used anymore because there are so many usage already that the transactions are too expensive. We can't put more use case there. We're at the maximum. And we're removing this limitation. Now the transactions are much cheaper, so you can speak to much more people. And again, it's going to scale, so you can have more use cases. And the point is now we've got this, it means that we've got new users. And there's new users, they may not understand how Ethereum works, they may not understand how wallet works. There's a lot of complexity that they don't know. And we think that on top of rollup itself, there's a global security approach to have, because the data that we have from MetaMask is when someone enters the ecosystem and loses his funds in less than 6 months, basically, he won't come back. Said, okay, it's too complicated, I'm leaving forever. So we really need to be sure that it does not happen, basically. So people who are new to the system can do things that are not, that will not put them at risk. And I think it's really a major responsibility for us to do this if we want to build a long-term ecosystem. So that's how we do that.
So we are increasingly, I think, seeing this trend on Ethereum that we've, it really started, I think, on Cosmos, this idea of app chains. So blockchains that pop up built on top of some base chain or that can draw security from some other, system that are specific for one particular use case. Whereas Linea and, the Scroll, Polygon, and a lot of these optimistic rollups, they're general purpose, the ones that we're talking about when we're talking about like 32 L2 chains or something. How do you see your model, this general purpose model, fitting in a world where it's easier and faster to design ZK circuits that are more specified to particular use cases?
So that's linked. I mean, it's interesting to look at successful applications. And a successful application that we have today is, for example, Farcaster. And there's a debate, app chain, layer 3, layer 4, layer 5. Is Farcaster a layer 3? I don't know. But it's a successful application. And why? Because basically they've been able to say, okay, some parts are very important and needs to be secured by the account. So it goes onto the layer 2. And there are some parts that are very complicated to do in a decentralized way. It's still a decentralized problem. You need to distribute all the images, all the cast, all the data everywhere in a secure way. Maybe you need to be able to prove that you're actually distributing it and you're not lying and providing some data to some people and some other data to some others. And you need to do that. And I think it's very interesting to look at it from what do you need to do? Do you say, oh, I've got a rollup, so everything is a rollup? Well, no, that's not the right way to do things. The right way is to say, okay, I've got a problem where I need the blockchain to secure this part. And then I've got other problems that can be quite complicated in terms of cryptography and distributed systems, and they need to be sorted out. So the way we see things is we should have a single level of security, which is the maximum. The story that you can play with options all over the time, saying, yeah, I don't need this security, it's just too complicated, it's confusing, and you're just going to get it wrong. To me, just an excuse to put the responsibility on the user, saying, oh, yes, you were told that it was not really secured, it's your fault. No, it should be secured properly without playing games. And then you need specific tools to build the other parts of your application, and you should not try to force a rollup when it's not a rollup. So what we have in Linea, in many cases what you want to do, you want to have some advanced cryptography, and for example to calculate options, some results, and to put them on-chain. And we have a library to do this that is actually totally independent from Linea, but is actually used by, I would say, nearly many blockchains, layer 2s all over the place. This library is called NARC, and people can use it to build advanced features independently of the rollup, but they will basically at the end push the result of this calculation on the rollup. And it's a key difference in approach, I would say, on Linea that we say something that seems a little bit obvious in my opinion, but applications should really look at their needs and not try to use a blockchain for everything, but just use the blockchain for what they need.
Awesome. I think we're at time, but thank you so much, everybody, for joining. Thank you for giving me the opportunity to talk about Linea and L2s and Ethereum, and yeah, enjoy the rest of the conference.
Thank you very much. Thank you very much. So if you want, our MC can bring you up. You're welcome to be up here, sit on the couch, or it's up to you. No.
Hello, hello. Okay, so we have another great speaker we're excited for. He is a blockchain veteran and has worked on the Ethereum Foundation from the early stages. And in fact, he proposed the ERC20 token standard. So please give a warm welcome to, oh my gosh, I remembered literally everything else. I'm so sorry. Fabian Vogelsteller from Luxo.
All right, I hope you can hear me. We need the picture. The picture, please. So yeah, so I want to tell you a little bit of a story. It's actually the story of the last 5 years and how it all came to be and what we are on to building. You probably all know, since the creation of ERC20, we had a lot of explosion of applications. If you look around here with all of these booths and exhibitions, pretty much almost every project is somehow rooted in tokens, you know, in the DeFi, NFTs, the ICO craze. Today it's staking and whatnot. But the problem that we have since the last few years that actually the fundamentals haven't really changed, right? So if we're looking at just the UX, for example, I mean, it's very minimal changes. I mean, it's better looking wallets now, but the basics of how you interact with blockchain using a private key and a public key hasn't changed. And that's kind of also the reason of, I guess, why we haven't seen a lot of users using blockchain, right? So we can just quickly check. We have a lot of users that trade, you know, that have tokens and that maybe have a wallet. But if you really look down to actually who's using the apps, you end up pretty much at a very low number. And that's probably still like quite optimistic, and maybe it's way less than that. It's like, where are the users after all of these years and, you know, trillions of dollars of market cap? And again, we are hitting here the trillions of dollars of market cap just now. And that's literally where we are at, right? So the sad truth is that no one is using blockchain. There's a lot of trading and there's a lot of funds moving, but it's barely anything like this. So given that I had some experience in the early days when I created ERC20, and then later when I created the Mist browser together with Alex in the Ethereum Foundation, basically the first wallet for Ethereum and also the first kind of way to interact with the apps, I kind of know a little bit about the UX and how hard it is to make that UX easy, or why it is so tricky to even make it easy in the first place, right? So going back, or going a few years later, in 2017, more by accident, I created or came up with a standard. And in fact, this is called ERC725. And this is funny enough, the exact standard after the NFT standard 721. And I created it back then. I came up with it at a workshop that I did. And I somehow had the feeling I should like propose this as a standard. I did that back in the day. I called it a Ethereum proxy account, as you can read there, like an account standard. It got quite popular. There was like an alliance that formed, and people said they want to use it. But I didn't really have interest to continue the project because it was just an idea, and I thought I need to put it out there, and someone will come and do something with it. A year or so later, my ex-wife and I, we came to the idea to create a blockchain. To create a blockchain for creators and normal users, lifestyle and art and music, and basically the rest of the internet. People that, you know, today use maybe YouTube or Instagram, you know, maybe they also should use blockchain. But we should make it easy. We should make it accessible. And we should make an Ethereum a programmable blockchain, but actually for everyone to use decentralization and to decentralize whatever we have. So we did that over the last few years, and the network actually started 10 months ago in May, And since then, the network is running pretty smooth. We have over 130,000 validators running the network. It's doing its thing. $25 million staked in the consensus. Yeah, it's quite decentralized. We have never run a node, a validating node in the network. So it's started by the people, run by the people. It works like Ethereum. It's generic EVM. But during this process of building all of this, we realized that ER75 actually is really, really essential in making any of this stuff happen. So noting that when you want to create something where normal people are able to use blockchain and where you want to have creators, right, you need an account that's not just an account, but that is a profile and that people can actually manage. So that's when my journey began to really reinvent the foundations that we need to use blockchain in an easier way. And in this process, we created over 25 standards, smart contract standards, purposefully called them Luxus Standards Proposals, not ERC, which is the term I coined in Ethereum, because I wanted to get out of this noise space where there's so many standard proposals and you get so many opinions and never anybody agrees to anything. So in these standards proposals, we basically reinvented the foundations that you need, right? And obviously, we learned a lot from Ethereum and all the other chains using ERC20. There's a lot of things we can improve on those. Make them more flexible in the way you can add metadata, make them more interoperable, clean up the way the function naming works. But most importantly, create your universal profile. Create the profile, the account that you use to interact with blockchain. And that account is not just some custom smart contract that we build and this is now the cool thing and hopefully it lasts 2 years and then we upgrade it and come to the next thing. No, this is built on standards. Every single piece in this account is a standard in itself that as pieced together works as a profile and works very well as a profile. So the pink part here is the metadata standards and the green, the blue part here is basically the functions and what it has. And each of these standards work by themselves and can be also used in different contexts. So as a developer, you probably think now, oh my God, if there is like this new thing and it all looks fancy and this is a new way to do something on a blockchain and Luxo, like this is what you do there, like that now requires me to change all my apps and now I need to adopt something new. And the truth is actually not. You can literally interact with the browser extension and it does all the heavy lifting for you. So you just like call request accounts, you get your account back, and instead of getting a public key back, like you do in any wallet right now, you get a smart contract address. And then you just send your transactions as usual, and the browser extension or future apps that where you manage your profile will take care of all the complexity of managing it through your profile. So as we are here at developer conference, I want to get a little bit technical and show you what is so unique about these profiles and why is it like, what's the big deal about it, right? Because smart contract accounts, we heard that before, there's wallets that are around since a few years. So why is it now different and somehow special? So number one, it's actually meant not just as a wallet, but actually as a profile. That means you can attach information, but not just a JSON file where we define this is the 5 things you can add, and that's all there is. You have an unlimited amount of information you can add because it uses ER75Y, a generic key value store, where you can attach information to, including a JSON file for your profile picture. So, and that's quite generic, so we need to define of how you make these keys look like. You know, how does these keys on the end are described and encoded and decoded. And lucky enough, there's a library that will help you with that called ER75JS that makes it quite simple for you to retrieve this data and to store this data in the right way. But it allows for protocols now to invent new ways of how you store information at the account of the user itself, at the exact same address that the user also uses to interact with your smart contracts and to hold its assets and do anything on chain. It can also react and be notified by new protocols, by a token or by an asset that is coming to you. And you can even delegate that part to an external contract that you can replace over time, where you can say, okay, maybe certain tokens I want to go through a community-operated whitelist, so I'm not getting spammed with like whatever, right? Or maybe I want to reroute them to my vaults that I have. Or maybe somebody invents a really cool way of use that notification system to build the next protocol that like blows everybody away. But most importantly, and I think that's the biggest problem we had over the last years, is how do I manage my account long term? How do I make sure that I still next year have that profile, right, and that account? And that's where a key manager comes into place, which is in its own standard that allows you to have multiple devices, multiple keys, multiple external smart contract systems that can manage your profile. And this on top with a lot of permissions that you can now set on those keys and say, okay, certain profiles can, certain controller keys can maybe just operate with a certain set of smart contracts or call a certain set of functions, even allowing you now to have an app that can control your profile, and you can restrict it down to a certain set of interactions, not fearing that you'll lose control over your profile. It also obviously allows you to add recovery. People could innovate on social recovery, onto centralized recovery, whatever they want to have. But most importantly, signing with Ethereum works. That means you can literally log into websites, quite important for a profile. But you know, all the talk in account abstraction within the Ethereum community has been around gasless transactions. So how do we make it easier so that people don't need Ether to do something, right? We solved it as well. We solved it with a single function that allows anyone to make a transaction on your behalf, allowing for the opportunities to create transaction relay services. Think of like the mobile phone provider of the blockchain that allows now anyone to get you a subscription and pay for your transaction fees, and you don't even have to bother about any of this complexity anymore. You could also integrate 4337 if you want to. It's a very flexible profile, allows for everything. So that on the end creates a lot of, you know, accounts that are by default all profiles. So that makes everything a lot more human, because every interaction on chain is an account, a wallet, and a profile at the same time. So where are we now? With the Luxo ecosystem, you heard 10 months ago we started a network. You probably have seen us around on conferences, have seen our nice swag, and the pink. But we also have a quite thriving community within our digital ecosystem. We in fact have even people that make like, you know, a weekly podcasts in VR where they're all like virtual figures talking about Luxo and what's going on there, making parties and everything else. Universal Profiles went live in November. The first marketplace opened just 2 months ago, beginning of January. We have now 15,000 profiles created on the Luxo network, and there's around 9,000 browser extension installations, which probably tell you the more real number of users. There's a marketplace. People have created lots of NFT collections, chill whales being one of the most popular ones. It's growing. It's like literally 2 months old, but we already have like almost $1 million traded in NFTs on that marketplace, which, by the way, the marketplace came out of a hackathon from 2 years ago. So they kept building. They launched on the profiles and the new token standards and everything. They also built a way to create your own like customized profile page, which, you know, gives you a little MySpace website where you can showcase your collections and the things that you have. But a very interesting, fascinating project that was created on Luxo is basically a fractal generated NFT And that was created by Peter. And Peter is the lead Go Ethereum developer, the one who basically runs Geth, the most used client on Ethereum. And he had this idea about this fractal in a smart contract, and he implemented this a few years ago, I think 7 years ago actually, into the EVM. And he wanted an opportunity to make it an NFT. The tricky part about this is, if you make a fractal in a smart contract, it requires a lot of gas, because you need to iterate fractals to make them more and more detailed. So 3,500 iterations actually use one block of the Luxor blockchain. The crazy thing is, people iterated now these NFTs to over 60 million iterations. So that's kind of like 2 days of the Luxor blockchain for a single image to come into existence. And these images are purely on-chain and fully returned from the smart contract as an SVG. So probably the first actual real NFT art, because it can only be done in the early days of the network. Eventually, it will get so expensive to do this that you can't do it anymore, so then it becomes super rare. It currently fills the blockchain because the gas is still cheap, so people are doing this. Refining images is a big deal on Luxor right now. And then the community talking about this, creating these collections and trading it. It's the first use case. It's obviously the simplest thing you can do with a profile, and it's by far outcasting what's possible. But it kind of shows what happens if you have actually profiles and users being profiles by default. Another interesting app is Common Ground. Think of it like Discord for Web3. They integrated universal profiles as a way to log in. And the Luxor community now kind of took over. And we have now over 70 active communities, with some having over 2,000 people. And people doing all the NFT stuff and discussing their burn picks and even trading them in there. Getting creative. So it's a young ecosystem. It's just started. The tech is ready. The tech is out there. The foundations are out there. There's a lot more tools and things that will come. But basically now it's about introducing builders to this innovation, these smart contract innovations, get them to understand that this is the tool and this is the standards, and that's the account system that everybody has been waiting for and looking for since years. And it's introduced on a new chain because that's the only way you can ever make people adopt such a fundamental piece, which is not just your token improved, but it's the account itself. Like, you can never convince the existing ecosystems to adopt something like this, but you can do it on a new chain. And it also brings in a whole kind of new user and a new culture that Luxor have been literally attracting and thriving for a long time. And it probably creates then for the first time a true decentralized social media and a lot of possibilities that we can't envision right now, because your account is now also a profile. So let's make some cool stuff happen on profiles on blockchain. Thank you. Question time. Any questions? No? All right. The docs is what you want to check out. There's one question. I can't actually hear. Where are the standards used? So the standards actually started in 2017, the first basis. But all these standards, in order to make the profile happen, it basically evolved over the last 5 years. And it was literally just finalized in the last 6 months. But we built the transaction relay service, the browser extension, a way to create the profile, and all of these things had to be built to make not just a single standard, but a complex set of standards work that form a profile. And that's quite a challenge. It's easier to just deploy one contract, which is a token, and you send it around. Innovating on the account level, it's a bit more challenging. But now it gives you the possibilities to do things that you simply couldn't have done before. You could have not, you cannot attach information to your MetaMask or even Argent wallet or any of these existing wallets. Without information on the account level, every social use case is impossible. So now you need to do some external contract that's like an NFT or whatever else, but your account and your profile should be the same thing, the same contract, the same address. Why should that be separate, like into 50 pieces somewhere, right? So making this natively the same thing allows for apps that you cannot build right now on any other chain. So that's the place. Docs.luxor.tech, or go to luxor.network, click on Docs, and that's where you can all dig into the deep dive in the Bible of Luxor.
Okay, it's time for our next speaker here at the choral stage. Next, we are talking about RPC centralization in Web3. And please welcome to the stage Slava Shevanov from DRPC. Sure.
Yeah, hey guys. Yeah, let's talk a little bit about problems that we have in Web3. And today I want to talk about like RPC centralization and what it means for Web3. Yeah, so I'm Slava, I'm CTO at drpc.org, and we're building decentralized RPC infrastructure for multi-chain future. So let's start from the, let's start from the basics. Like, what's an RPC? You've probably heard of blockchains, and if you know what's blockchain, it's basically the fancy way of synchronizing state to multiple computers in a decentralized fashion. But the important stuff is the state. And if you're building Web3 applications, Web3 applications need on-chain data, though, so they need to access this state. And typically, each blockchain client will have some kind of API to do that. So yeah. And why it's called RPC? Well, historically, Ethereum and Bitcoin, they decided to go with the JSON RPC protocol. And we kind of now call this, all this blockchain API RPCs, which maybe not the best name, but yeah, we still use it. And historically, the vision was that if you wanted data on chain, you kind of run your own node. However, it's 2024, and we live in multi-chain world. So if you're building some Web3 application, you probably need a lot of blockchains. And it means you need a lot of nodes. And it's very expensive, and it's very hard. So basically, nobody does that. So there appeared a number of companies that we call now RPC providers. And yeah, we kind of run Web3 decentralized web on top of Web2 centralized software as a service companies. But temporarily, right? Well, let's think about it. And the first step would be, let's think about what clients want. I mean, RPC clients. And those clients are Web3 companies that are basically businesses too. So they have customers also. And they want basically four things. They want to have good UX, user experience, and developer experience. They want to have high speed and good reliability. And of course, they want low cost efficiency. What clients don't want? Well, yeah, actually, I must say that this is not like we invented it. We talked to hundreds of customers, and they all said that. But what they don't want decentralization. And they told us specifically that they don't care about it, a lot of them. And they don't care about fancy technology with bad UX. And actually, that's understandable. As I said, they are businesses. They have their own customers. Then they can't, say to their customers, sorry guys, we were down like 3 hours, but we use decentralized providers because customers, they just will go to their competitors and who use centralized providers maybe. So that's like what we end up with. Centralization of RPC providers is status quo. And we arrived at not because like we're bad people or bad industry. It's just, economically feasible to do that, and it's reasonable. So like, let's think about do we need decentralization on RPC layer at all? Like, and let's be honest about that, because I must say decentralized providers not always honest with you. I'll try to be. So first, is decentralized providers have better UX or DX? You probably know the answer. No. Historically, centralized providers like Infure or Alchemy have significantly better UX than decentralized counterparts. So that's not it. Maybe decentralized providers have better reliability. And we're running kind of this argument, I mean decentralized RPC providers, for a number of years, that decentralized RPCs don't have a single point of failure. But the problem is, unfortunately, every decentralized provider, like everyone, I don't want to call names, runs centralized gateways. And the reason is specifically the previous point, that you need a good DEX. Developers just want to copy-paste URL and just work with it. So they don't want your fancy stuff, and you kind of end up with a centralized gateway. And yeah, so you're not that different from centralized providers. And now, if we're like thinking about other things, of course, centralized providers like Alchemy or Infura, they don't think about decentralization. So they have time to think about their customers. And historically, of course, the reliability of those providers are significantly better than for their decentralized counterparts. Okay, but maybe performance for decentralized providers is better. Yeah, you could argue that, you know, there's like a lot of compute over the world. The geo distribution for decentralized providers would be better. However, I can argue that everything that decentralized providers can do, centralized can do too. And actually, as I said previously, because they think about customers a lot more times, they historically have the better performance significantly. And in theory, they even can have the best performance possible because they control hardware, they control network, they can provide the best setup possible. Okay, there is another argument that you can hear a lot with this all centralized versus decentralized like discussion. It's verifiability. The problem when you use RPC provider, you kind of trust them, you know? You don't have, when they respond with some data, you don't have any way to check if it's valid. Yeah, and of course nobody cares about that. Yeah, and nothing bad happened, you know? And no, of course, like how it goes. Nobody cares until something happens, like, you know, some kind of black swan event. And maybe one day you kind of go to some voting platform that uses this RPC, and maybe there's a vote for very important protocol, and that's very important vote, and that moment, provider decides to tamper with your data, and you could end up voting for something you don't understand or don't agree with. How can you protect ourselves? Well, there is a solution. It's called light clients. So the light client is a kind of super lightweight, efficient node that you can run on your phone. And it actually talks to the centralized, for example, RPC provider, and only syncs the state that your web application needs. So you could, and it can do that in a trustless way. So it can check everything that RPC provider returns. So if RPC provider will try to tamper with the data, light client will detect that. And you can kind of use this light client as your RPC node. And you know, if you have a wallet, for example, it's a reasonable way to do that. A reasonable way to do verifiability for the RPC. And for Ethereum, there are actually existing solutions like Kevlar or Helios that you can use right now. However, there are a few problems with that. First is that actually this stuff is very inefficient because for most of the time, for each call to the light client makes several calls to centralized RPC provider, for example, and it will cost you more money, and it's slower, just slower. Also, unfortunately, you can't verify all requests using this approach, and moreover, not every chain supports light clients. Ethereum does, albeit not like in full. Like there's still ways to improve it, but a lot of chains do not support it at all. Yeah, so of course we can imagine that can be kind of ZK magic, and wouldn't it cool if every RPC provider return ZK proof that the data they return is valid. So yeah, you could probably imagine that. Technology is, of course, not there, and I would argue that it's hard to imagine how it can be done, like, you know, universally multi-chain verifiability through the ZK for RPC responses. However, yeah, theoretically, it's also possible. And the last one, you can do, you know, basically quorum. You can send requests to several providers and compare the responses. If the responses are the same, well, you can consider this response valid. It kind of doesn't matter if those RPC providers centralized or decentralized. You can do it both ways. You could argue that in the centralized setup, you can punish providers that return invalid data, but really it doesn't matter. So yeah, so far looks not good for decentralized providers, you know? Yeah, maybe cost efficiency is better for decentralized providers. And that's where I would argue that yes, decentralized providers can achieve better cost efficiency. There are two reasons to that. First, in decentralized RPC providers, typically you have some kind of independent node runners that this decentralized protocol routes requests to. So there are a lot of them, and they of course are quite efficient in what they do. And if you allow them, for example, to set their own price, the price discovery mechanism would be sufficiently more efficient than for the centralized providers. Because centralized providers, of course, compete on the price too. However, there is PR, marketing stuff, and also, it's not too much of them, so this price discovery would be less efficient forever, basically. And the second part of that is those node runners, they can actually use nodes in different ways, and they can exploit, like they're running the node, this node they run, not only in, for example, gRPC. They can use it for graph indexers, like participate in some protocols and other stuff. So I argue that decentralized providers, if done correctly, can be significantly more cost efficient, and that's actually what users do want. Yeah, so what about multi-chain? Maybe multi-chain is better in decentralized setup. Yeah, I also think that it is, and the reason is very simple. Because when you're a centralized provider and you want to add new chain, for example, super rollup L3 or something like that, you need to first add some code probably to your balancer or gateway. You then need to buy new servers, and then you need to acquire knowledge how to run those new blockchain clients. For decentralized providers, you just need to write some code and find right people who already have this compute, or they just know how to run those clients. So it's easy for you. So for example, that's why we are supporting right now 60 blockchains. I don't think there's an RPC provider centralized or decentralized like we in that sense. Yeah, and of course the most important thing and the ultimate boss is censorship. And we understand that, of course, RPC censorship is not unheard of. We've seen this with Tornado Cash, that RPC providers censored transactions and read calls to the Tornado Cash contracts. So it's like real. But I think it's getting worse. Because recently there was a paper published by a group of legal researchers that actually suggests the protocol, the framework for battling illicit actors in DeFi. And what they do, they argue that in TradFi, it's actually, the intermediaries is basically, the ultimate way to battle illicit actors. You kind of implement some measures on those intermediaries, and everything kind of works. So those legal researchers were smart enough to point out that RPC nodes is actually ultimate intermediary in DeFi world. So if you implement some kind of censorship here, you could probably censorship DeFi. So they define this CCT term, critical communication transmitter. Basically, they say that every commercial RPC node provider is CCT, and then you can require them to implement risk management practices and procedures reasonably designed to help mitigate illicit finance activity in ways tailored to their operations. So basically implement censorship mechanism for RPC. Yeah, can it work? Actually, I was thinking a lot about that. And I think battling illicit activity in DeFi is a very noble goal. However, if you're a hacker, would it be hard for you to run your own node? Would it be hard to find some uncensoring node if you need to run only one transaction? Yeah, I doubt that. However, for example, say we would like to censor specific DEX. Yeah, for DEX to bypass the censorship would be quite more complicated. They would probably have some kind of these options, They can run their own nodes, or they can use some unregulated providers, or submit to censorship, basically. And we know right now that running their own nodes, it's just not possible. It's economically unviable, and probably if Web3 applications would try that, most of the businesses will be killed by cost and complexity. So in reality, if such regulation would occur, there's an option between unregulated providers and censorship. And it's hard to say how it will play out. However, remember, in RPC market, there's everything about efficiency, quality, latency, and reliability. And I would argue that market leaders would comply to those regulations immediately. So the ones who won't, probably worse. And in many ways, like not only these qualities, but also security, privacy. You know, the situation with free VPNs, basically, can be the same thing. So it's easy to imagine that in future, like if this regulation occurs, like basically the only option would be to submit to censorship, and that's it. And as I said, for centralized providers, the choice is to comply or not is actually not a choice, you know? They have to comply. However, for decentralized protocols, it's actually quite more complicated. The reason is because there, as I said, there is a node runners, and each node runner can decide for themselves. You could say, but you run centralized gateway. Yes, but if you have a community of node runners that is actually unified by some kind of protocol, yeah, you have centralized gateway, but you can set up more centralized gateway. It's easy, it's just code, you can run it. So each centralized gateway also can choose like censor or not censor, but the quality will still be good if we have like, could be good probably. So I would compare this to, you know, basically censoring transaction on Ethereum. Yeah, you have a lot of compliant actors, but you still need like a small amount of number like of non-compliant, like MEV relays or block builders, validators, and a non-compliant transaction will go through. The same will go with RPC market. So if we have this decentralized protocols, those regulations will probably be inefficient. So let's look at everything we talked about. If we build a decentralized protocol, yeah, we have cost efficiency. We feel ourselves quite good in multi-chain world. And the most important, we are censorship resistance probably. And yeah, the centralization is actually the only way to battle censorship we know of. Verifiability kind of irrelevant. It can be done either way. And centralized solutions, they have better UX, DX, performance, and reliability. So if you remember the first part of my talk, you see that kind of centralized providers are winning the race, you know? And if we don't do anything, the future is centralized RPCs with censorship mechanisms. Can we do something about it? Well, the question is, can we get everything? Can we have both? So properties of decentralized providers and centralized. And that's the thing we're trying to explore at DRPC. That's why we ran with permission pool of providers, and because of that, we were able to invest a lot of our time because we didn't have to build, you know, this blockchains, permissionless join, all that hard stuff, staking. We were able to invest a lot of energy in our load balancing technology that allows us to offset individual provider problems and optimize latency and reliability. So because of that, I would say that we were able to onboard cool projects like Curve, Instadap, SushiSwap, Lido, and many more. And the next thing for us is to think whether we can push decentralization even further, but we want a balanced approach. We don't want to do decentralization just for itself. We want to find this balance where we can do decentralized stuff, but also with good quality. And I personally think that the only future where we can have a truly decentralized web built on top of decentralized data layer looks basically like that. Yeah, and without censorship. So if you want to check it out, we're trying to build this future. So if you want to check it out, go to the RPC. If you want to participate, also go there. And if you want to follow our account, that's the QR code. So thank you for your time. Have a nice day. I hope it was interesting. Yeah, so that's it. Any questions? Yeah. I think we have time for one. Yeah, I'm sorry, I can. I'm sorry, I can hear you. Let's just like. Yeah. I mean, like, I understand where you're coming from when it comes to like non-censorship and like trying to protect that. But I also think it's a valid argument to make that like we as an industry, like we're gonna run into things like CSAM and malware. Like that's already happening on like decentralized storage networks. Are you or DRPC like thinking about like there's projects out here they're talking about like decentralized attestation on chain, and there feasibly could be a way of like I'm running this provider, I'm just not going to serve any one of these contracts, which I already know is like maybe just a clone of like Uniswap that is trying to steal tokens out of someone. Like, is there like a line that like that we can toe between like complete decentralization and like anti-censorship and actually like protecting end users who might not be aware of what they're actually interacting with on decentralized network? Yeah, I'll answer it basically personally.
All right, next up we are talking about taking your assets multi-chain with Nikhil Suri from Wormhole. Give it up.
Thank you. So hey everyone, thanks for joining me today. My name is Nikhil Suri. I'm product lead at the Wormhole Foundation. And today I'm very excited to talk to you all about Wormhole native token transfers. It's our new open source framework that allows you to make any token natively multi-chain and provides you with flexibility for the long term. But first off, before we get deep into native token transfers, I want to spend a little bit of time talking about the state of cross-chain messaging and the way that we currently view the ecosystem today. And ultimately, I want to explain to you all why we're building a new framework. So the first thing that we see today is that cross-chain messaging is operating at a massive scale. This screenshot is from Wormhole Scan, and a few numbers pop out to us right away when we look at it. The first one is that Wormhole has processed over 1 billion messages all time. And the second number is that in terms of cross-chain token transfers, Wormhole has facilitated transferring over $40 billion of value cross-chain. And looking beyond just this screenshot, I did some quick analysis on the aggregate volume of all interop protocols, and I found that in total, interop protocols have processed over $65 billion of value cross-chain. And so it's definitely cool to see that Wormhole is a large percentage of that volume. But the cooler thing that this shows us is that cross-chain messaging is being used frequently, and it's being used to transfer a lot of money. And as a result, it's reached a very impressive scale. The second thing that we see today is that interoperability protocols have paved the way in terms of security. So generally, interop protocols run the largest bug bounty programs, and they're also the most audited out of all crypto protocols. So doing a quick search across protocols, across interop protocols showed me that on Immunify at least, there are over $20 million in bug bounties being offered by the top interop protocols. I also looked through the security programs of these interop protocols, and I found that in total they've had over 60 audits done. And I was able to find those 60 audits because it's become a standard and expected practice to make audit reports and mitigations to those bug findings publicly available. And then in what I think has been an interesting development, the crypto community has started to develop these standardized security frameworks through which to evaluate interop protocols. So one example of this was the Uniswap Bridge Assessment Report that was done last year. And that was produced by this committee of independent researchers evaluating the security of various interop protocols and a set of clear criteria. And the cool bit about that for Wormhole was that the Uniswap community found Wormhole as the most secure protocol out there. And I expect a similar assessment to happen again this year. And as a result of all of this, interop protocols must implement this standard set of security features. So, for example, it's the baseline requirement or expectation that interop protocols use a sufficiently decentralized validator set that attests to messages. Anything less than that doesn't get you very far anymore in this business. The third thing that we see today is that cross-chain messaging is everywhere. So the use cases for interop have just exploded. Cross-chain messaging is being used for all kinds of crypto protocols, all the ones you can see here, and then I put the and more there because there are so many more beyond what you can fit here. And another way of saying that is that crypto protocols, all crypto protocols are now thinking of going multi-chain. And so in summary, what we're seeing today is that cross-chain messaging is very mature. The Wormhole contributors are building for a multi-chain world, and the majority of protocols view going multi-chain as a core part of their strategy today. And so the demand around multi-chain offerings has changed. Protocols are now thinking about permissionless systems for going multi-chain that they can stick with for the long term. And I'm talking about truly long term. What we're hearing from protocols is 10 plus, 20 plus years out. Protocols are looking for these flexible systems that will let them be resilient and also adapt to future changes. So where does that bring us? Enter Wormhole native token transfers, or NTT for short. So NTT is an open framework for seamlessly taking your token multi-chain. When you use NTT to take your token multi-chain, you preserve ownership over your token, upgradability over your token, and customizability over your token. NTT integrates with any kind of token. So that means you can preserve the custom logic for your protocol that's been built into your token. For example, it works with governance tokens, rebasing or restaking tokens, stable coins, even NFTs. And this is a really important point to emphasize, which is that NTT is not a token standard. NTT is a framework that is open source, that is flexible, and that is composable. Since it's open source, anyone can use it. The out-of-the-box framework is very configurable and integrates with any kind of governance process. And we'll get into all the different kinds of things that you can configure in some of the following slides. Another benefit of being open source and having these standardized interfaces, configurable parameters, and custom payloads is that it's composable. So you can integrate NTT into other DeFi protocols. You can also build on top of NTT if needed to add features that might be specific to your use case. So to say it again, NTT is not another token standard. NTT is a permissionless and configurable framework for multi-chain token transfers. So how can you use NTT? NTT lets you transfer new or existing tokens cross-chain. With new tokens, you can deploy in this pure burn and mint model, where when you perform a transfer between a source chain and a destination chain, the tokens are burned on the source and minted on the destination. And this is the purest kind of multi-chain token that you can have. But we realize that there are a lot of existing tokens out there that either cannot be burned or cannot be upgraded to be burned. So if you have an existing token, you can make it natively multi-chain via this hub and spoke type of model, where you lock the token when transferring out of the chain it's already deployed on, and you mint the new token that you deploy to the destination chain that you want to go to. And then between destination chains, it's burn and mint. And it's important to note that these aren't the only two options that you can pick from when using NTT. They're just the most common that we're seeing. NTT is really flexible, and so if you have unique requirements for your tokens, come and talk to us. Come and find me after this, and we can talk about how exactly to configure NTT to fit your use case. And as I mentioned previously, NTT is meant to be a configurable framework that protocols can use for the long term. So the contracts are ownable and upgradable. Protocols have full sovereignty over their deployment. This also enables these important administrative functions to be gated by whatever your protocol governance is. Via governance, you can configure exactly the right level of security that you need. You can set access roles. You can configure rate limits, inbound and outbound rate limits. You can pause the contracts to stop all new outbound transfers. You can also opt in to use global accounting, which is a token balance integrity checker that's enforced by the Wormhole Guardians. And you can also freely configure additional verifiers. So whether these are custom verifiers or other third-party verifiers, you can add or remove these verifiers, and among them you can set threshold attestation requirements. So I want to dig more into these security features because I feel that they are what helps set NTT out from the rest. So security is the lifeblood of Wormhole. We bake security into every kind of product that we build. And NTT is no different. It offers defense in-depth security that's completely configurable. So for every chain that you're deployed on, you can configure inbound and outbound rate limits. The Wormhole contributors also have a lot of experience working with security features like rate limits. And so if you set rate limits, we know that you need to prepare for the eventuality and the user experience around actually being rate limited. So we built this queuing mechanism into NTT so that users who get rate limited can still have confidence that their transfer will go through after capacity opens up again. The global accountant is enforced by the Wormhole Guardians and ensures that you cannot transfer more tokens out of an ecosystem than the amount that's been transferred in, and so it enforces these token supply imbalance and variance. And these features, together with access controls and pausing functionality, already cast a wide sort of net of defense and depth security. But with NTT, we decided to go one step further. When we were thinking about permissionless systems for the long term, we realized that those systems should not have lock-in. And therefore, with NTT, you can freely manage configuring additional verifiers. These additional verifiers can be your custom verifiers that enforce your own custom protocol rules, or they can be other third parties. And between these verifiers, you can set M of N threshold requirements for attestations. For example, you can configure 2 verifiers with a 2 out of 2 threshold. And we're pretty excited to offer this kind of feature to protocols. It empowers protocols to have full control of the framework. And over time, they can adjust the framework based on their own product evolution or the evolution of the broader crypto ecosystem. And we view having complete control over your stack as non-negotiable, and we built NTT to accommodate for that. Going beyond just the NTT smart contract framework, NTT, like all other Wormhole products, will benefit from the full power of the Wormhole stack. The Wormhole contributors have built this encompassing suite of products to make going multi-chain a very simple and safe process. And thinking multi-chain can be very complicated. And so we've worked very hard to abstract that complexity away while still empowering protocols to tune their integrations. So NTT will be integrated into all these products. Wormhole verification underpins the Wormhole protocol. It's provided by the 19 Wormhole Guardians that attest to cross-chain messages before they're considered to be valid. Wormhole contributors are hard at work building ZK verification as well. We recently announced a partnership with AMD for hardware acceleration, and we also recently brought on some of the premier ZK teams on board as Wormhole contributors, Lurk, Succinct, and Zpoken. Wormhole Connect is a UI widget that any project can easily pull into their own front end to access the entire Wormhole ecosystem of products. Connect will be integrated into NTT so that users can seamlessly transfer their tokens in and out using Connect. Any front end that already has Connect integrated will also be able to leverage this new functionality. Wormhole relayers greatly improve the UX of cross-chain messaging. Relayers are this network of delivery providers that get cross-chain messages from point A to point B. And when sending a message, users or protocols are able to pay up front for delivery on the destination chains. And Wormhole Scan is an explorer for Wormhole that's been built by Wormhole contributors, and that'll support displaying NTT transfers at launch. So this combination of Wormhole Connect, Wormhole Relaying, and Wormhole Scan is going to enable projects to make transferring tokens this seamless one-click experience for users. So we are really excited to announce some of the protocols that are going to be using NTT. These protocols cover the range of rebasing tokens, restaking tokens, governance and utility tokens. For example, Lido will be using NTT to power native transfers of wrap staked ETH from Ethereum mainnet to BNB. EtherFi will be using NTT to take their LRT multi-chain. Pike will be using NTT to take their governance to utility token multi-chain. Puffer will be using NTT to take their LST, PuffETH, Multichain, and we're really excited to announce that NTT will be the framework that powers cross-chain transfers for Wormhole's natively multi-chain W token. And here's a quick teaser video for NTT. One second, let me figure this out. Okay, sweet. So thanks for joining me today. NTT is a fully open source protocol. You can view the GitHub repositories under the Wormhole GitHub organization, github.com/Wormhole Foundation. The docs will be going live soon, but if you want to see them now, feel free to reach out to me, and I'm happy to provide what we have worked in progress. I'm also always excited to chat on NTT or Wormhole or just cross-chain in general. So you can reach me on Twitter at @nsuri_ and Telegram at @NikhilSuri, just my first and last name. And if you're shy and you don't want to reach out directly, you can scan this QR code. That'll take you to a form where you can submit your interest in Wormhole and NTT generally. So thanks, everyone, and excited to build the multi-chain future with you all.
Welcome back to the choral stage. Thank you so much. Hope you're enjoying Ethereum Denver today. Next up, we have an exciting discussion. We're talking all things Polkadot with Bill Laboon. Please give it up.
Have a relay chain indicated by this sort of central circle, and users and developers can create their own chains that are secured by Polkadot that can interact with other parachains in the ecosystem in a seamless and trustless way. So, one chain could put assets on another, or NFTs, or have a smart contract on parachain A, call a smart contract on parachain B in a trustless manner. So yes, so Polkadot is more than a blockchain because it is, in fact, many blockchains. Yes, for another reason, you can make your own blockchain with Polkadot. So Polkadot is not just a blockchain by itself that we've created, but rather a place where you can build a blockchain that meets your specific needs. So if you need a blockchain that is a simple EVM clone, that's very easy to do. If you need a blockchain that has specific needs for the gaming industry, or for decentralized finance, or for social media, or for prediction markets, just to name a few of the different kinds of parachains that we have right now in the Polkadot ecosystem, you can make it. And it will be much more efficient, and it will be able to interact with all of the other chains in the ecosystem by default and very easily. So this Substrate Polkadot SDK is a Rust-based software development framework that allows you to, out of the box, create your own blockchain, and that can very easily connect with Polkadot. So yes, and yet another way, Polkadot is more than just a blockchain. So Polkadot's rules are not built into the node. So most blockchain systems out there, the rules for the blockchain, what is a valid transaction, how does it interact with others, how does it come to consensus, all of these things are built into the node software. But actually, Polkadot has a different approach to this, where the rules for the blockchain, what we call the runtime, are stored on chain. And I just gave a talk earlier today going into the technical details of why this is so. But because of this, you can very easily upgrade without a fork. So this is the traditional way for nodes to for blockchains to upgrade. You get all of the nodes to start following the new chain with a hard fork. Right? So you have to tell everyone, hey, by this point in the chain, everyone needs to upgrade to the new node software that has the new rules. However, with Polkadot, since the code is on the chain, by definition, anyone that's following the chain is going to follow that code. So what this means is when governance of your chain has decided it's time to upgrade, then it will happen automatically for all nodes that are running Polkadot or your chain. This makes it a lot easier than coordinating with everyone running a node that, hey, it's time to upgrade, and make sure that you do it. It generally just happens automatically. And this is not a theoretical concept. This is something that happens on a very regular basis in the Polkadot ecosystem. I actually ran the numbers yesterday. So on the relay chain, the central chain of Polkadot, this has happened 52 times since Polkadot was launched in May 2020. So a little under 4 years, 52 runtime upgrades. Compare that to pretty much any other chain out there, where it's, if you're going to have an upgrade, it's definitely generally a multi-month process to get it out there, but it's very fast on Polkadot. And with all of the parachains, so I added them all up, there have been 996 runtime upgrades. And things have been going great with all of them. So if you are building a blockchain and you think that, hey, I'm going to want to change the rules at some time or add new functionality, then Polkadot really is the way to go for this. So, right, just so you know, not to spoil the ending, I'm just going to keep saying yes. The Polkadot is more than a blockchain in different ways. There won't ever be a no. So the Polkadot ecosystem is built with the Polkadot SDK or Substrate, but a lot of other ecosystems and other projects have actually looked at Substrate, looked at how we're building Polkadot and the framework that we use for it, and said, we want to use that as well. So just a few of the other teams that are using the Polkadot SDK to build BitTensor, Aleph0, StarkNet, the Madeira sequencer, Edgeware, Avail, the Midnight partner chain on Cardano, EnergyWeb. There are a lot of different projects that have said, well, hey, we're interested in building our own chain, but we're going to use Substrate because it is an extremely powerful way to create blockchains. This actually is what got me into Polkadot in the first place. At Web3 Summit 2018, Gavin Wood had a talk where he got a brand new MacBook out of out of its package, and a little over an hour later, after downloading Rust and doing all the compilation and everything, there was a brand new blockchain running on his computer. And I thought, wow, this is super exciting, right? That you can just have your own blockchain, figure out what kind of features you want. There are actually hundreds of what we call palettes. These are like libraries or gems, if you're used to Ruby, that you can add to your blockchain. If you want to add democracy or staking or proof of work or an on-chain treasury, all of these things are about as simple as import whatever the name of the palette you want is. So a lot of other teams, like I said, have looked at the Polkadot SDK and said, yeah, we're interested in using that because it is such a powerful and easy framework. So another way, Polkadot is more than just a blockchain. It's actually influencing a lot of other ecosystems out there. So yes, Polkadot is more than just a blockchain. Because Polkadot is also the communication between all of these chains. Right? So we have a technology called XCM, where we allows you to trustlessly interact in a common way, a common format, with any other any other parachain in the ecosystem or with the relay chain. And this this communication does not have to be just, hey, I have an asset, I'm going to lock it up on one chain and and I'll have a representation of it on another, because all of the parachains in Polkadot are operating under the same consensus. It's really a sharded chain and not multiple chains that communicate via bridges. They're all operating under the same consensus mechanism, which allows us to more easily to more easily and trustlessly perform other more complicated operations, like getting NFTs from one chain to another, having a smart contract on parachain A call a smart contract on parachain B, etc. And again, just like I mentioned with the runtime upgrades, this is not some far future, cool, theoretical thing we may be able to do someday, but rather something that's happening all the time right now. I'm sorry, I actually noticed like 2 minutes before I came on stage, I have a typo here. So there's an average of over 2,000 XCM messages per day over the last month in the Polkadot ecosystem. So we have different chains that can interact with other chains that are special made for different purposes, but act as though they're all part of the same chain. So you get a lot of the benefits of like one large monolithic chain in terms of interactions, but you also get a lot of the scalability benefits of of a sharded chain or even multiple chains. The inscriptions craze came to Polkadot last year. We had about 7 million transactions per day on the relay chain, and we were hitting peaks of several thousand transactions per second, and it didn't even impact us enough that the fees got, the fees got raised. So we had actually a huge stress test for Polkadot on the relay chain and passed with flying colors. And part of that is the scalability, right? That you can take things and run them on different chains, and that we've really worked to make sure that each of these chains can handle a pretty significant number of transactions per second. All right. So once again, yes. Hopefully this wasn't a surprise to anyone that I said yes and not no or maybe. Polkadot is more than just a chain because it is totally controlled by the community. Polkadot's governance process, which is controlled only by dot holders. So there is no special sudo super user. There is no multi-sig that the developers have. There is no special account that people from Web3 Foundation can do or interact with the chain in any special way. Any change to the Polkadot network, from a small parameter change, like what's the ideal staking rate, to changing the runtime code of the relay chain, is all done through our OpenGov process, where one dot is one vote. And if developers want to issue an upgrade, this needs to be approved by the dot holders. And so, we have to put something on chain. If the vote passes, this is automatically enacted. There's no human intervention once the new runtime or the code change or the parameter change or whatever is placed on chain. It's all there, right? And then if the vote passes, then it is automatically enacted. You can't have a situation where people vote to upgrade the runtime and the developers are lazy or sleeping and it doesn't happen. If you vote on something, it happens. And it really is like a huge, huge example of absolutely direct democracy. At least democracy for dots and dot holders. So yes, Polkadot is more than just a blockchain. So it is the world's largest and most decentralized DAO. Right? So as part of this governance process, dot holders have control over the on-chain treasury. And the on-chain treasury is automatically built. Basically, whenever there is inflation in the Polkadot network, a portion of that is diverted to the on-chain treasury. And this can be given to people in a variety of different ways to develop projects for DOT. So we have all kinds of different things that are approved by people that vote on this right now. As of yesterday, I think there were 47 different proposals out there for different projects for DOT. So things like wallets, for Polk Assembly, which is the place where people can discuss governance proposals, for marketing proposals, for interactions with different teams, with different we want to get consulting. There's one team that wants office space in New York City for Polkadot. We have one team that wants to do Polkadot branding. And this is all controlled by the DOT holders. And currently in the Polkadot treasury, there are over 41 million DOT. That number was correct as of yesterday, about 24 hours ago, plus USDC, USDT. And we are looking at having the ability to include other tokens in this. So it's actually a very powerful spending and spending control mechanism that is powered and voted on by all DOT holders. So once again, yes, Polkadot is more than just a blockchain. The technical developers are headed by, anyone can contribute, obviously, it's open source, but we have the Polkadot Technical Fellowship, which is actually an on-chain entity, so essentially another DAO that is part of the core aspect of Polkadot, that actually using this treasury and using an ongoing automatic swap from DOT in the treasury to USDT, the members of the Polkadot Technical Fellowship are paid by the protocol itself. So I've always thought this was really cool, right? The protocol is going on, it's producing blocks. As part of this, some percentage get sent to the on-chain treasury, and some percentage of that gets sent to the developers who are building Polkadot, in a trustless way, and then they keep the network going, right? They operate, they build new features, etc. So we've really got like this sort of flywheel, or like this circular economy occurring inside of Polkadot. So yes, Polkadot is more than just a blockchain. Because Polkadot is multiple consensuses as well. So besides Polkadot, we also have what we call a canary network known as Kusama. So Kusama is not a testnet, but rather a network with real economic value that we put code out first. The tagline is expect chaos, or sometimes no promises. The benefit of using Kusama is you get to try out new features and do cool new things. But the downside is it's not always code that has been as battle tested as what's on Polkadot. So generally when a feature is added, we mess with it on the test nets. Then it goes to Kusama. We see how it operates in a real environment. If there are economic issues or problems that may be seen in the real world that are not seen on a test net, then we find this stuff out on Kusama. Kusama has done a great job of finding problems and has really helped keep the Polkadot mainnet from experiencing them because they happen first on Kusama. So Polkadot is more than just Polkadot. Polkadot is also Kusama. Yes, thank you. I don't know if that was someone listening to me or someone who just randomly said yes, but I love it anyway. So Polkadot is also the community around that is helping to build. And we would love to help you build on Polkadot and make Polkadot better. So we have a lot of different programs. So I already mentioned the on-chain treasury. Everything is done entirely on-chain. Web3 Foundation, the Swiss foundation I work at, has a grants program for people building open source projects that will be useful to Polkadot. We also have the Decentralized Futures program, which is time boxed until June. It's giving out 20 million US dollars, as well as 5 million DOT to teams that are looking to build ongoing projects in the Polkadot ecosystem. We have Decentralized Voices, which delegates voting power from a Web3 Foundation DOT stashes so that you can have more say in the voting process, even if you don't have a lot of DOT yourself. We have the 1,000 Validators program if you're interested in running validators to help secure the network. We have a lot of different educational initiatives, so including several massive open online courses on edX. We're calling this Web3X. So there's mine, Blockchain Fundamentals. We have Intro to Polkadot. We have Intro to Rust, which is being released very soon. And then we'll have Intro to Substrate. So we'll have a whole series of online courses that you can take to learn about Polkadot and how to build on it, as well as understand blockchain in general a bit better. Finally, we have the Polkadot Blockchain Academy, which is in a different area every 3 months, different part of the world. The last one was in Hong Kong, next is in Singapore. And this is 4 weeks intensive learning how to build on Substrate and build something for Polkadot. So we're not just a blockchain, we're also a community. So in closing, yes, Polkadot is more than just a blockchain. Thank you, everyone.
And we're back. Okay, so today we are going to talk about this next panel. It's going to discuss the future use cases of Web3. So I'm here to introduce Greg Hemmer from Shardium, Dmitry Zhelezov from Subsquid, and Joanna Ling from JSquare. So take it away.
Sure. Thank you and hello everybody. Thank you for joining our panel today. Before we officially start, I will let our panelists make a brief introduction about themselves. So let's start from Greg.
Awesome. Hello, everyone. Thank you for being here. My name is Greg Hemmer. I work at a project called Shardium. My title is Head of Fundraising and Ecosystem. Shardium is an EVM-based layer 1, which scales horizontally. Its transaction capacity is relative to the number of validators in the network. So each validator you add to the network increases the amount of transactions it can process per second. We aim to enable no-fee markets. So the transaction price will be the same forever, no matter how many transactions there are. We've raised $26 million in pre-Series A funding, backed by JSquare, Jane Street, Arrington Capital, and many others. Our mainnet is planned to launch at the end of Q2, and we're co-founded by Nishal Shetty, who's the founder and CEO of the largest centralized exchange in India. Our community is very fast-growing in India. And our mission is to onboard users in emerging markets like India and Nigeria and bring them on chain to make decentralization accessible to everyone. Thanks so much for being here.
Hello, hello. I'm Dmitry. I'm a co-founder and CEO of Subsquid. Thanks a lot for inviting to the panel. So at Subsquid, we are building a decentralized query engine and a data lake that allows you to handle terabytes and petabytes of data. Currently, we're focused on-chain data, in particular focusing on indexing products that allow us to deliver decentralized and permissionless indexing that is up to 100 times faster than the existing indexing solutions. And the secret sauce is the data lake that allows you to query and extract on-chain data a lot faster and more efficient compared to traditional RPC thing. So in particular, we can scan the Ethereum blockchain in just a few seconds, and you can extract all the information that you really need. With the RPC, that would require you to go through each block and probably would take like hours, if not days. We are currently cover most EVM chains and L2s in the ecosystem, also Substrate chains. And in Q1, we also will support Solana, which is hundreds of gigabytes of data and hundreds of terabytes of data. So that proves the scalability of our data lake, which basically grows with the number of nodes in our network.
Yeah, hello everybody. I'm the moderator today. I'm Joanna Liang, the CEO and co-founder of JSquare. I came into this space and have been doing investment for over 7 years so far. And I co-founded JSquare Group together with James in early 2021. And so far, we've been managing an AUM of over $150 million in total. And since the money all came from myself and James, so the investment strategy is pretty flexible. So far, we have invested around 70 projects in total, and it's very coincident and lucky that both of the Shardium and Subsquid are our portfolio companies. Besides, we also invested in companies like CoinList, Renda, and the recent very popular NFT project, Pudgy Penguins, and decentralized compute network, Jensen, and so on and so forth. And so thank you guys for the introduction. And so my first question comes to Greg. So we know that scalability, interoperability has always been the main problems that await to be solved in space. And what's your view of the myriads of L1s, L1s, L2s projects in space? And what's the future structure and landscape look like?
Great question, Joanna. This ecosystem is evolving so fast. The only way to keep up is to spend a majority of your time throughout the day on Twitter to see all the new products launching and what they're building. My wife often gets frustrated with me sometimes when she asks me to hang out with her and I say I'm busy working, and then she comes in my office and sees them on Twitter. But she doesn't realize that I'm researching all the new projects in this space that are launching every day. There are many new blockchains launching. I think when you look at the space today, you can divide it into monolithic networks and modular networks. On the monolithic side, you have networks like Ethereum and Solana and a few other chains. And on the modular side, you look at networks that are optimizing for one specific function of a blockchain, such as data availability or execution. For example, layer 2s focus on increasing the speed of execution by executing transactions off-chain. But the biggest challenge that remains in the Web3 ecosystem today is how to increase the speed of transaction execution at layer 1. I think the modular networks are a result of not being able to scale at layer 1 and optimizing different functions across different networks. We really need to be able to figure out a way to scale decentralization at layer 1, and that's what Shardium is focused on. So you have these new networks launching these days, which focus on parallelization, but there are many different ways to parallelize transaction processing. And often you'll hear parallel EVM as a new buzzword, but the way they're parallelizing the transaction processing is by parallelizing transactions across the different cores of the validators in a network. Every validator still verifies every transaction, but they increase the amount of cores of each validator and process transactions in parallel across those cores, which results in vertical scaling, ultimately leading to more centralization. So the biggest challenge that needs to be solved is when blockchains become congested, how do they continue to scale? Most networks today don't have an answer to that problem. They rely on Moore's law and hardware requirements becoming more performant every 2 years, or just ultimately increasing the hardware requirements of the nodes in the network, which is not what Web3 is here for. We're here for the decentralization, and so we need to optimize systems to become more scalable as they become more decentralized. That's what we are building at Shardium. Shardium is the first layer 1 where each validator in the network processes transactions in parallel while ensuring that every account has a redundancy of 128 validators. So Shardium's positioning in the ecosystem landscape today is layer 1 optimized for horizontal scaling. But there's a lot of other great products out there, and I think most people don't realize that every blockchain has its own product market fit based on the design choices it makes and the trade-offs it makes. I think layer 2s are really great for app-specific customized networks, such as gaming, or in systems that don't require a lot of censorship resistance. The modular ecosystem is pretty exciting as well. However, there could be some trust assumptions with more centralized data availability networks. And even other networks that are specifically focused on things like execution at layer 1, but less focused on decentralization may be good for like an on-chain order book, but not a global general purpose smart contract platform. Ethereum, when it launched, didn't know that it was going to be the settlement layer, and it has fallen into place as the settlement layer. Solana has become a place for DePIN, and Bitcoin has become a store of value. We're going to continue to see more networks fall into their product market fit based on the design choices of the network.
Yeah, thanks, Greg. So Dima, we just mentioned about the scalability issues that are ways to be solved. And so from your perspective, how does the current solving of scalability changes the data, the infra data landscape?
Yeah, so first of all, Greg mentioned that there are different ways to scale, right? So roughly speaking, there are chains who try to build beefier and more performant nodes like Solana and increase TPS. And another direction is where we have a lot of rollups and L2s. So basically, we scale the number of chains, and like right now, we can have hundreds of L2s and rollups. And at the end of the day, each of those chains produce information because each of those contribute to the total number of TPS if you count it across the networks. At the end of the day, each user has its presence and the footprint across all these networks, like Solana, Arbitrum, Shardium, whatever. And in order to get any kind of grip of this data, you really need to have a separate place where you can analyze the historical transactions, where you can extract the historical data, join it across multiple chains. And in particular, for example, if you're building a multi-chain DEX, you would be needing to show transaction history across all the chains in the network. So at the end of the day, we really need a place to put this data in such a way that you can query it efficiently. And the more transactions are produced across on the chain, the more data eventually it becomes, right? So right now we currently have hundreds of terabytes, and we produce probably like tens of terabytes every month. And obviously this requires a dedicated solution so that everything that we've been using before was really meant to be used only for like relatively small data sets that, for example, were produced by Ethereum, which is just like 15 TPS. And this is exactly where we see the future. So instead of relying on the existing solutions like RPCs or Postgres databases, for example, we designed a horizontally scalable data lake that grows with the number of nodes. And it allows you to put pretty much everything that we produce across all this zoo of these chains into a single place and extract only information relevant for the developers. Because out of this ocean of data, normally you would need only like a very tiny piece, but it is very hard to sieve it through like all the millions of blocks of the history. And this is exactly the key purpose of the data lake as we have it right now in Substrate. And in the future, we see that even more data will be produced through off-chain stuff. For example, even right now, Farcaster doesn't store everything on-chain, but instead they have like a hybrid thing where some information is stored off-chain, some on-chain, and in order to get any understanding of this data, you would rather have this into a single database. And again, for that, we have a performant data lake from where you can have efficient queries, you can build indexers on top of it, you can build interesting applications, and this is exactly the missing infrastructure piece that is often overlooked when people are concentrated only on the scalability of the execution and consensus layer.
Yeah, thanks. So a quick question for Greg. And I see that Shardium has already built a large ecosystem and community. And so what's your view of the the community and ecosystem in terms of different territory and geography?
Yeah, it's really interesting how differently crypto is viewed and used in different countries around the world. But first, I wanted to say it sounds like J-Square has found alpha in horizontal scaling. You have a horizontal scaling L1 and a horizontal scaling data infrastructure. So looks like horizontal scaling is an important place in the market. You know, decentralization in Web3 is such an exciting industry to be in. This industry is here for decentralization and the vision of building open permissionless systems where you and I can interact with each other on different networks around the world without having any middleman control or have ownership of our interactions and data. The vision of this industry is decentralization, and there's a real problem that Web3 can solve today in different countries around the world. Many of us here in the US don't realize it because most of us are focused on buying Bitcoin and Ethereum and other tokens, and holding them for profit. But in countries like Nigeria, where they're facing 26% annual inflation, there's a real opportunity to solve problems for them. The sad truth is most of these users in emerging markets aren't on-chain. They're using centralized exchanges for cross-border remittances and custodying their crypto. There's a massive opportunity to build blockchains that can bring users in emerging countries on-chain and give them the power of decentralization. But the issue today is that they view on-chain as expensive. Centralization today is cheap and on-chain is expensive, and we need to solve that problem. That's Shardium's mission, is to enable decentralization for everyone by keeping transaction fees low no matter how many transactions there are with auto-scaling. Another interesting trend in an emerging country is India. Our co-founder built the largest centralized exchange in India. If you've read news about the India ecosystem at all recently, you may be familiar with the TDS tax, which says that anytime you transact with a counterparty, regardless of if the transaction is profitable or not, 1% of that transaction will be taxed. So any transactions on centralized exchanges or any transactions with a counterparty get taxed. So what's everyone doing? They're going on-chain because there's no counterparty on-chain. So on-chain order books are about to have a lot of growth in India. There's a lot of new teams popping up, building on-chain order books while they have this window of opportunity to bring a lot of volume on-chain. So it's really interesting to think about how narrow-focused people in the US and the West can be when today all they look at is CoinMarketCap and what's the next token to pump, while other communities in different emerging markets around the world have actual real-world use cases of Web3 today. And we're really excited to be one of the teams building a product to help advance those ecosystems. Thanks for the great question, Joanna.
Thank you. So my question for you, Dima. So the Ethereum's next big upgrade, Duncan, is coming. And we all know that it will support the layer 2 scaling through proto dunk sharding. And so can you illustrate more about dunk sharding EIP to our customers and to our, and what kind of data challenges it brings about?
Yeah, that's a really great question. So first of all, what is dunk sharding, right? And what is this buzz about? So this new upgrade introduces a new type of transaction. And this is the first time where the transactions can reference basically an external data. So the idea is that we're currently at a stage where the nodes cannot really store all the information that are needed in order to process the state transitions of the VM machine. So before this, every transaction data, all the things that were ever produced on Ethereum were stored by the network in the full archival nodes. But with the introduction of these blob transactions, basically there is a separation between the execution and the data. This is an inevitable step when you want to scale, to basically separate compute from storage and compute from the data. And that would mean that a lot more data are going to be moved around the network, but at the same time, it will be unretrievable from the network after some time. And again, it basically emphasizes how it is important to have a separate data layer in order to be able to accommodate all this basically short-lived pieces of data that are nevertheless very important to any kind of indexing or applications.
Thanks. So one last question. Since there are a lot of new concepts and the money is flooding into some new areas like crypto AI, Depend, BTC L2s, and so on. And so what are you most excited about in terms of the areas and verticals that could potentially bring mass adoption to our industry?
Yeah. In 20 seconds, I'm excited about new founders entering this space and finding problems to solve that billions of people face and verifying those problems exist and then building decentralized solutions for them. To build real-world use cases of decentralization that apply to billions of people worldwide. I do think DPIN is a very exciting category of products. A friend of mine built a Web 2 project where he hired his friends to drive all around the US, and he tracked the cell signal on their cell phone. And he discovered where all the dead spots were in the US and built cell towers there and started renting them out to the cellular networks. And that was pretty successful, but it was really hard to scale worldwide because, you know, how do you collect all this cell data worldwide? This is what DPIN can do, is, you know, help scale these decentralized infrastructure networks quickly by rewarding users with tokens and, you know, coordinating global communities. So I think we're going to see a lot more growth in DPIN, and we hope we can bring more DPIN projects to the EVM ecosystem.
Yeah, I think we are really out of time, so I could just like say socials. I am very bullish on socials, in particular on the Verbcast and Farcaster.
Need more frames.
Very more frames.
Okay, great. Thanks everybody, and thanks for your listening. And
Thanks a lot, Dimitri. Thanks for joining.
Three. Hey. 3. There it is. Wireless 3. Thank you.
Should I take it off? Oh, it's hot.
No
I
mics.
got a hot mic. Right.
Testing.
Hey. I'm just gonna take this off, and then you and I can share it. Can we take it off and we'll share it, or?
Not the best
Oh, you got
turnout.
one. You got one coming in. Great. Thank you.
Oh, I don't care. Oh, okay. You're the star of the show.
Okay.
You're the star.
Testing.
Oh, hello. Cool.
Thank you.
We turn this light off.
It's bright.
All right, well, we have made it to the last panel of the day, one that I am very excited to hear more about. So without further ado, we're going to talk about crypto, the game.
Where is everyone?
Hey guys, thank you so much for sticking around this late on a Friday as the happy hours begin. We're here going to talk about CTG, Crypto the Game. It took the internet by storm. Everybody on Twitter was talking about it. We have some of the epic players up here and the founder of the game. We're going to break it apart. So Dylan, why don't you start by just explaining the concept and how you came up with it, and yeah, we'll start there.
Yeah, so at the highest level, it's a massive crypto survivor game. So it takes a lot of elements from Survivor, from Squid Game, from Hunger Games, but the high-level idea is basically many people play, one person wins. I grew up a huge Survivor fan, apply every season, never got a call back, and really just kind of always wanted to play Survivor online with my friends. So that was kind of the impetus behind the idea. Similar to the show Survivor, everyone is randomly assigned to a tribe. You compete in different challenges every morning for immunity, and you vote each other out. Last person standing wins the pot. So 410 people joined for season 1, which is insane. So the pot was 41 ETH, and yeah, one person won over $100,000 or the equivalent.
And so we have some of the players up on stage right now, and I'm keen to hear how you found out about it. Like, how did this become such a thing? Anyone, please jump in.
Yeah, I can talk about how I found out about it. I was just on Twitter one day scrolling around, and I saw a tweet thread from Dylan talking about his experience at HQ, and he was like some story he was sharing about what he learned from HQ and all that. I was like, oh, this is cool. I liked it, and it's like at the end of it, a little advertisement like I'm working on a super secretive crypto game, and I was like, this is super
So
cool.
good.
I have no idea what it is. So I DM'd Dylan. I was like, hey, I don't know what this is, but it sounds cool. What are you working on? And he just super cool to shot back his whole message about what they're building and all this stuff. And he was like, kept following up with me like, we're launching in a week. He texted me again. He was like, come join now. And I was like, I have to. It sounds awesome.
Yeah.
Because one of the cool things about this is it just became such a, it wasn't just like a cult following. Like A16Z partners were getting involved and participating. It got, and mainstream media platforms were covering crypto the game. And Dylan, I mean, why is that? Why do you think it just caught on with?
Yeah, I mean, I think a few things. One is it's a really fun game. I think that I'm probably the least on-chain crypto founder, and Logos mentioned that I was at HQ Trivia, and I started my career in TV and kind of joined HQ for this grand vision of a live interactive TV network. And so in the same way that they took a traditional game show and made it live, mobile, and interactive, as a huge Survivor fan, I always thought that the same could have and should have been said for a live interactive Survivor style show. So I think the fact that it started as an idea first and then crypto made it that much more fun made it really stand out.
Well, and that is one question I have. So, of course, the jackpot was in ETH, and there were certain elements, like certain puzzles that were crypto related. But one critique of season 1, and maybe some of the other players want to chime in on this, was that there wasn't enough on-chain activity. We wanted more crypto integration. Did you feel that? What worked and what didn't about season 1?
Yeah, I think season 1 was always supposed to be like a V1, a beta, to test the format. I think we built it on and for crypto for a few reasons. One of which is our corner of the internet is the most ripe to spend the equivalent of a couple $100s on a novel game. But then also, like you said, I don't know, it's not something that I think could have existed with a Web 2 audience. I don't think I could have convinced
hundreds of Web2 players to spend a couple $100s on a game like this. So I think that's kind of the main reason.
Natasha, Sky, thoughts on this?
Yeah, the cool thing was the crowd was a big mix of people from like Twitter personalities to degens to DAO people to other new people. And so even though it wasn't super Web3 heavy on like the tech, the coordination is like what crypto's about. And so I've come from the DAO world. I've been doing DAO stuff for like 5 or 6 years. The DAO people that were in the game were used to this like person-to-person coordination and things. And so that was like coming into the teams, but then there'd be these other people that like have never done DAOs. Maybe they just trade shitcoins, and then you have the groups interacting in tribes, and you get this cool dynamic. And so the human coordination was like the most fun part of the game.
Yeah, I would say that the on-chain elements, like, it's fun to have them, and I would love more in season 2. But I also think there's something that was really tapped into the culture of crypto that felt really relevant, and that felt appropriate for the first season. And I would agree, so much of it was like social coordination and figuring out who you may know from this one thing and that was at this event, and that was a really powerful driver for creating alliances and like working in teams. And so yeah, more on chain would be cool, but I think there were a lot of like crypto values that were baked into the first season.
Yeah, and the goal has always been to get progressively more on chain with each season. But yeah, pretty firm believer that like we can't onboard the masses to something like this with too much being on chain out the gate. I think rough, like back of the napkin math is that like 5 to 10% of season 1 players, this was their first crypto experience. Either they saw an HQ thread and wanted to see what I was up to after HQ, or they are a Survivor fan that always wanted to play the show. And I think the second we have votes being cast on chain, having to open your wallet to confirm the vote, like I think we probably would have lost a lot of those players. So my goal has always been to like get them in with the idea, be very crypto light in the beginning, and then all of a sudden it's season 4 or 5, they don't even realize that now they have a wallet and they're doing all this stuff on chain.
So I think that one thing that would be kind of cool is to, especially for fans of the game, like to hear about the behind the scenes action. And Christian, I'm looking at you to start, because apparently you put an early target on your back after being the player to solve the IRL scavenger hunt, which was the first immunity challenge. Can you like walk me through what happened that day?
Yeah, sure. So let me move this closer. Yeah, I think I felt comfortable.
Really lean into it.
Okay, we'll lean in.
Yeah,
there we go.
Perfect. Yeah, so I think to answer the earlier question, I stumbled on Crypto the Game pretty early and worked very hard to refer a lot of people, to like and retweet everything. I think in crypto in general, being curious pays, and just making it your job to become familiar with the unfamiliar. So I leaned in heavily, and I think I felt safer in the beginning because I knew for the first 4 or 5 days that I'd have immunity. But yeah, I think if I could go back, I might play it differently, because I think it's this weird mix of you want to sort of have presence and you want people to know you and like you, but you don't want to draw attention to yourself.
Yeah, because you had like, immunity for the first 7 or 8 days? Because you were voted off on the 8th day. You had immunity for the first 7 days. You were too much of a threat.
Yeah, I think I might have been overconfident.
Too good.
I think I felt that maybe
I got a daily DM from Christian, like, I got this, I got this.
Yeah, but yeah, no, I think I felt comfortable. My wife also actually played, so I felt like I had to sort of...
She vote you off?
She didn't vote me off, but she did make it further than I did. So I felt like, we could kind of play both strategies. I could try to be very sort of front and center and try to like form alliances, and then she could sort of play more passively and go under the radar. But I was super surprised to see how it ended and how the strategy wasn't really either in both directions. I think MFL, who I teamed with throughout the game, did a good job of both being present and both building relationships, but not seeming threatening and seeming positive. So, yeah, I think I might have played it poorly in terms of being visible.
And I do want to hear more about game strategy, because on stage today we have Logos, who was runner-up of CTG. So tell me, by most accounts, you played a near perfect game. What was your strategy here?
Yeah, so I'm a huge Survivor super fan, and that's like the main reason I played this game. It was less for the crypto, more for the Survivor. And so like having watched every Survivor season, coming into this, I was like, I'm gonna play like the textbook Survivor winner game. Like come in, be super helpful to your tribe, like, contribute as much as you can. Don't like make all the big decisions, be a little bit behind the scenes and coordinating the alliances. and then like, you know, towards the end, start to peak, kind of come out of your shell, get a few big moves, make a name for yourself, then try to do some big, like pivotal, like win the final immunity, go in and use that to be the last big player standing. It's kind of my strategy. And so I try to kind of play that while still being true to myself. Like I'm not a backstabber. I don't want to blindside anyone. I want to have a good time. And, you know, I just had fun meeting everyone too. So I was like, I'm going to be super nice and try that strategy out. And it got me to the end for sure. I think what was cool about it was like, you know, from a survivor perspective, like I think I played like a really good survivor type game. I think Crypto the game kind of took on its own form. That was what's super cool about it. It wasn't just a survivor ripoff in crypto. It kind of morphed into this own thing, and that's like what MFL winning really proved. Like it kind of has its own culture, this own identity that's very inherently crypto, which is super cool. So like kind of going from that survivor perspective and then kind of leaving with that crypto perspective, it's like super. And I am a crypto guy, like I will say, but like seeing how that transformed and morphed throughout it was super cool, and it kind of took on its own identity, Crypto the game. And I think the more we play going into more seasons, we'll see that strategy really changes, and there'll be this own Crypto the game meta, Crypto the game strategies that will very much differ from anything we've seen before.
How many different tribes were there? And were any of you on the same tribe? Yeah.
Green tribe.
Us and I so you actually changed tribes. There was a shuffle event during the game. So everybody, I think, had 2 tribes and then sort of independent play towards the end. But Sky and I were on green in the second sort of reshuffle phase.
I mean, were you guys allies?
Yeah, I don't think...
They both made the finals, so yeah.
Yeah, it's hard to know.
I don't get... Sorry, how did that work? So how did you... It's all... Are you DMing people on Twitter? Like, how do you establish alliances within the tribe when you're, like, at opposite ends of the planet?
Basically, hundreds of small new Telegram groups. So, like, people probably added 100 Telegram groups over 10 days, and every single one is in different people, and there's sub-Telegram groups with other people, or Discord, or Telegram, or Twitter groups. And there was a chat within the game, but I don't think many people were doing the chat in there.
No one used our chat.
I mean, were there leaks? Like, did you have like a sub-alliance and then screenshots from that Telegram group going to another group to try to like...
Sure.
Totally.
Oh my God. That's stressful.
Yes, a lot of psyops. I mean, that was the hardest part for me as like, Ty, who's here, we built this as Survivor fans and like the game that we always wanted to play, and then like we weren't allowed to play and form alliances. So I don't know. I genuinely had zero visibility into any of the telegrams. I didn't see the spreadsheets. I didn't see the, everything that kind of took place behind the scenes. So it was way more dramatic than I think I ever expected.
So Natasha is co-founder of Boys Club, like huge presence in the space, very cool.
That's so nice, thanks.
Talk us through like your approach to all of this.
Oh my gosh, I had so much fun. First of all, great job, guys. And my approach was, I was really excited about it because I'm a huge Survivor fan as well, and was excited to just have like a crypto application that I could be playing with. And then I sort of thought like, oh, I'll like sign up and then whatever. And then I signed up and I was like, oh, I am in it to win it. I am going to win this, and got so into it and was so serious about it. And I got into like a side chat right away. Similar to you, as a Survivor watcher, you know that you don't want to be like number 1 Christian. That's an amateur move.
Too big of a target.
Rookie move.
So I tried to lay low as much as possible, and then I was like really gunning for, okay, I'm not gonna win. I knew I wasn't gonna win any of like the really hard puzzles at the end. I was just like, it's just not gonna happen. I know my skill set and it's not it. And so I was like, I'm holding social capital to the very end. And I had a whole plan, and then very last minute got voted off. Like there was a night 8 was sort of a bloodbath. I think like 70 players got voted off. Yeah. And I was like, I'm good. I was like out to dinner. I was like on a girls' trip the whole time, and they were all so invested. They're like, how are the votes? What's going on? Like everybody was in it with me. And then I was like in the car, and I was like, I'm safe. And then I got voted off, and I was like, fuck. I was like, no. And they were like, no. Everybody in the car was so devastated. So anyway, I think there's a balance between like knowing when to use your social capital, and also like so much of what kept me in the game was relationships that I already had, where I was like, oh, we're in these chats already, and they were looking out for me and things like that.
And a quick follow-up question. So like one of Survivor's tried and true strategies is the all-female alliance. Was this something that you leaned into?
This was real, and it was happening, and you blew up our spot. I was like, because a lot of people who were playing weren't Survivor watchers. Right. So there was a lot of like I mean, maybe half. I don't know. But based on some of the conversations, I was like, these people don't know what they're doing here. But the female alliance happened very quickly, and then we were adding people to it, and it was really strong up until really till the end. There was one player who made it to the final in the female alliance, and she got a few votes, but there was a few people where we were like, I'll never vote. Everybody was like, I'm never voting for you, and it was pretty active chat. It was really fun. It was a nice like side.
I definitely didn't mean to blow up your spot. I saw a tweet one day from a female player was like, where are all the other like women at? And I tagged them all in the reply, and I was like, you guys should form an alliance.
What were you thinking?
I don't know. I was just trying to make it
I got so many DMs that were like, wait, is there a female alliance? And I was like, no. I was like, I don't want to lie.
Sky, you were a finalist, and you took the approach of, the public good approach to garnering votes in the finale. Walk us through your strategy on that final day.
So the game was amazing, and I don't really watch TV, so I actually reached out to Survivor contestants and got advice from them. But
like actual people that were on the
like 8 different ones. They're on my Twitter.
What did you say? What did you blind message them?
I didn't know that.
They all wanted to know more about the game.
No way.
Yeah. But so for me this game gets this idea of this game gets way more interested attention if there's like a really amazing win outcome at the end. And most people just wanted one person to win everything and take the money, whatever. My only chance was probably I wanted it to, I tried to get the money to go to public goods, and I had to use some type of bribe. And so what I wanted to do was bring people into this DAO called Public Nouns, where all the money would go, and then we would all get to decide how to give that money out together. So it wouldn't be all 400 players, but it was gonna be like all the finalists plus 40 others. And so I know, everyone could have bribed each other, but no one really wanted to split the money, whatever. But that was the idea of trying to get the first place, I guess, yeah.
Christian, how do you feel about pot splitters?
So I'll preface this by saying I teamed with Sky, so nothing against Sky, but I think what I was impressed with the most about Crypto the Game is that that Dylan took the approach and the team with Brian and Tyler of making a game that was enjoyable where one player would win out of 400. So I think they did a good job of not allowing crypto to ruin Crypto the Game. And I thought that the mechanics of splitting the pot, of sort of incorporating crypto in a way that wasn't true to the core mission of Crypto the Game, which is many will play, one will win, was sort of against I think the heart of it. And not to say that crypto technology isn't incredible and there's opportunities, but I thought that it would be a shame if sort of the story of MFL, who I teamed with throughout the game, was the story of one player against the odds, sort of winning over $100,000. I feel like splitting the pot would ruin that. And I think Logos and I sort of connected over that. I think I admired the way he played. I think him in MFL had that authenticity of really just being public and authentic in their gameplay. And I wanted one of them, if it wasn't me, to take it home.
I'd love for you guys to ask each other questions, because you were in the trenches together, and there will be certain experiences where you're like, how did you solve that puzzle, or how did you do XYZ thing? And I'd just be so keen to hear what questions you guys have for one another about the experience.
I have questions. I would love to hear from you how you solved the crypto puzzle for individual immunity, because that was specifically designed to take the entire 7 hours, and Logo solved it, I think, in 90 minutes. And then I would love to hear from you how you solved the first IRL scavenger hunt, and if there's a backstory there, because those were two intentionally difficult challenges that were solved very quickly by you guys.
Yeah, so I've been in crypto, for a while. I bought Bitcoin in 2014. I'd play a Minecraft server to get Bitcoin. So I've always been kind of a crypto consumer, and I'm a founder of a company in the space now, but I've never really been much into the on-chain, the data and these puzzles. So we had this final immunity challenge. This was on the last day, and this was if you could solve this and get final immunity, then you make it to the finale. And I was as a Survivor fan, this was what I need to do to my final resume builder. I need to solve this, else there's no shot I'm surviving to the finale. And I was going an hour of sleep, and I was in meetings all day. And so by the time I got out of the meetings, I was I'm sure it's gonna be over. It's gonna be, I think I drove 80 miles per hour on my way home from the meeting, so I don't recommend it. And
wait, sidebar question: were all of you still working your full-time jobs and just squeezing this in when you could?
Yeah, anytime my team was like texting me throughout the day and they'd be like, "Where are you?" I'm like, "Working. I'm working. Like, I have a job." And so yeah, there was a lot of that where there was a few people where I was like, "It's time to find a more challenging role because you're on this a lot."
Yeah.
Okay, sorry to interrupt. Keep going. Keep
No,
going.
yeah. So I run a startup, and we're a smaller team, but I would do all my work at night. So I would play the game during the day, then at night I would just stay up all night getting caught up on work. So I was like averaging 2 hours a night. And there was one point I was in Dallas, Texas, for some meetings. Like I'm from North Carolina, so all the way in Dallas. And I was like playing Flappy Bird in the bathroom in between the meetings. I didn't want to let these guys know what I was doing. Because I was like, I was in the bathroom on my laptop, like playing Flappy Bird, trying to get the score. And then I had a tribe mate on my tribe who ended up giving me a ride to the airport so we could talk strategy.
Yeah, he's
and
right
that's
here.
my tribe mate right there.
Ah,
So
yes!
quick shout out to
With
Josh. That's
a
my tribe mate.
custom Crypto the Game hat.
I feel like you should stand up and model for the crowd.
Yeah, look at this. Look at this. This is
That's fantastic.
best tribe mate in Crypto the Game right here. He gave me a ride. It's like and it wasn't like he was like right next to the airport. This was like an hour and a half round trip he gave me to the airport, and with his son in the car, we were talking strategy and all that. So he's rocking that's our OG White Tribe merch he's got right there.
I think this is like the most surprising thing to me is I always expected in like a game where you inherently have to like eliminate each other to win a lot of money, you would make a lot of enemies and it'd be very ruthless. But like I've seen genuine friendships today alone of like tribe mates for life and meeting IRL, and you guys met during the game IRL, and it was very wholesome.
Because you guys knew each other before. You were DMing him about it, but did all of you guys know each other, or did the game bring you together?
I only knew Dylan because I saw a tweet that just popped up in my thread, so I just DM'd him. That's all. That was my only.
I was just nervous
with
that no one
Dylan.
was going to play. So once someone saw it, I just responded. Like we hadn't launched yet, so I just wanted to be a responsive founder.
Was it Blau who you went to high school with? And so Blau's like, I went to high school with the founder of the game. No, there's no way I can win this game.
Yeah. So Blau and I went to grew up together. Really good friends. In 7th grade, he moved across the country. We both grew up on Long Island in New York, and completely lost touch. He's become a successful musician and founder, and I followed along, but had no way of reaching out to him. All of a sudden, 20 years later, I get a ping that he signs up for Crypto the Game, and I'm like, I messaged him, and I was like, hey, I built this, and he was like, oh my God, Dylan, and so we grew up together, but completely lost touch, and then reunited on Crypto Twitter when he signed up for the game.
I think we have a hanging question for Christian about how he solved.
Yeah, the scavenger hunt.
Yeah, for sure. So all of the challenges are team challenges, at least, or I guess in this case, all of them were. And yeah, I think I had the advantage of living in New York City. I think it was the most controversial challenge because players felt like if they didn't live there, they couldn't win. But I think we were just fortunate. We put the clues together very quickly when we saw that.
And quick sidebar. So the reason that you're saying that is because one of the scavenger hunts involved going to a bookstore in Williamsburg to go into Chris Dixon's book to pick up one of the clues, right?
I can give the backstory behind that as well, but
yeah. If you want to provide the backstory, I can recap the experience of
yeah. So we were supposed to launch with Pac-Man as the first challenge, and Ty and Brian basically asked for more time to build Pac-Man, and we were just building everything as we went for season 1. So the night before the scavenger hunt challenge, we were just like, what is the easiest thing we can do from a product and engineering standpoint to slot in a challenge, because we can't not launch with a challenge tomorrow. Everyone bought in, and so a clue and a text box was very easy to build, and so we just came up with the idea for an IRL scavenger hunt, and there was a bit of pushback that you had to be in New York to win, but the bookstore that it was hidden in was on board with it, and if you called them with every clue up until that point, they were on board to give you the answer over the phone.
Oh, really?
So, yeah.
Oh, that's so cool.
Yeah.
McNally's
Yeah,
so cool. Oh, my God.
Yeah, so it was definitely never want to do any challenge that is unwinnable.
Okay, Christian, back to you.
Yeah.
I interrupted your
We
story.
keep cutting you off.
Yeah, sure. So I think the clues were crypto capital, tote bag, Midas, and so it was pretty clear, especially because Read Write Own It just came out, that there was references to Chris Dixon. I actually thought that crypto capital was another reference to Chris Dixon, but then the tote bag, once we stumbled on McNally, I think in 30 minutes we called the Soho store, and then I happened to live near the one in Williamsburg. So I decided just to swing by, thinking how cool would it be if the team members were in the store. Yeah, and it felt like sort of a Willy Wonka, Charlie Bucket golden ticket moment, sort of walking in there. And I think my heart skipped a beat seeing like the Crypto the Game logo, and then sending that over to their teammates. But yeah, I think a lot of those sort of scavenger hunt challenges, like a lot of it is sort of just being lucky in terms of going down the right rabbit trail, because I think we went through like 1 million New Yorker articles thinking it was like a New Yorker tote. So it's a lot of it is just being in the right place, and then also obviously the team effort going down the right trails.
Oh yeah. Sky.
Can I add that they solved immunity challenges and they kept them for themselves? I solved an immunity challenge the day before the immunity challenge and gave it to the world for free.
That was very kind of you, Sky. Okay, so but ultimately, the person who won was in Japan and didn't speak English. What happened?
Allegedly.
Yeah.
It might be a VC.
Yeah, no, I'm just kidding. His name's MFL. He lives in rural West Japan, from what he's told me and a few others. He doesn't speak a word of English. Played the game completely overnight, every night, and honestly, I think just like won over the hearts of all of his tribe mates. And you guys can probably speak to it better than I can, but he sent poems every morning that he wrote using Google Translate. And I don't know if he's a poet or if what he wrote sounded poetic because of Google Translate, but he kind of became this like beloved poet in his tribe, and he also made very wholesome memes. And I think he was he just like had no enemies, so never received any votes cast against him throughout the course of the entire season, and then basically was like so beloved by his tribe mates that he garnered all of their votes on the finale to win.
Okay, so we have just a couple of minutes left. Why don't we talk about season 2? You've got a trailer that you want to show.
Yeah, let's play the trailer.
Let's tell people what they can expect from the next season. Okay, and as you're setting up the trailer, why don't you kind of share with people? And I'm going to hand you my mic. What's changing fundamentally about gameplay?
Yeah. So let's see if this plays. I'll tweet the trailer.
Okay, he's going to tweet the trailer, but just tee us up. What's changing? Is it more going to be on-chain, more crypto integrations?
All the above. So I think similar to Survivor, that kind of like high-level idea that everyone buys in, votes people out, one person wins will always stay the same, but each season will have its own unique twist. So we're calling Season 2 Anon Island, and everyone will mint an NFT, which will be your slot in the game. And then when you get voted off, that NFT will, through the metadata, will kind of like switch from a player NFT to a jury NFT. So similar to like hedging a parlay, players could hypothetically like sell their NFT for more than they bought in for as they get closer to the pot. And I think it will create this very interesting dynamic of slots for the game, jury slots. You can play either as yourself or fully anonymously. If you sell your NFT, someone can come back in and then be anonymous or themselves. So it just adds like additional layers of complexity through this like NFT mechanic.
When does it when do people start buying in? When does it start?
Yeah, I mean, it's a great question. So at HQ Trivia, I think one of the reasons for our downfall was like the redundancy of the format. So we had the same show at the same time every night, and people just kind of got sick of it. I think, but I'm also a realist, and I know that consumer crypto. Cool, I'll play this in a second. But like the attention span of consumer crypto is really short. But the TLDR is like within the next month or so, the mint will be open.
Cool. Okay, I'm gonna play this. Oh, it's a.
This is classic crypto. That tech's not working. There's
Okay,
supposed to be sound.
There's no sound. A lot of text. Are there any videos? Like.
It's so much better with the sound.
Yeah, there's a lot of text on screen right now. Okay, all right, we're done watching this for now. Sit back down. Okay, are you guys all playing again? And what are you excited about in terms of like the next season? And I can't get over, Sky, like the fact that you reached out to Survivor. Like,
yeah, I need to hear more about this.
Who did you reach out to?
Yeah,
I want to hear.
So
Who did you reach
epic.
out to?
They're on my
These are like my idols, man.
Some of the
like,
OGs, and then the guy won China.
Yeah, I saw Todd.
Survivor China.
I don't know how I missed these in the moment, but
They're
Todd.
on my Twitter.
these are my heroes, man. Like, come
Did
on.
you reach out to Boston Rob? Boston Rob's my favorite.
I want to hear.
I don't really know who any of them are. Yeah.
Okay.
By a show of hands, who's going to play season 2? Sky, where's your hand?
Sky.
Are you kidding me?
Well, I like the financial element. So if I can come in and out, I don't think I can spend another like that many hours.
Yeah, I hear that.
Yeah, that's.
I think so.
I have a question. Yeah, Natasha, what's your gameplay strategy going to be season 2 versus season 1?
Okay, well, we are doing a podcast after the show.
Yes.
In the style of Andy Cohen, which nobody in this audience will get that reference, but a Bravo style after the show every night for 10 days. So I think I'm going to get voted off pretty quick, but it's for the love of the game. So my strategy is just going to be play hard, play the opposite of how I played last time, and just go all out from the beginning. I'm here to win. If you want to win with me, come along, and then we'll turn on each other at the very end. That's the only way, I think, at this point.
I don't think anyone here can win the game. That's one of the issues.
So one thing I'll say is that we recently airdropped like Season 1 NFTs to all the Season 1 players, and they'll all have early access to mint for Season 2. So I don't know if it'll sell out, but this uniquely went viral kind of like after entries locked. So I think there is a decent amount of FOMO for Season 2. So hypothetically,
that's
you could mint your NFT, early access, entries sell out, and then flip it.
I really like having slots playing the game that you can move around. That's a super cool idea.
Sweet.
One thing I want to say about the crypto component of it that I think a lot of people who are so deep in crypto forget is, so the way that you accessed your profile is you signed in with your wallet. And so we're all used to that. We do that behavior all the time. But when you're in these challenges where you're really bad at some of the things, like Floppy Bird, my co-founder Dina, we were doing an offsite, got absolutely nothing done, but we were playing crypto the game all day, and she was so bad at Floppy the Bird. Like, data came out later where she played the most and got the worst score, like horrible at it. And she was like hopping on calls with these guys on her team who were like, come on, like we're gonna vote you out. And she was like, I'll do anything. And then she was like, I know it's like horrible psyops, but like, what if I gave you my keys and one of you played? And they were all like, what? And she was like, never mind. But like, that is like uniquely crypto where like you can't give someone your password and like be like, oh, I'll just give you like, even if you have 2-factor on, like there's not a mechanism that you can sort of cheat in that way. You could spin up a new wallet and whatever, but like people are so precious about their private keys, as they should be. And so I think that is like something that people forget when they're like, I wish there was more on chain. I'm like, this game could not have existed in the way that it did, and the type of interaction that you had with having to be like, quote unquote, honest about your play. And so that's one thing that I just wanted to include.
Also, the cool thing with the NFT as the player, you can actually have a team of 100 people sending the NFT around, all playing as a team behind a one NFT, right?
I guess, yeah.
Like you're really good at Flappy Bird, send you the NFT, you send it, then you do it, you send it back.
Yeah, sure. I mean, you would have to trust, I guess, that they would send it back to you. But something that I think we probably didn't do a good job of with Season 1 was like embracing these sort of like mechanics or strategies that are very like native to the spirit of crypto. Like someone's tried signing up for Season 1 with a couple hundred bots and wearing my like Web2 HQ hat, like bots are bad and let's eliminate all of them. But we got a decent amount of pushback there that like, oh no, bots versus humans like could be really fun and like can only happen in crypto. So like, let's bring it on for Season 2.
Well, I have a question also about like scaling the audience, and like you made this point early on that like you didn't want to have too many barriers to entry, so you know, like made it pretty accessible for people who don't necessarily feel comfortable in the Web3 space yet. What's the goal here? To get as many people onboarded as possible? Just like have a really eclectic, wide group?
Not necessarily. I think you know, we probably could like cash out, open the floodgates, uncap Season 2, but I think that would be a really bad player experience to have tens of thousands of people playing and thousands of people on your tribe, and you're just randomly picking people. So we're definitely going to cap it. You know, not the exact amount for Season 1, but like definitely not going to open it up to everyone. I think the way that this scales is similar to like a FanDuel or a DraftKings model, where like people and communities have the ability to like spin up their own versions of the game. You can do a whale-only game with a very high buy-in. You could do a free-to-play game that's fully funded and sponsored by a brand. There's different games happening all the time.
Yeah.
But for now, it's just these kind of like seasonal spectacle seasons with like a capped number of players.
Logos, what are your thoughts on Season 2?
I mean, I'm all here for it. I know the first thing I'm doing Season 2, if I make it to the finale again, I'm calling Natasha to have better marketing help for myself. That's my first. I'm locked in on that to, you know, better market myself for jury management. But on a real talk, I'm like super grateful to these guys for making such an awesome game. Like, it was a great time, and You know, I've made so many friends. Like Nick right here, we were day one tri-mates. Josh, we were day one tri-mates. And like,
Nice.
I know I want to be like friends with them for a while, you know. And there's things that happened in the game. Like I never thought like the final immunity challenge. Like I never would have thought I could solve these crypto riddles. Like just kind of all clicked in the right way at the right time. And like, you know, I just had a great time and a great experience. So there's no shot I'm passing up season 2. It's gonna get even better. And I gotta win. This is my like revenge arc, you know?
Yeah.
I gotta win now. So
And maybe we'll do like an all-star season.
that would be great. That would be great.
I do have a question. Is there going to be a referral immunity component?
For sure.
Okay, great.
Yeah. And for those of you that don't know, so one of the main things we took from HQ was at HQ you could refer people and get an extra life. For the reason that this I think went so viral in the beginning was players were incentivized to refer others to the game for individual immunity. So that viral loop I think will always be here.
Nice.
Okay, who wants to give me a final word here? We've got 10 seconds left.
I'd like to pitch in on something that Dylan said. I think if you run a massive, whether it's an NFT or Web3 community or otherwise, and you want to do something for people who are holding and engaging your community, I don't think there's a better way to sort of foster community than running something like Crypto the Game. So I think I tweeted about this, but if you run a collection and you run it, there's no way that I'm going to not do everything in my power to sort of be a part of your community. And I think there's a lot of other people that feel the same way. So I just want to gas them up a little bit and say that, you know, I think it's an excellent idea, and I'm hoping that communities I'm a part of run their game in the future.
Thank you so much to everyone who's here right now and a part of this conversation, to the panelists and to ETH Denver for putting this on. Such a pleasure talking about Crypto the Game.
Thank you. I'll have to tweet the trailer.
Thank you so much. That's it for the choral stage for today, but we will be back tomorrow. Everyone have a great night. And one more time again for Crypto the Game.